they've been ahead of the game, at least chronologically, and they do have good relations over there. You know, Bill Ford himself gets involved with the relation with talks, and that's always helped relations. And this is me talking, but I've always had the sense that with family control and ownership, it has less of a Wall Street millionaire, billionaire sort of feel to the company, and that's a little less offensive to the union.
With respect to Stellantis, I believe that I understand from our reporting that they are farthest apart with the UAW at this point.
They are. They haven't made a counteroffer yet. They're going to make one tomorrow. GM is making one this morning, and also, you know, they've got this plant in Belvidere, Illinois, that they haven't done anything with. It doesn't have a new product to build and could be closed. The union is furious about that. You know, in this time of prosperity with, you know, great profits for everybody, they're talking about closing a plant. And Carlos Tavares, the CEO of Stellantis, he's a very tough cost cutter. The guy's not into cars that don't make a lot of money, and you know, they've just got they've got issues with him. When we interviewed Sean Fain, he kind of referred to him as a devil. So there's real tension there. Whereas, you know, with GM and Ford, there's kind of less animosity, but they still do want to pressure both of them for a really good deal.
I see that kind of tension on the Dodge forums as well. You know, I lurk on these on the customer forums, and people are angry. They don't have any products slated for real, right? They have released a concept electric Dodge Challenger, but no one believes it's going to really look like that. Why don't they put out some? Chrysler only has one product, right? They only have the Pacifica. Do they have anything else?
I mean, as far as electric vehicles?
No, as far as vehicles. What can you buy from Chrysler?
Oh, whole Jeep lineup, the Ram pickup truck.
Yes. No, Jeep has a significant lineup, but Chrysler seems to have not many products, and Dodge.
Oh, you mean the Chrysler and Dodge brands?
And yeah, Dodge brands products are coming to an end. A lot of them next year as well, or this year.
Those have been melting down for some time. In fact, I think Chrysler and Dodge, they basically sell sedans and sports cars, and they may not exist if they didn't have the police fleet business that kind of anchors that to a degree. You know, those are, you know, a shadow of what they once were. I mean, all that's really left of the old Chrysler for the most part. I mean, there were some vehicles there, but it's really Jeep and Ram, and those are huge money makers for Stellantis as a global company.
Yeah, and the pricing is amazing. I mean, I'm looking at Jeep Grand Wagoneers online, and I put them together on the configurator and get over $100,000 for a Jeep. It drives me crazy. So do Dodge and Chrysler, you think, David, even survive the electric era?
Well, they say they're coming out with an EV for, I think it's the Challenger, electric sports car. Look, I think they could. You know, they have, like with the Hellcat and you know, Charger, Challenger, there's a pretty decent loyal following there. And, you know, one thing, and this remains to be seen, when you look at, so GM's furthest along with a dedicated electric vehicle platform. And what GM says about this is, you know, the EV battery platform is like a Lego set. And you can make everything from the Chevy Bolt out of that Ultium platform on up to the Hummer. So if you can really get that kind of scale, because your platform is essentially, you know, a bunch of battery modules strung together in different shapes and sizes, it might give companies the ability to make more vehicles that
David, I got to wrap you, unfortunately, there. David Welch, Detroit Bureau Chief. This is Bloomberg. Let's get over to Lisa Mateo right now for company news. Lisa, what do you got?
Thanks, Matt. Shares of Apple, they are falling right now. They're down nearly 3%. And this after news that China plans to extend restrictions on the use of iPhones. Bloomberg's Ed Ludlow reports.
What we are reporting at Bloomberg is an extension of what the Wall Street Journal reported 24 hours ago. They had said, citing anonymous sources, that some central government agencies had told staff to leave their iPhones at home and other foreign handsets. Our understanding from Bloomberg sources is that there is a consideration this is extended to a broader range of government agencies, but also state-backed enterprises as well.
Now, that iPhone ban is also weighing on some of Apple's suppliers. Bloomberg's Abigail Doolittle explains.
These, of course, are the chip companies that make the chips that go into the iPhones. So you can see how it would be a distress for some of these companies, especially those that gain more revenue from Apple. For Skyworks, 58% of their revenues comes from Apple. Qualcomm, 23%. Micron, 6%. And then Cirrus Logic, 83%.
All right, so let's check in with some of these suppliers right now. Shares of Skyworks, they're down about 7%. Qualcomm down about 6.5% right now. And Micron down just a fraction. Well, ESPN is hoping an edgy YouTube star is going to help attract younger viewers. The Wall Street Journal reports that it's licensing the Pat McAfee show from the former NFL punter with a 5-year deal valued at more than $85 million. It makes its ESPN debut today. And as the official NFL season gets underway, Uber has announced it's been named the official on-demand delivery partner and official rideshare partner of the league. Shares of Uber are higher. I'm Lisa Mateo.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This on a day when the major averages, right now they're mixed. Apple shares, as Lisa mentioned, extending the decline from Wednesday. It's the biggest drag of the major averages right now, but we do see buyers showing up. Apple pairing some of the earlier declines. Latest data, not exactly Fed-friendly. Initial jobless claims sliding to the lowest level since February. We'll have more on that in just a moment with our next guest. This all suggests policymakers have more work to do in the S&P 500. The defensive stocks, the best performers right now, utilities and healthcare. Biggest decline in the industry groups, information technology. We give you the data. Here's what's happening on the ground. According to the journal, Walmart paying some new store workers less than it would have 3 months ago. This is a sign employers are seeking to cut labor costs as the once hot job market for hourly staff that starts to cool off. S&P 500 right now 20 points lower. That's down 0.5%, 44.45 of the index. The Dow Jones Industrial Average is up 21 points at 34,465. NASDAQ 100 is down 1%, a decline of 152 points at 15,219. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Simone and Matt.
Thanks, John. Appreciate it there. Let's turn to those markets. Let's pick up on that. Initial unemployment claims coming in the lowest since February in our latest reading out today. This is the fourth consecutive time that fewer claims than Wall Street expected. Is Goldilocks alive and well? Our next guest thinks so. We have Scott Ladner. He's the Chief Investment Officer from Horizon Investments in from Charlotte, North Carolina, I understand.
This is why Paul Sweeney didn't join us today. He doesn't want to be in the same studio with Scott.
No, but we've had a discussion before. It always goes sideways, but that's okay. I still love them.
Duke did pretty well over the weekend.
They did
Yeah.
pretty well. Yeah, they kind of put smack down.
Well, I don't have any rooting interests given that I went to school with a terrible football team. But anyway.
Wait, where did you go to school?
I went to Columbia.
Smart kid.
So I sort of root for LSU because my husband's from New Orleans.
That's a good school to root for.
But not recently.
Not
anyway.
last weekend, yeah.
No,
Yeah,
exactly.
exactly.
In general, going to SEC games is a fun thing to do, right?
This is true.
I don't know about going to a Columbia football game. Do they even have a football team?
Yeah, they do. It's just, well, I don't know. It might be good now.
I went to Antioch College. We have had no football team
ago.
since 1929. So, anyway, Scott, initial jobless claims, lowest since February. The job market still seems, not as strong as it once was, especially if you look at the 3-month average, but still holding up.
Yeah, and look, and this is a really big deal because the Fed, you guys are saying the Fed's on a watch, like maybe not a Fed-friendly number. Maybe it is a Fed-friendly number. If they start becoming more concerned about growth than they are about inflation, which we think that balance is probably starting to tip a little bit at some point over the next couple months. It'll start to tip. Then it's actually still a pretty strong number. And what we want to see for this this soft landing or no landing or kind of however we want to characterize landings is still a resilient job market and a resilient economy. And that's what we continue to get here in the States.
I guess the focus has been not just on what happens in September, because I think everyone believes, and yourself may agree, hike off the table in September. There is, I guess, some question mark about what happens in November. But half the discussion I'm hearing is, are there cuts next year?
Yeah.
Your take on that part?
So, So September is not a live meeting. We can really just sort of call it that and call a spade a spade. And November, maybe. But we actually think there's going to be a nuance that the Fed speakers are going to have to start coming out with. And we think probably September in the press conference, Powell will start talking about cuts in the context of, hey, listen, inflation is coming down. And so if we do nothing in 2024, if we don't start cutting in 2024, we're actually becoming more restrictive. And why would we be becoming more restrictive if inflation is durably coming down and growth is starting to slow a little bit? That's not the right policy stance. But it's a complicated concept to get through to folks. So we think actually they're going to start the conversation early to start getting us ready for cuts that are like, we just want to stay as restrictive as we are, just kind of stay neutral a little bit.
We've kind of heard this a little bit from Raphael Bostic when he talks about passive tightening, right? Because obviously as inflation comes down, real rates are rising. But this brings up, I think, something really important that we will get. Won't we get a new dot plot in September?
Yep.
And we'll get new forecasts as well. So I think it'll be fascinating. Right now, there are 4 cuts priced in for next year. So does that change?
That seems about right. But it's kind of silly to forecast out that far because if we think back,
agreed. But we do that.
Well, if we look at December
And the
21,
swaps market
we were
does
thinking
that.
we thought there were 4 or 5 hikes maybe in 22.
Yeah,
we got 17. So it can be a little bit of a silly exercise to start figuring this stuff out, but it is going to be the most important, one of the most important conversations as we come into 24. I was like, how much cutting is actually going to be necessary in order to just keep policy stance sort of neutral? And we actually think it's going to become less restrictive as we get into next summer.
Talk to me a little bit about what we've been hearing from companies in this past earnings season. It's finally drawing to a close, only to start again in early October. But are you seeing real cracks in the consumer, not just the low-income consumer that we've heard about, but a broader consumer?
Yeah, look, not yet, and it's not. That shouldn't be all that surprising. Like if you want a job, you've got a job. You're getting raises, and we're still printing nominal GDP growth in the mid-single digits. That's not an environment under which you're going to get mass layoffs. Everybody's talking about the white-collar mass layoffs that had to happen this year. They just never happened. They didn't occur, right? We saw that in ADP yesterday. So this is going to be some of the continuing themes, the resilience of the U.S. consumer. Don't bet against an employed U.S. consumer. They come through pretty much every time, and until or unless something cracks economically, which we just don't see from an endogenous standpoint happening, probably going to continue.
When I went to my first year at Antioch, in 1996, we barely had Netscape, I think. The internet wasn't a thing.
That's right.
And by the time I graduated in 1999, we were starting to use it for everything. When I remember hearing about Google when I first started working here in 2000. So in a very short space of time, the internet really changed productivity. Is AI going to do something like that for us now?
Look, it certainly has the capacity to. And this is the first development we've gotten in a generation since that last sort of massive productivity cycle. This one has the markings of that. And the reason is because just like the internet boom, and just like sort of the PC revolution in the mid and late 90s, it's the use cases are obvious. It's easy to implement. Like anybody can use this stuff. This is not like blockchain or Web3 or crypto. Like that stuff is cool, but it's challenging to figure out how to use it in a business. Like challenging how to there were hurdles to actually implement those things. AI is really easy to implement. And so that ease of implementation and the gains that we can get productivity-wise out of that are just really, really important to understand from an economic standpoint, from an earnings standpoint.
But from an investment perspective, you still kind of only have, I guess you have NVIDIA, Microsoft, and Google also, but they have other obviously big revenue drivers. You don't really have many pure plays.
Yeah, look, there's a 4-letter ticker, and that's about it. The direct investment case in AI right now is we all know what it is. But the more interesting part is coming into the next year or two as we start to distinguish companies which are actually using it rather than just talking about it to drive productivity gains and to drive their businesses forward. The ones that are using it versus the ones that aren't is definitely going to be a haves and has not, just like we saw out of the internet stuff 25 years ago.
How do you evaluate that? Because we saw Kroger, for example, talking about AI in their last earnings.
I was just looking. Their next earnings are tomorrow.
I know. How do you evaluate if companies are actually using AI? How do you want to start seeing that show up in the numbers?
Yeah, so we should start to see it as increased margins. We should start to see it as revenue, and as revenue, basically the productivity thing was higher revenue, less workers, less costs associated with these things, and the ability to turn on a dime, the ability to pivot policy or pivot sort of production processes fairly quickly. That'd be another telltale sign of something that uses it pretty well. But look, it's so early that I don't think we've got a really solid handle on how we're going to measure this stuff. How we're going to measure the AI-ness of a company is something that we're all going to have to figure out over the next 6 months.
Well, I mean, who would have thought that a bookseller would be one of the biggest beneficiaries of the internet, right? It's true. It would have been pretty weird to call that as the killer app, and now they do everything.
Yeah, and they stream movies. Crazy.
They have cloud services.
Do you want
so far removed from a bookstore that I can't believe it.
Do you want to own tech in this environment?
I think you have to own tech in this environment. Now, are you increasing it right now?
Yeah.
Probably not the time. We actually think other parts of the market, the parts of the market that have not sort of kept up this year, probably play a little catch up as we come into the end of the year. So industrial companies, energy companies, materials companies, basically the more value sectors, the more cyclical sectors, they probably have a little bit of room to catch up. And the reason why they would, the catalyst for that happening, is a realization in the market that we're going to avoid a recession. It's okay to earn economically sensitive names because the economics are okay.
All right, Scott, great having you in the studio. Thanks so much for coming in to join us. Scott Ladner, Chief Investment Officer at Horizon Investments, talking to us about what to expect from the Fed and what to look for in the market. Certainly AI is a focus. We've had a little bit of a correction, not an actual correction. I don't mean, a 10% or a 20% drop, but we're not far away from a 10% drop on the NASDAQ. I guess the high was 14,358, and we have come down to recently 13,290.
Oh, really? That's interesting to see what's happened just in the last couple of weeks.
Yeah, absolutely. The low was the recent low was August 18th at that level. Then we came back up, and then it's been a tough couple of days. Matt Miller, Simone Foxman. This is Bloomberg. Let's get over to Amy Morris. She's in Washington, D.C. She's got your world national news. Amy?
Thank you, Matt. A new poll is giving a boost to former South Carolina Governor Nikki Haley and her run for the Republican presidential nomination. Bloomberg's Ryan Teague Beckwith was a guest this morning on Bloomberg Surveillance. He says that CNN SSRS poll showed most polling numbers for the candidates were within the margin of error, except one.
The only number that was at all real was Haley's lead over Biden, which was 6 points, because that's enough outside the margin of error that you can say that that's a real number.
Haley's lead came in large part because she won more support among a key demographic in the Democratic coalition. We are getting an update on progress in the war in Ukraine from NATO Secretary General Jens Stoltenberg. He says Ukrainian forces made a breakthrough in making progress now against Russia's defenses.
This is heavy fighting, difficult fighting, but they have been able to breach the defensive lines of the Russian forces, and they are moving forward.
NATO Secretary General Stoltenberg says it's an example of why allies need to continue to back Ukraine. The Senate is working on a package of government funding bills as lawmakers work to avoid a government shutdown. President Biden and congressional leaders, including House Speaker Kevin McCarthy, are focused on a stopgap funding measure. Senate Majority Leader Chuck Schumer says he expects McCarthy to get some pushback from other House Republicans.
I think Leader McCarthy knows that if a shutdown happens, it'll be caused by House Republicans. It'll be bad for the country, but it'll also be very bad for them.
The House is scheduled to meet for just 11 days before the government's fiscal year ends on September 30th. This as Republican Representative Steve Scalise and Senator Mitch McConnell are each dealing with their own health issues. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks trading mixed. The Dow holding on to a 66-point gain right now at 34,509, up by about 0.2%. The S&P does remain lower, well off session lows, however. Stocks are retreating. We've got NASDAQ lower by 149 points, a drop there of 1.1%. That is the big story today, weakness in technology. Case in point, Apple shares, they are leading the index lower, down by roughly 3% right now. Qualcomm also trading lower by 6.9%. Stocks are retreating amid concern over how a Chinese ban on Apple's iPhone could impact other segments of the American technology industry. Treasuries mixed, the dollar little change. Right now we've got the 10-year yielding 4.27% with the 2-year that's yielding 4.96%. Spot gold up $4 the ounce, higher by about 0.2%, $19.20 the ounce. Bitcoin up 0.3%. Bitcoin now at 25,753. Brent crude lower today, down 0.2%, still above $90, $90.40 a barrel. West Texas Intermediate crude down 0.1%, $87.42 a barrel. Applications for U.S. unemployment benefits fell to the lowest level since June, underscoring businesses' reluctance to let go of workers. The Labor Department said initial claims decreased by 13,000, the number lower than all forecasts in a Bloomberg survey of economists. Reaction to the claims data from Stephanie Roth, senior economist at J.P. Morgan Chase Global Wealth Management.
It's definitely a surprise. Claims just continue to move lower. Granted, there is some seasonality issues within the summer months, so it's possible we'll see a bit of a reversal of that when we head into September. If you look at the overall jobs picture, what we saw last week was kind of the opposite picture, and those are a little bit less volatile data.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. So again, recapping here, stocks are trading mixed. We have got the Dow Jones Industrial Average up 50 points. That is a gain right now of 0.1%. S&P down 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thank you so much. Charlie Pellet there. Well, now it's our time of the Thursday where we talk to Barry Ritholtz, our Bloomberg opinion columnist, founder of Ritholtz Wealth Management, and host of Masters in Business. Love chatting with you always, Barry. And you have a bit of an interesting take out. You quote William Goldman, the scriptwriter for Butch Cassidy and the Sundance Kids, All the President's Men, Marathon Man, etc. Nobody knows.
Princess Bride.
Princess Bride. There's too many.
The best of all
I
of
couldn't
those.
get through all of them. There's a laundry list, Marathon Man, etc. Anyway, point being, nobody knows anything. So Wall Street doesn't know anything either, Barry?
Well, let me give you a little context about what led Goldman to write that in his book, Adventures in the Screen Trade. So there was a couple of guys named Lucas and Spielberg shopping a movie around. They couldn't get it made, and it was called Raiders of the Lost Ark, and everybody turned them down on it. And not long after that, before that, Star Wars was another film that all the major studio execs turned down. And I kind of was reminded of this because very quietly in the midst of Barbenheimer, John Wick 4 snuck out and did nearly $500 million in box office, which is a huge number for a fourth sequel of just a shoot 'em up. And I did a little research and discovered nobody in Hollywood wanted to make the first John Wick film. And it's a reminder that experts who are thinking about the future really have very little expertise as to what's going to happen next quarter, next year, next decade. Nobody knows anything.
This reminds me of the R-star debate that we're having. It seems beyond ridiculous. It's fine if you want to talk about whether or not the Fed's going to raise rates or cut, but when you get into that kind of unknowable, it just is an exercise in futility.
purely theoretical.
And we will be having that discussion this afternoon with John Williams at 3:30 p.m. on Bloomberg Television.
But can I take you to the Wall Street angle, Barry? Because we had this great story out earlier this week, I think yesterday, Wall Street's stock market calls vary by firm and by floor. And just illustrating perhaps your point, the sell-side research teams are far more negative on U.S. equities than the investment managed teams. You can see this even playing out within Morgan Stanley. So how do you live in this sort of world if you are a trader?
So first, it's really important to separate the signal from the noise. When I was on a trading desk, my habit was to create a reading list, but not read anything until after 4 o'clock. Because if you read something early in the morning, it very often would influence how you traded. And in fact, there have been academic studies that have looked as to how sunny or rainy it is in New York City, and the actual weather has an impact on whether or not markets trade up a little bit or trade down a little bit. Your psyche is so malleable in ways that you're just wholly unaware of, that a nice day means you're more optimistic and, hey, it's beautiful out, and you tend to be more of a buyer. So you really have to know yourself. You really have to understand what's driving your decision making, and that's really, really difficult for people to do. We are just very much unaware of our internal thought process. We think we're making independent decisions, but lots of little influences affect how we invest, how we trade, how we make decisions.
Was John Wick 4 any good? Did you watch 4?
I haven't seen 4 yet. I loved the first one, and I found the second one very amusing. I haven't seen 3 yet. What I kind of do is, like what I did with Guardians of the Galaxy. When the third one came out, I watched the first one, I watched the second one, and then we went to the movies to see the third one in 3 consecutive days. By the way, John Wick 5 already approved. It's going to be out in 2026. Let me just put a little flesh on the bones as to how much money this film made. So it was made independently. The guys who were the choreographers and stuntmen for the Matrix movies were the co-directors. They had Keanu Reeves attached to this. No one would make it, so they made it as an independent film. They self-funded it. It cost $20 million. Today, the John Wick franchise has generated $2 billion between the box office, the streaming rights. There was a spin-off film. There was a television series, comic books, video games. $2 billion. They couldn't get anybody to greenlight a $20 million movie. And now turn around and let's apply this to investors. Which ETF? Which mutual fund? What's the Fed going to do? Where's the market going to be? Instead of focusing on next month or next quarter, the one thing we know is that over 10 and 20-year periods, we have a pretty good idea of what asset class returns are going to be. Here's what stocks return. Here's what bonds return. And people have to stop thinking about tomorrow and start thinking about, hey, what about my kids? What about my retirement? What about my grandkids? That's a way to defeat the nobody knows anything sort of philosophy.
You know, I've noticed here at work that a lot of people underestimate the allure of cars when it comes to selling clicks, for example. And the same is true in movies, right? Because that's the part of the equation that made John Wick such a big seller. He has a Boss 429 in the first one, right. And I think he has a Chevelle SS in the second one. And I guess people who don't care about cars really don't see the draw, but people who do are going to tune in for this kind of thing.
Yeah, Matt's looking at me, and I'm kind of rolling my eyes because I have to say I don't know cars. I guess I have a hybrid. That's about it.
But in the John Wick movie, the McGinty that drives the plot is a bunch of hoodlums see his Mustang and come to his house to steal it, not realizing this is one of the most deadly hitmen in film lore. And so that's what starts the whole process.
And they kill his dog, right?
Matt, I knew you'd take this back.
They kill his dog, which his recently deceased wife had given to him. It's just a great plot.
Barry, thanks so much for joining us. Barry Ritholtz on John Wick and the markets. This is Bloomberg. Let's get over Lisa Mateo right now. She's got your company news. Lisa?
Now I got to go see the movie. Thanks, guys. All right, well, more EV chargers are coming to Hilton hotels. Bloomberg Automotive Regulations reporter Keith Lang has that story.
They are partnering with Tesla to add about 20,000 of their universal wall chargers, which are kind of mounted to existing infrastructure so they don't take up as much space, to 2,000 of their hotels in the U.S., Canada, and Mexico. They're expecting to start these installations in early 2024, and they expect to be completed by 2025.
All right, shares of Tesla right now down about 1.5%, just over 1.5%. Hilton shares down more than 1%. The maker of ChatGPT will host its first developer conference this fall.
OpenAI is looking to boost interest in its products while facing growing competition from other artificial intelligence companies. In a blog post, the firm said it would hold the OpenAI Dev Day in San Francisco November 6th. OpenAI also plans to live stream a keynote presentation.
And that was Bloomberg's Gina Cervetti reporting. Walmart is cutting the starting pay of some of its workers. The Wall Street Journal reports the retailer changed its wage structure for hourly employees in mid-July, and now most hires will make the lowest possible hourly wage for that store. Right now, shares are up about 0.7%. And Grindr has lost nearly half of its staff as it enforces its return to office rule. The policy was introduced after workers at the LGBTQ dating app announced a plan to unionize. Now, the Communication Workers of America said nearly 180 employees were forced to resign after the company made that mandate. Otherwise, they'd be fired. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Matt Miller here with Simone Foxman. Paul Sweeney is going to join us later on in the afternoon. He will anchor Bloomberg Business Week from 3 to 6 p.m. We still have a lot coming up in this program. We're going to be talking about the Mustang Mach-E with the head of the segment there, and looking forward, obviously, to that discussion, as well as Pernod Ricard, talk about the booze business. Right now, I want to get over to Amy Morris. She's got your world national news out of Washington, D.C. Amy?
Thank you, Matt. New York City Mayor Eric Adams not mincing any words. He's describing support that he's getting, or rather not getting, with the influx of migrants to town. He says more than 100,000 asylum seekers have come to New York and that more than 50,000 are in shelters and that the city's running out of resources. During a town hall meeting, he says the lack of federal support is alarming.
We're getting no support on this national crisis, and we're receiving no support.
The New York Times reports New York Governor Kathy Hochul's office in a letter claims Mayor Adams' team didn't act fast enough and did not accept help from the state when the migrants began to arrive in larger numbers. Former South Carolina Governor Nikki Haley has polled above President Biden in a hypothetical 2024 matchup. The new CNN SSRS poll shows Haley was the choice of 49% of voters compared to 43% for Biden. The Food and Drug Administration reportedly plans to greenlight updated versions of COVID boosters as soon as tomorrow. Sources familiar with the FDA's plans tell NBC that the latest shots are designed to target the XBB.1.5 Omicron subvariant, even though that strain's no longer dominant. But drug makers and health experts say the boosters should still offer some protection against the newer subvariants. And after the green light from the FDA, the Centers for Disease Control and Prevention and its advisory committee will issue its own recommendations. Bruce Springsteen postponing 8 shows this month because of a health issue, as doctors advising him to take some time off. He's being treated for symptoms of a peptic ulcer. Springsteen also postponed 2 concerts last month in Philly because of an unspecified illness. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Matt and Simone.
Thanks so much for that, Amy. I'm here with Simone Foxman in the Interactive Broker Studio. We have a lot of IPOs, it seems like, all of a sudden, at least coming up or talked about. And I guess that's due to the kind of hype and excitement over the ARM IPO. But now a number of other companies are thinking about coming to market.
Yeah, is it the hype over the ARM IPO? Because what gets Instacart, for example, to go to market? And the news out that Instacart preparing to set a price range for its IPO and start its investor roadshow as early as Monday, considering pricing its listing on September 19th, with trading to start the following day. That's the news here. But there have been a lot of IPO news, but it's not around companies like ARM, for example.
No, not like ARM. I was talking to Katie Roof yesterday, who does our IPO coverage on the West Coast for Bloomberg News, and she was saying that there is a window open. Maybe it's a small window, or maybe it's a regular size window, but only a small opening, right? But now you're starting to see a number of other companies. Wilson, the racket maker, that's owned by Amer Sports. They also own Solomon Skis and some other really cool fitness equipment. They're thinking about coming to market as well. They're looking to raise maybe $1 billion and maybe even as much as $3 billion, depending on market conditions, according to people familiar with the story.
Yeah, and interesting on that one, there's a sort of wide discrepancy with it, how much money they think that they could actually raise, and therefore what the valuation would be, up to $10 billion.
And there was with ARM too, actually, right?
Oh, because yeah. $70 billion was at one end the target.
Exactly.
Now it looks like we're going to see
54 or something, 53, 54. So, yeah, there's a big delta. Obviously, market fluctuations. We don't see very much in terms of actual fluctuations, though. I was talking about a correction before, and I think I was off by a lot, right? Because the NASDAQ had been up to 14,000 and down to 13,000, so it wasn't really a huge drop that we've seen over the last few weeks.
But you know what? It feels like it. On a day where you're seeing NVIDIA, Apple sell off, it certainly feels like that.
Absolutely. We're going to talk more about this with Bailey Lipschultz when we come back. Plus, we're going to talk cars and booze. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Matt Miller here at 7:31 Lex with Simone Foxman. Paul Sweeney's going to join us later on this afternoon on Bloomberg Business Week. We were talking about the fact that the market feels like it's off, and the reason that it feels, I think, like it's down further than it is because it's a shortened trading week, and we've had sell-offs every day this week, right? We were down Tuesday, Wednesday, and today, and on Monday, obviously closed for Labor Day holiday.
And we know that September is supposed to be negative for the S&P 500 over the past 30 years, down 0.7% on average. And, you know, today we're looking at NVIDIA, Apple, all down about 3%.
But the highest we've been over the last few months is 45.88, I think, on the S&P. And right now we're trading at 4,443. So it hasn't been such a huge drop, or it hasn't been as big, I think, as it feels. So we're going to get a little bit of a check on that with Bailey Lipschultz in just a moment. Right now, I want to get a Bloomberg Business Flash. For that, we go to Nancy Lyons. Nancy?
I'll take care of it.
Oh, Charlie Pellet, sorry.
I'm here, and here's what's going on. We have got the Dow, the S&P, NASDAQ trading mixed right now. Dow Industrial is up 68 points. That is a gain of 0.2%. S&P 500 index 44.47 right now, bouncing around down 0.4%. NASDAQ down 169 points, a drop there of 1.2%. And the NASDAQ 100 index down now by 1%. A lot of big tech stocks declining. Apple down now by 3.2%. NVIDIA, among some of the names we've been talking about, down 2.9%. Qualcomm lower now by 7%. Stocks are retreating, a bit concerned over how a Chinese ban on Apple's iPhone could impact other segments of the American technology industry. Treasuries mixed, the dollar little change. Right now we have got the 10-year yielding 4.26%. The 2-year 4.96% on the 2-year. West Texas Intermediate crude oil is moving lower, down 0.4%. 87.23. We've been keeping an eye on Brent over the past several sessions, holding above $90 a barrel. Brent, of course, the global benchmark, 90.19, lower today by 0.4%. Apple, as I mentioned, down now by 3.2%. Apple declining as China plans to expand a ban on the use of iPhones to government-backed agencies and state companies. Anurag Rana is a senior tech analyst with Bloomberg Intelligence, and right here on Bloomberg Markets, he explained why this is a big deal.
Financially, I would say government official not buying the iPhone is not going to be material for Apple. But the question really is not so much about that. The question is the close relationship that China has had with Apple, or the Apple has had with China, are we seeing some kind of a dent in that? I think that is the biggest question here.
And again, Apple down 3.2%. By the way, you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Dell slumping after Barclays downgraded the company to underweight from equal weight. Right now, Dell shares trading lower by 2.5%. GameStop after earnings. Last night it popped after the report, but right now GameStop down by 0.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie, thanks very much. Charlie Pellet there with your Bloomberg Business Flash, talking a little bit about moves in the markets. Let's get more right now with Bailey Lipschultz. He covers stocks for Bloomberg News and joins us now in the Interactive Brokers studio. Bailey, just before we get into what's going on today, what's your thought on the IPO window being open? I was just talking with Simone about, ARM and Amer Sports and Instacart, exactly. So what do you think?
They're all very different. So I was talking to a banker yesterday, and he basically said ARM can't not work. So ARM has to be a successful IPO. It has to trade well. But just because it trades well doesn't mean that the door is wide open and life is going to be terrific for bankers and lawyers and companies that would be going public. You look at ARM, which is essentially was taken private by SoftBank. It almost fits into that private equity mold. Very different than Instacart, which many had been pounding the table for it to go public, and even more different than Klaviyo, which is another company that we're keeping an eye on, which could follow a similar timeline to Instacart, just given the VC backing. So a mixed bag, but the big focus right now in terms of would-be IPO candidates is profitability and expectations for growth, as opposed to kind of the growth at all costs that we saw dominating in the record year that was 2021.
What is it about the markets right now that has made these companies come forward? I mean, we were talking about how the Nasdaq is near some of the highest that it's. The Nasdaq 100 is near some of the highest that it's been, even if today feels like a down day. This week maybe felt like a down day. What's making these companies say, awesome, rah-rah, and also, does do a series of negative days potentially undermine that?
I don't know that a series of negative days really could throw a wrench into things. The big factor could be the Fed, but it does seem like most companies have moved beyond concerns. It's really just getting more comfortable with valuation discrepancy, just given where they likely did their last round, what kind of a haircut people will have to take. But fundamentally, you're looking at an S&P 500 just around 16-month highs. I know it's down today, but still trading close to the levels that we saw back in late July. You have the VIX, even though it's at 15 now, hasn't traded above 20 since March, which is a key level to keep an eye on. So the fundamentals are there. It's just getting investors to want to put money back to work at valuations that companies are more comfortable going public at. Again, if you did a big fundraise in 2021 when the market was ripping and everything was going crazy, it's hard to sell those investors on, at least on paper, taking quite a haircut, which I know is something we've talked about with the likes of an Instacart, which was valued around $39 billion at one point, now expected to be closer to 10 to 15 billion.
Just to make sure that I'm not losing my mind, the VIX at 15 is nothing, right? I mean, are we all in agreement that that's not signaling any kind of volatility or fear?
Yeah, I think that's what
everyone's double checking, because on surveillance this morning, Tom was like, oh, the VIX is at 15.1. And I was thinking, so what?
The only, again, talking to people on ECM desks, if it got back above 20, it would cause some jitters. But I do think, broadly speaking, the VIX being where it's at and where it's been for the majority of this year, again, since March, holding below that 20 level, it's showing you that markets aren't really too concerned around volatility. Whether you want to sit and nitpick about, are we being in a market led by the Magnificent Seven? Are we actually seeing kind of those green shoots that really matter in the IPO market is a different debate. But looking at the VIX by itself, kind of meh, personally.
Meh.
Can we talk about something that's not tech slightly? Can we talk about some of the pharma names that you're watching today? I know there are a few names that are moving substantially.
Yeah, so in the pharma space, we're looking at the top performers in the S&P 500. You've got Eli Lilly up close to 3%, Merck up a little over 1.5%, as is AbbVie. But when you look at the downside, one of the worst performer in the S&P 500 so far this morning, or I guess this afternoon at this point, is a company called Insulet. And Insulet is in the diabetes space. So Insulet, Tandem Diabetes, both under pressure. Insulet, ticker POD, P-O-D-D, down 10%. This coming after a New England Journal of Medicine article found that shots like Ozempic and Wegovy in patients with type 1 diabetes reduces the need for insulin injections. So this is a trend we've been tracking. If the companies like Novo and others that are benefiting, Novo and Eli Lilly, who are benefiting from these weight loss drugs, there's going to be some kind of shakeout, and that's what we're seeing right now, again, with steady losses for those companies in the devices space that cater towards diabetes patients, just because this has to send investors back kind of to the drawing board in terms of what the demand will look like within that space. So you're seeing, again, weakness for Insulet, ticker PODD, Tandem Diabetes, TNDM, and that obviously does fit kind of broadly into the sell-off that we've seen for growth in momentum stocks, as well as technology at large.
That's so interesting. I'm fascinated by these semaglutide semaglutide shots, the GLP-1s generally, because they just seem to have been driving this overall move.
I can't wait to get.
healthcare.
I just want to get a hold of some of that stuff and try it out.
Well, we've been talking on our desk, like, how much does this change the entire investing landscape? Like, we're seeing some of the studies showing that, if you're on some of these shots, you're going to crave alcohol less. So what does that mean for alcohol?
Yeah, that's what I think you're going to crave sugary things less. And my biggest problem is like cake and ice cream.
I think you just crave food less generally, and how does that affect, food producers?
Yeah, I mean, would be great as well, but I want to continue to eat, healthy food. I just don't want, when I look at, yesterday I was in the popcorn aisle, and instead of the salty one, I grabbed the sweet one. I want to be able to make a healthier choice, and maybe this shot would help me do that.
Well, and they are going to come out with this in pill form as well.
Which would be even better.
Likely, or there's several companies working on these, because apparently the need to take shots is one of the key reasons that people don't want to go on these medications.
Of course. By the way, I wonder what, if you are, say, Pernod Ricard, what do you think of this kind of development?
We will ask the CEO shortly, I think.
Because you're much less likely to reach for, a sweet beverage, I guess, if you're on one of these shots. I'm not sure. So it'll be interesting to see how it plays out.
Well, I just got to ask, Matt, though, when you're, what is your go-to dessert? I'm a big ice cream fan, so ice cream's my, go-to.
For me, too.
Asked.
Yeah.
Are you a Ben & Jerry's guy?
I'll go a pint of Haagen-Dazs, every night if I'm left unchecked, right? If my wife isn't there to yell at me.
The Halo Top is actually really, really good, I have to say. But I'm not a sweets person. So this is to your point, Matt, earlier. This reduces your desire for sweets only as opposed to other things. It wouldn't help me.
It very much might. All right, Bailey, thanks so much for joining us. Bailey Lipschultz there, talking to us about the market moves that we're watching, as well as the broader window for IPOs. We've been watching a number of companies with that lately, so I think really interesting stuff. Let's talk about Pernod Ricard right now. We have Alexander Ricard with us here, the CEO of the famed liquor maker with us. The brands are too numerous to mention. I grew up with, my mom has always had the Glenlivet around, has always had it handy in a healthy way, and I appreciate a lot of the, I grew up with Absolute posters all over my wall. When I was a kid, it was the thing to find Absolute ads and then to collect all of them. And I'm older than you, so you may not remember that, Simone. But Alexander, thanks so much for joining us. What to you is the most important or the biggest growth driver of your business? Because you have so many brands, so many children to look after.
Yeah, well,
hopefully adults. Excuse me. Sorry, go ahead.
First of all, adults, absolutely. Listen, the beauty is, if you look at the way we grew over the last, let's say, 12 months, 85% of our growth came from 6 different categories. That's the beauty of the industry. I mean, every single category has amazing brands amongst it that are growing. You mentioned some of them, by the way. Absolute, we've had an amazing year with Absolute Vodka globally. The brand grew 10%. You mentioned Glenlivet, one of the fastest growing single malts in the world, doing very well, by the way, in the US. I could name Jameson as well, which is just flying off the shelves, and it's great to see. But even other brands like Malibu and Kahlua, or even our cognac brand Martell.
I did want to ask you about, do you love the Big Lebowski?
Oh, yeah.
Because the dude is drinking White Russians the whole time. And that's the first thing I think of when I look at Kahlua.
And by the way, in the U.S., we have a great Absolute Martini combo that worked very well last October, November, December, ahead of the festive period. It's just amazing.
Oh, one of the big areas of demand for you, and a large share of your business, about over 40% now, is Asia. I know you and I talked about this last week, but I want to discuss the changing appetites of particularly Chinese consumers. This is a place where they're seeing some economic pain, but how are their appetites for alcohol changing at the moment?
You know, it's when the zero COVID strategy was over, and after going through a normalization phase, we experienced in China exactly what the rest of the world experienced post-pandemic, which is what I call revenge conviviality. Chinese consumers just started to go back out again in the trade, going to see their relatives, their friends, a lot of weddings catching up, and so on and so forth. And as you said, there is a little bit of a macroeconomic softness in China right now, which is impacting consumer confidence and therefore a little bit our sales. But the underlying fundamentals are there. I mean, consumers want to go out.
Do they want sweeter stuff versus?
So in China right now, they really love cognac. They really love whiskey, in particular single malt. And Absolut is enjoying huge growth as the cocktail culture develops in China as well. And there's a big structural shift which we're seeing emerge in China, which are live venues, live entertainment venues, basically bars with local bands playing music and Chinese consumers just going there and having a drink or two.
What you flagged a decline in sales in the current quarter. Is that globally, and what do you think is behind that? Are people switching back from spirits to beer and wine, or what's driving it?
No, what's driving it is basically a softness right now in the quarter in China. And by the way, we're lapping a record quarter the previous year. Over the last 2 quarters in China, we grew 32%, so that's what we're lapping in a soft environment. Number 2, we are lapping as well normalization in the US, which is by far our largest market. So we expect a soft negative, in fact, quarter.
So it's tough comps.
Yeah, tough comps, but also normalization.
What about weed? Is that not a big competitor? Because I think a lot of people in this country are drinking less alcohol and, eating more gummies, for example.
No, I had the question back in fact, in 2018, as cannabis was being legalized in a number of states. Ever since, we've really monitored the situation quite closely, and by the way, ever since, the spirit market, the category in which we operate, premium spirits, have accelerated, as a matter of fact. The underlying trend in the U.S. for spirits is usually 4 to 5% growth, and over the last 3 years in the U.S., they've grown 8%.
Our colleagues, really quickly here, our colleagues flagged the decline in consumer appetite for alcohol because of GLP-1 drugs, those new weight loss diabetes drugs. Is this on your radar at all?
No, everything is on my radar. Just like,
Okay.
6 years ago, we spoke about cannabis, and ever since we've been looking at it closely, monitoring, just making sure. And this is new, so it's still early to conclude anything tangible about it, but obviously we'll be looking at it closely. Yeah, sure.
Alexander, thanks so much for coming in. Really appreciate your time here. Alexander Ricard there, the CEO of Pernod Ricard, the maker of Monkey 47 Schwarzwald Dry Gin. This is Bloomberg. Let's get over to Lisa Mateo right now. She's got your company news. Lisa?
Thanks, Matt. GameStop reported second quarter sales that beat estimates in its first report since the retail chain ousted its CEO. Bloomberg's Katie Greifeld says it's been a tough road for the game maker.
GameStop has been struggling with the fact that the video game industry has been moving to online distribution rather than selling physical discs. But recent popular releases have helped cushion that blow, at least for the past several months, for GameStop. In particular, The Legend of Zelda, Tears of the Kingdom. That sold 18.5 million units in 2 months. And all told, GameStop's game software sales rose 26%.
Now, shares of GameStop right now down about 0.8%. And Google wants all election advertisers to disclose when their messages have been altered or created by AI. More from Bloomberg's Ed Baxter.
The policy update, which applies starting mid-November, requires election advertisers across Google's platforms to alert viewers when their ads contain images, video, or audio from generative AI. They will have to use prominent language like "this audio is computer-generated" or "this image does not depict real events."
Now, shares of Google's parent Alphabet right now, they're up just a fraction. And a warning from Boeing. The company says that deliveries of the 737 jetliner will come in at the low end of its targeted range this year, and that's due to a recently discovered supplier glitch. CFO Brian West added that profit margins for the company's commercial and defense units will be negative in the third quarter due to supply chain issues. Shares of Boeing right now down about 0.7%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. The Dow holding on to an 83-point gain right now, up by about 0.2%. The NASDAQ 100 index is trading lower by just about 1% now, down 150 points. We've got the NASDAQ Composite Index down 159 points, drop there of 1.1%, while the S&P is lower by 16, down 0.4%. Stocks are retreating amid concern over how a Chinese ban on Apple's iPhone could impact other segments of the American technology industry. Apple shares, they're down now by 3.3%. 10-year yield, 4.26%, with a 2-year that's yielding 4.97%. Spot gold up $4 the ounce to $19.20, an advance of 0.2%. West Texas Intermediate crude oil at $87.10 a barrel, lower today by 0.5%. Packaging companies WestRock and Smurfit Kappa Group are in talks to merge, potentially creating an industry giant with a market value of about $20 billion. Smurfit Kappa right now trading lower by 2.9%. We've got WestRock up by just about 5.1%. Again, recapping, stocks are mixed. The Dow higher now by 0.3%. S&P down by 0.35%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charles, thanks very much. Charlie Pellet there with your Bloomberg Business Flash. Matt Miller here in the Interactive Broker Studio at 731 Lex with Simone Foxman. Paul Sweeney is going to join us later on. He will anchor Bloomberg Business Week this afternoon from 3 to 6 p.m. Don't miss that. I am excited to welcome the Mach-E sales manager for the Ford Motor Company. Michael Sago joins us to talk about what's going on in this quickly growing industry with really one of, I think, the first standout products in American EVs. Michael, thanks so much for joining us. What does sales look like now for the Mach-E? I mean, I started seeing a lot more of them last year, and they've become very present, at least in this region. How many do you sell in 2022, and how many do you want to sell in 2023?
So we've had great sales in the last couple of months. So we actually took a bit of downtime earlier in the year to revamp our production facilities to make sure that we could meet demand for the Mach-E. So what's great now is a lot of those extra units that we've been able to produce are now out there in the market and available for purchase and for customers to get their hands on.
We're also hearing about the Mustang Mach-E Rally as well, which The Verge actually called the Ford's off-roadiest performance EV yet. Tell us about tell us all about what this is about.
Love it. So really excited to write another chapter in Mustang's nearly 6-decade storied history with the Mustang Mach-E Rally. So as you know, it's actually a 4-door SUV that's all electric, seats 5 passengers. And we've had that vehicle in market for a couple of years. And this new variant, the Rally, allows us to go off the pavement and confidently onto the dirt road. So this is a rally-inspired electric SUV with really aggressive rally styling all around and lots of extra capability built in. We've raised the vehicle 25 millimeters. We have off-road tires on it. We have extra special tuned suspension for off-roading, and this thing is going to be a beast. It's going to have at least 650 pound-feet of torque and do 0 to 60 in under 3.5 seconds.
We're just looking at pictures of it there. What I instantly wonder is, why isn't it called a Raptor? You know, because at least in the gas side of the business, when Ford makes an off-road vehicle, at least in terms of the F-150 and the Bronco, if it's the pinnacle of the off-road offering, if it's the apex predator, you now have the Raptor brand.
Great question. So this is definitely different from a Raptor or a Bronco. The Mach-E Rally is not necessarily meant to be a rock crawler, but it's meant to perform really well at high speed on loose surfaces, similar to what a rally vehicle would do. And that's more the driving experience that we were benchmarking rather than some slow, precise rock crawling that you would use a Bronco or a Raptor to do.
I mean, I use the Bronco or the Raptor for the Baja 1000. You know, I'm flying across the desert in that vehicle. In fact, I was one of the first Raptor buyers in my neighborhood.
Really?
I got one back in 2014. Awesome. In fact, my Raptor was built at the Rouge and hand-delivered, believe it or not. The keys were given to me in the factory by Alan Mullally. It dates me a little bit, but yeah, I was a big fan of that vehicle. I still am. When are these electric off-road vehicles going to be on sale? When can if I put in my order now, or can I put in my order now, and when can I pick one up at the dealership?
So order banks are not quite open yet, but we're going to begin production early next year, targeting January right now, and deliveries will begin shortly after that. So call it late Q1, early Q2. You should be able to get your hands on one of these.
Price bump? What are you thinking? I'm looking already at the GT version of the Mach-E, and I'm bumping up against 60 grand. Is this going to put me over that?
So it'll be slightly over that. We're targeting an MSRP of 65,000 right now, but it's a very dynamic environment, as you know, and we're going to confirm pricing closer to launch.
Okay, other than Matt, who has like all the cars, who's your target buyer here?
Great question. So what we're doing with the Rally is really bringing EVs to folks that are adventure seekers and who value an active lifestyle. So somebody who really wants the best of both on-road and off-road, somebody who wants this for their commute Monday through Friday, but also wants to take an off-the-beaten-path adventure on the weekends and wants to be able to do all that in the same vehicle. So if you value technology and an exhilarating drive experience, this is definitely the vehicle for you.
One of the questions I always have had about EVs is how I'm going to be able to retrofit them later on. You know, because battery technology develops so quickly. With a gas vehicle, if I say I have like a Boss 302 and I want to put in, like a 447 in there, I can just pull out the engine and swap it. But it's much more difficult with a battery. What's your thought on how we're going to be able to deal with these 10, 20 years down the road?
So great question. One of the best things about Mustang is how enthusiastic our customers are about the brand. And we see that with Mach-E as well. We see a lot of customers that want to customize their vehicles, and we're definitely here for that. So we will have a full suite of accessories that will be available when we launch. And the other thing that's great about electric vehicles is we're able to do things through over-the-air updates and different software pieces that we weren't able to do before. So we can actually help you improve your vehicle over the air. So hopefully makes that process even easier for you in the future.
But that doesn't necessarily allow you to just kind of switch out your battery when the battery technology improves, does it?
Right. It's hard to get to. I imagine you'd have to take out the interior. And I mean, if the battery's in the floor, it's a skateboard, right? So
battery swapping, you know, that'll be definitely a conversation for another day, but there are things we can do with different calibrations of the engine through software that we can push through over-the-air updates to enhance performance. Things like our Blue Cruise 1.3 that we're going to launch with the Rally, you know, has been something that improves from version to version. So a lot of this is actually going to happen automatically for you in the future.
Blue Cruise is kind of like an automated driving or something that gets closer to that, right?
Exactly. It's our hands-free driving software that's in all Mustang Mach-E's. And Blue Cruise 1.3, one of the greatest improvements is for narrow lanes and curves. It's actually been, in our internal tests, has stayed in hands-free mode 5 times longer than Blue Cruise 1.0.
Look, Michael, I've got to ask you about this because Ford and its union discussions are so top of mind for markets right now. I know you're a marketing guy, but that you do really know about this vehicle. One of the concerns, I guess, from the union side has been that the automation of these production of EVs potentially, you know, puts them out of work.
You need far fewer people to build an electric vehicle.
Exactly. I mean, does the production of the Mach-E and the Mach-E Rally, you know, does that require far fewer people?
Yeah, so that's definitely a question for another day as well. We're excited about the Rally, and we're excited for production to begin in January.
All right, not the guy to ask about UAW negotiations.
I had to ask.
But we do have to ask those questions. What about other versions? Do you have any ideas about some other versions we could see of the Mustang Mach-E? Is this going to be something where variants come out every couple of years?
So great question, and stay tuned for details on the entire 24 model year Mustang Mach-E lineup. But I do want to share with you one mentality that our team has adopted, and it's called always on. So through with social media, with connected vehicle data that's aggregated and anonymized, we're able to listen to customers in a much more real-time way than we ever have in the past. This Mach-E Rally went from an idea in an email to an actual vehicle that you can drive in 16 months. And that's a process that could typically take 3 to 4 years at an automaker. So we're really excited about all the different variants that can come from this in the future, and really hope that you stay tuned for the full 24 model year Mustang Mach-E lineup, which we'll be giving you more details on soon.
Michael, thanks so much for joining us. Really appreciate it. Michael Sago there, Mach-E sales manager at the Ford Motor Company. Let's get down to Washington, D.C. right now. Nancy Lyons joins us with World National News. Nancy?
Thanks, Matt. President Biden leaves Washington this afternoon for the G20 summit in India. He's seizing the opportunity to boost America's influence with allies, with the leaders of both China and Russia skipping the event. Bloomberg Government's Jack Fitzpatrick with more on the summit's significance.
It is an opportunity for Biden to very much put a spotlight on the U.S. and away from especially China in a sense of competition for economic ties.
Again, Bloomberg government's Jack Fitzpatrick. The president is leaving Washington just as new poll numbers show his support shrinking. A new CNN survey finds in a 2024 hypothetical matchup with former South Carolina Governor Nikki Haley, Biden had 43% support compared to Haley's 49%. Of course, Haley is running a distant fourth in the Republican field. In a matchup with Republican frontrunner Donald Trump, the poll had Trump at 47%, Biden at 46%. The contract between the United Auto Workers Union and the Detroit 3 automakers is now a week away from expiring, and the UAW is threatening to strike at all three if an agreement has not been reached. Ford today announced it is raising the pay of 8,000 of its hourly workers, a hike that was negotiated in a 2019 contract. Have you set your fantasy leagues? Because the 2023 NFL season kicks off tonight. The reigning Super Bowl champion Kansas City Chiefs will host the Detroit Lions. Kickoff at Arrowhead Stadium is set for 8:20 p.m. Wall Street time. The Chiefs will celebrate their Super Bowl title with an on-field ceremony before kickoff. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
12:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a headline from the Bloomberg Professional Service. Kugler confirmed by the Senate as the first Hispanic Fed governor. Stocks trading mixed right now. We have got the Dow higher, S&P trading lower, NASDAQ lower. NASDAQ 100 index right now is down by just about 0.8%. Stocks trading mixed. The Dow up 84, up by 0.3%. S&P lower now by 13, down 0.3%. NASDAQ Composite Index down 143 points, a drop there of 1%. Stocks are retreating amid concern over how a Chinese ban on Apple's iPhone could impact other segments of the American technology industry. Apple shares, they're trading lower right now by 3.1%. 10-year yield, 4.26%. We do have the 2-year yielding, 4.96%. Spot gold up $3 the ounce, little changed at $19.19 the ounce, up 0.2%. And West Texas Intermediate crude down 0.8%, 86.86 a barrel. Ford says it has raised the pay of 8,000 American hourly workers represented by the United Auto Workers Union only a week before its union contract expires. David Welch is the Detroit bureau chief for Bloomberg News, and he was our guest right here on Bloomberg Markets.
They're trying to show that they pay their people fairly. Ford's they've not only been the most aggressive in getting an offer to the UAW, but also making it public and showing the workers and the general public that they treat their workers pretty well. And look, Ford has not been the strike target since the 70s.
And you can hear more of the conversation with David Welch on the Tape podcast. You can download it wherever you get your podcasts. Ford shares, they are down now by 1%. General Motors is also down by 1%. Stellantis higher by 0.1%. Stellantis is the parent company of brands that include Chrysler, Dodge, Jeep, and Fiat, among many, many others. Again, recapping, stocks mixed. S&P lower by 13, a drop there of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thank you. That's Charlie Pellet there. I want to bring in our next guest, Jawad Mian. He is the founder at Stray Reflections, a global macro research firm with an unconventional view towards markets and trading. Jawad, I want to ask you, because we're looking at a pretty negative picture for some of these major tech names, NVIDIA, Apple shares, both down, roughly in the 3% range, and the NASDAQ really leading our losses today. We've heard some question marks about whether the AI hype will live up to the kind of standards that analysts have thought. Is this the end for this tech enthusiasm part of the rally?
I don't think so. Feeling lost, confused, and uncertain as much a hallmark of investing as is clarity, conviction, and a sense of calm. So this kind of period is quite normal. But what is confusing me actually is not the Nasdaq's 37% rally, nor that inflation has really receded with so little economic pain, and not even that the 10-year bond yield are breaking out. The confusing aspect for me is why institutional investors are still sitting out this bull market, which is why I believe any correction even here will be quite shallow.
Jawad, if I'm looking at the 10-year right now, the yield's at 4.27%. Is there a point that the yields can break out to that we would see things actually materially start to break when it comes to some of these tech-heavy stocks and indexes?
I think if the bond yield is rising for the right reasons, which is based on greater economic confidence, a higher real neutral rate, I think equities will do just fine in that scenario. If yields were rising like they did last year, where we were still dealing with inflation uncertainty, weren't sure where the Fed rate hike cycle would end, confusion about the terminal rate, that was what was really hurting stocks here. It's quite, and if we look at past, cycles where bonds are rising since the 1970s, you notice is that those periods are overwhelmingly positive for stocks. So in 9 out of those 11 cycles, equities did okay. Positive return of around 13% over a 12-month horizon. What happens is tend to contract, but equities do okay because earnings grow fast enough to offset those lower valuations. So even as bond yields increase from 4 to 4.3 and let's say higher, if we are going to be seeing forward earnings climbing as we are currently with S&P 500's bottom-up EPS estimate next year at 240, that still is a drop for equities.
And sorry to our radio viewers there, I should have told you that the disembodied voice that you might have just heard before Jawad's was actually that of our stocks reporter, Bailey Lipschultz, who joins us for the next couple of minutes, 15, 20 minutes here. Jawad, one of the big concerns has been the health of the consumer going forward, responsible for about 2/3 of overall economic GDP. What are you reading in the tea leaves here from some of the earnings statements we've had over the last couple of weeks from the data that you're seeing?
So I think the big question and concern this year coming into it was that everyone was expecting a recession, and it hasn't happened yet. The labor market remains quite healthy. And I think what we're trying to understand now is the fact that interest rate sensitivity in the U.S. economy is historically low. And what that means is basically consumers and households really deleveraged post the GFC, and then post-pandemic, given the boost to incomes and the further plunge in interest costs, you're looking at household.
It looks like we might have lost Jawad there. We'll be back to him soon as we get him back on the line. We're looking at a mixed picture in stocks right now. Dow Jones up about 0.2%, but we're seeing some weakness in the S&P down about 0.3%, and the Nasdaq down about 1%. I believe we have Jawad back with us. You were talking about some of the pain that the consumer has been feeling, but not necessarily bad for stocks. Just, I believe we lost you there. So just recap a little bit the last bit that you were saying there.
What I was saying was that what we're realizing is that the interest rate sensitivity of the U.S. economy for households and corporates is really low. Why consumers have... So if you have nominal growth clocking in at around 6.5–7%, as has been the case so far this year, even a Fed funds rate at 5% is not troublesome. It's only when you really have a sharper slowdown in nominal growth and higher interest rate levels that you start to see the consumer really pull back. And that has the case so far. I don't expect it to be the case for the next 6 to 9 months either.
And Jawad, looking at the tape, obviously we're starting September off in the red, seasonally the worst month for major U.S. averages. What can spur investors to put capital back into the market? We have CPI data coming out in about a week. We have a Fed blackout period. Obviously, there's a lot of macroeconomic concerns as it relates to Apple. What draws investors back into this market?
I think it's just a matter of understanding flows and participation levels, right? So even though recession concerns are fading, what you realize looking at different surveys, like the Bank of America's fund manager survey shows that global equity allocation is still at 11% underweight, which is 1.5 standard deviation below the long-term average. The overweight in bonds is a 2 standard deviation. And so what you're seeing is currently this understanding that maybe why invest in stocks when bonds are yielding 5% in the short term. But our view is actually bonds are expensive here and stocks could be relatively cheap on a relative basis. So I think it's going to be simply an understanding that with yields moving higher, institutional investors came into the year quite underweight equities. They expected their private market book exposure will sort of help them with that. But private markets have underperformed, bond yields have risen, and they're realizing that equities underweight is even bigger than they thought. So in conversations, what I pick up in from positioning data is that we're going to see more and more participation flows moving into equities, which will keep any pullback quite shallow before we move from here.
Jawad, just quickly, we only have about 30 seconds here, but I know that you were a portfolio manager in the Middle East recently, or in your past. Dramatic rise in the importance of that region has for the rest of the world. Is that something that can continue even if oil doesn't remain $90 a barrel?
Yeah, I mean, I think they've got plenty of liquidity buffers to be influential. And I think most importantly, what matters from there is just their oil production policy, right? So that's the real way that you'll see a pass through into from a global macro perspective, what is OPEC going to do with oil cuts? And they've already said that they're going to extend their cuts for now, so which keeps oil prices higher in the near term.
Yeah, and very interesting, Jawad. That's Jawad Mian. He's the founder of Stray Reflections, the global asset management firm. Thank you for joining us here on Bloomberg with me and Bailey Lipschultz. This is Bloomberg. Now we go to Lisa Mateo with Company News.
Thanks, Simone. Shares of Apple, they are falling right now, down about 3%. And this after news that China plans to extend restrictions on the use of iPhones. Bloomberg's Ed Ludlow reports.
What we are reporting at Bloomberg is an extension of what the Wall Street Journal reported 24 hours ago. They had said, citing anonymous sources, that some central government agencies had told staff to leave their iPhones at home and other foreign handsets. Our understanding from Bloomberg sources is that there is a consideration this is extended to a broader range of government agencies, but also state-backed enterprises as well.
Now, the iPhone ban is also weighing on some of Apple's suppliers. Bloomberg's Abigail Doolittle explains.
These, of course, are the chip companies that make the chips that go into the iPhones. So you can see how it would be a distress for some of these companies, especially those that gain more revenue from Apple. For Skyworks, 58% of their revenues comes from Apple. Qualcomm, 23%. Micron, 6%. And then Cirrus Logic, 83%.
All right, so let's check in with some of these suppliers right now. You have Skyworks down about 7%, Qualcomm down more than 6.5%, Micron right now down about 0.5%, and Cirrus Logic down about 6%. Mortgage rates in the U.S., well, they've fallen for a second week in a row. The average 30-year fixed loan fell to 7.12%. Now, that's according to Freddie Mac. Mortgage rates, they've really been above 7% for the past 4 weeks and have more than doubled since the start of 2022. Higher borrowing costs really slowed home sales, sidelined a lot of buyers, and squeezing affordability. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Hi from the Interactive Brokers studio at 731 Lex, the main headquarters of Bloomberg. This is Simone Foxman. Matt Miller's gone off to do TV. Paul Sweeney will be with you later in the afternoon. So I'm joined with Bailey Lipschultz here. We're looking at stocks, big situation. NASDAQ continuing to be down about 1%. Only bit of brightness here is the Dow Jones, and just this mood overall has been a bit of a sober one here. But first, let's get you a look at some of our world and national news with Nancy Lyons in Washington. Nancy.
Thanks, Simone. If the presidential election were held today, it looks like a tight race between Joe Biden and Donald Trump. A new CNN SSRS poll indicates Trump would be the choice at 47%, Biden at 46%. But Bloomberg's Ryan Teague Beckwith says the poll shows a wider gap if former South Carolina Governor Nikki Haley is the Republican nominee.
The only number that was at all real was Haley's lead over Biden, which was 6 points.
Ryan Teague Beckwith says that's significant because the poll has a margin of error of plus or minus 3.5 percentage points. The Food and Drug Administration plans to greenlight updated versions of the COVID boosters as early as tomorrow.
Sources familiar with the FDA's plans tell NBC News that the latest shots are designed to target the XBB.1.5 Omicron subvariant, even though that strain is no longer dominant. But drug makers and health experts say the boosters should still offer some protection against these newer subvariants. After the green light from the FDA, the Centers for Disease Control and Prevention and its advisory committee will issue its recommendations about who should get the shots and how they should be used. Amy Morris, Bloomberg Radio.
A murderer who made a brazen escape from a suburban Philadelphia jail yard last week remains on the lam. Ryan Drummond says he saw Danilo Cavalcante in his home going for their food.
I saw him come out of the kitchen into the living room, back to that French door and out the deck. By that time, I grabbed the phone for my wife, was telling the 911 responder he's in her house, or he just left.
Authorities in Westchester County say Cavalcante scaled a wall, then climbed over razor wire to escape. They continue to expand the search area that's filled with forests and thick brush. He's believed to be armed and dangerous. He received a life sentence last month for killing his ex-girlfriend in front of her children. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Simone and Barry.
Nancy, thank you so much. I just want to bring you a couple updates on Hurricane Lee, which has been traveling through open waters in the Atlantic. Could be the first Category 5 storm of the Atlantic season. President Joe Biden has been briefed on the trajectory, according to the White House, and FEMA has pre-deployed assets to Puerto Rico. So we hope the folks in Puerto Rico and the Virgin Islands, also assets there, are going to stay safe. But with that, let me turn on the climate impact. Some people that maybe you don't have to feel quite so badly for, even though they are being impacted by these hurricanes. It is the billionaires in Biscayne Bay. Bailey.
Exactly, Simone. We're seeing a story on the terminal. Headline is Ultra Rich Pay $620,000 to shield mansions from disaster risk. Basically diving into the fact that some of these ultra luxe mansions, A-listers like rapper Rick Ross, Ken Griffin, Alex Rodriguez, where they're paying north of $600,000 a year just for home insurance. Simone, just last year, the same policy cost closer to $200,000. So we're seeing these costs basically more than triple as a lot of these companies kind of grapple with insuring homes that are at risk to climate
Yeah, this
change.
is nuts. And one insurance broker says she's been seeing rate increases of up to 800% as kind of close to the norm. That's stunning, right?
That's wild. You're looking at the nominal cost, which is more than most people spend to buy their homes. And looking at Florida in particular, Simone, the problem really boils down to the fact that a lot of these ultra luxe mansions are being bought in areas that would be at risk from rising sea levels, more frequent storms, and how that can impact the ability to insure those.
I guess the good thing is for those in South Florida with these 5- and 6-figure policies, these are billionaires, mere multimillionaires potentially, who have flocked to some of these beautiful areas. And it is beautiful. I have been to Florida. But we leave you from New York, Bailey Lipschultz, and I from the Bloomberg Interactive Brokers studio. Sound On with Joe Matthews starts right now.
from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? Is the economy stupid? Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the eight ball. To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
America embraces the labor union. Welcome to the fastest show in politics as General Motors offers a 16% pay raise to avoid a strike by the UAW. We're joined by Gallup's editor-in-chief, Mohammed Yunus, in studio with us today. He's out with new research showing labor unions are enjoying high support in the U.S. across the country, just as we approach this possible auto workers strike, by the way, as early as next week. He's also got the latest on the presidential campaign as Donald Trump girds now for a 4-month trial in Georgia. We'll have more on that from Bloomberg legal reporter Eric Larson. He joins from New York in a moment. We'll also talk this hour with Congresswoman Susan DelBene of Washington on regulating AI, competing with China, and whether Democrats can take the House back in this next election, with analysis as well from our panel. Bloomberg politics contributor Rick Davis is with us, Republican strategist, joined today by Democratic analyst Lincoln Mitchell. We've got a full show coming up here, so stay with us. And we start, as always, here on the radio and on YouTube with a look at the markets. And Charlie Pellet. Hey, Charlie.
All right, thank you very much. Joe Matthew, we've got you covered. Stocks trading mixed right now. Midday, we have got the S&P 500 index down 15 at 4450, drop there of 0.3%. The Dow, though, holding on to a 72-point gain, up by about 0.2%. NASDAQ in the red by 148 points, down now by 1.1%. Certainly Apple weighing on indexes today with, we've got Apple now lower by just about 3.3%. 10-year yield, 4.26% on the 10-year, with the 2-year at 4.96%. Spot gold up $1.50 the ounce to $19.18. Little change there, up by about 0.1%. West Texas Intermediate crude down 1.1%, 86.52 a barrel. Brent at 89.63, back below $90 a barrel. Weekly jobless claims dropped to the lowest since February, 216,000. It is the latest evidence that the labor market is providing vital support. Productivity, worker productivity, improved in the second quarter, rising at a 3.5% pace, the most since almost 3 years. As for the economic backdrop, Matt Hornback is global head of macro strategy at Morgan Stanley.
We definitely have a combination of global growth weakening, particularly in Europe, followed by China. And then we've got what appears to be resilience in the U.S. economy. So that has allowed interest rate markets in the U.S. to keep hope alive for another 25 basis point rate hike from the Fed. And I do think the rate differential story does benefit the U.S. dollar, particularly when you look at real interest rates in the U.S. pressing up against fresh highs.
And you can hear more of that conversation with Matt Hornback on the Surveillance podcast. You can download it wherever you get your podcasts. Ford says it has raised the pay of 8,000 American hourly workers represented by the UAW a week before the union contract expires. Ford shares, they're down today by 1.1%. GM lower by 1.3%. Stellantis shares, they are down by 0.1%. Coming up, 3:45 Wall Street time, New York Fed President John Williams takes part in a moderated discussion with our Michael McKee at the Bloomberg Market Forum. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, many thanks and welcome to the Thursday edition. We call it Little Friday here at Bloomberg Sound On. Thanks for joining us on the radio or on YouTube, where we are now streaming, of course, from Washington, D.C., and invite you to join us there on our YouTube simulcast. Search Bloomberg Global News on YouTube, and it'll be easy to find. I hope you'll meet us here with our guests in the studio. We've got a lot to talk about here in a really busy hour, beginning with the legal woes of the former president, Donald Trump here, who's looking forward to a trial pretty soon, not only in Washington, but also in Georgia. We talked about the Washington trial. Special counsel being on the eve of Super Tuesday. Fani Willis in Georgia wants to start October 23rd, and now we're understanding that he and his 18 co-defendants could be bracing for a trial as long as 4 months, or maybe I should say as short as 4 months. Let's get to this right now with
Eric Larson, glad Bloomberg legal reporter is back with us with the latest on the Fulton County case, among other issues. Hey, Eric, it's great to see you in New York. Thanks for coming in here. The idea of this getting done in 4 months, is that realistic or not when you know we have 19 people, at least as many as 19 on trial?
Well, that was the estimate that was provided by one of the prosecutors in the case, based on their estimate for presenting their case against all 19 defendants. So that wouldn't even include jury selection or hearing testimony from the defendants if any of them decided to testify. And the judge himself said at this hearing yesterday that he suspected the trial could last a lot longer than 4 months. But the state is going to argue that a lot of these claims and allegations overlap. That's why they're all accused of this so-called racketeering case here. So a lot of it will overlap, but they said they should be able to do it in 4 months.
Well, Fani Willis is apparently the queen of the RICO case, as we have heard repeatedly. But if you look at the history around that, the case involving Young Thug, I believe, is the name, took like twice the amount of time that has been allotted here. Should we be thinking about an 8-month trial?
I mean, certainly. I think that it could last that long, but a lot of this depends, on whether or not the judge is going to allow all of these defendants or most of them to go to trial together. That is what the state of Georgia currently wants. It looks like at least 2 of them are going to go to trial October 23rd under the state's so-called speedy trial law. They said, hey, take us to trial right now. So it remains to be seen how many of the defendants will actually go to trial that soon. But even if you look at a group trial much further out with most of the defendants, it could easily go beyond 4 months. The prosecution also said yesterday at this hearing that they had identified as many as 150 potential witnesses. And then plus you have, as the judge noted, separate defense teams for each of the 19 defendants who potentially would want to do their own cross-examinations and have their own questions and things like that. So it could easily be drawn out much longer than they expect.
What's the likelihood that all of these co-defendants are in fact tried at the same time? I know that Mark Meadows was trying to peel off that this may not be such a large number when we get down to it, or is it impossible, Eric, to speculate on that?
It's hard to know exactly what will happen here because it seems like even the judge doesn't know. You mentioned the Mark Meadows trying to move his case to federal court from state court, and several others have done the same thing, and no decision has been made on that yet. And it's also unclear if even one of those defendants does move the case to federal court. There's a chance that the entire case could be moved to federal court. The state court judge raised that as a possibility, at this hearing yesterday. So there's a lot of potential for different types of trials happening here.
Boy, it's getting confusing, Eric Larson. Do we still believe that the special counsel's January 6th trial will be the first for Donald Trump?
I sort of suspect that it will. I don't. This is just a guess, but it's based on the judge in Georgia yesterday calling this October 23rd trial date unrealistic. That was the word he used. It seems like there's a good chance that this huge group trial could be pushed out further, and that frankly, these other federal cases that you mentioned, by special counsel Jack Smith, that some of those could move forward sooner, just based on whatever negotiations, if any, they have behind the scenes.
It's going to be the most watched show on television. Great to have you. Eric Larson, Bloomberg legal reporter. Of course, it's Georgia I'm referring to there. I can't imagine what Muhammad Yunus thinks about all of this, although he is out with, this is, of course, the editor-in-chief at Gallup, a friend of the program, and out with regular data on the campaign trail, and there's a lot more that we're going to talk about. This is what Tom Keene would call a movable feast. That's the deal when Muhammad comes here. It's wonderful to see you, and thanks for coming to see us in studio.
Thank you so much, and thanks for using Tom Keene to welcome me. I'm a huge fan of his as well.
You have to smile on the radio now. We're on camera.
Yeah.
Of course, you're made for all of this, so let's do this. We're coming off a conversation about Donald Trump's legal challenges here. It is likely that he will be dealing with more than one trial, certainly 4 indictments in the throes of a presidential election. The polling has shown this not to hurt him in the primary. Does it become a different story in the general?
If the past is similar to future, no. I mean, we have seen former President Trump, go through a lot of different ups and downs with the legal establishment at this point, with the justice system, and it really hasn't moved a lot. His base is really solidly behind him, and I would not expect dramatic change in numbers in terms of at least his, a favorability rating or approval.
Not like any of this is a surprise to any of his supporters, right? Nothing here is changing their view.
Not just that. I mean, one thing that's fascinating, Joe, is, we've been asking these questions about various issues now for generations. The last 20 years, the biggest partisan gap between Democrats and Republicans on any issue has been the size of the federal government. And it's no surprise that former President Trump is framing his entire defense really as somebody who's a victim of government overreach, right? So the more that he does that, he actually is fueling right into that biggest divisive issue between Democrats and Republicans today. It's not abortion. It's not the environment, although there are huge, differences there and they've increased. But the perception of government overreach is really a very radioactive, if you will, topic for his base, and he's been hitting it hard.
As opposed to Joe Biden, who's been struggling in the polls. You've got an approval rating. This is just out last week at 42%. Your headline at Gallup News, higher on Ukraine and race relations. It's interesting, higher on Ukraine, because we're about to walk into a very difficult debate about Ukraine funding, and we know that there are a lot of Republicans watching who don't think that we should be doing this. Is this becoming a Democratic cause?
That's a great question. There are definitely Republicans that don't think we should be doing this. The interesting thing about the Ukraine issue is at a time of heightened partisanship, Republicans have been really split on whether or not to continue to support Ukraine at the level that the U.S. is doing it or not. So even though there are very vocal Republicans, and about 40% of them do think that we should get out or end it as soon as possible, there's basically another half of them that say, no, we need to stay the course.
And that fault line seems to be right between the Senate and the House, isn't it? Mitch McConnell's on board. The Republican leadership in the Senate. Ask Lindsey Graham what we ought to be doing right now. No qualms about it. He sounds exactly like Joe Biden on this. But if you talk to Speaker McCarthy and go down into the rank and file in the House, it's a really different story.
It is. And at the national level, though, this is what's fascinating. We did a recent analysis of just public figures across the world and how Americans felt about them. With the exception of members of the British royal family, President Zelensky actually was at the top of the list. So Americans have a very positive perception of him as a leader. And you could imagine how that is impacting or helping, really, Joe Biden as he continues to support him and stand by him in this conflict.
42% higher on Ukraine. The Biden campaign, I haven't said that in a minute, is out with a new ad called War Zone. We're going to review it with our panel straight ahead. It's almost like a movie trailer. You'd think he's about to show up in a Mission Impossible movie. Yeah. He's strutting down the streets of Kyiv there, meeting with President Zelensky. Just to give you a little bit of a taste of this. Again, it's called War Zone. Not that the title matters, but they are putting this on TV. I guess we'll give that a whirl. I can't hear it, at least, Mohammed. That is a liability or a help for Joe Biden in the campaign as we move forward in this debate?
Ukraine in general.
Yes, exactly.
That's such a difficult question to answer because the war is not going as anyone supporting Ukraine would have hoped, right? The counteroffensive is really stalled. Secretary Blinken is there. I believe still today. He was there yesterday. A lot of the answer to that question, Joe, depends on how the conflict proceeds. If nothing changes and it really does feel like a settlement is the best option and there isn't a lot of progress going to be made, you can imagine that the argument of pulling back support and putting more pressure for folks to get to the negotiation table will absolutely increase, and that's going to hurt President Biden's position.
I want to transition to a breaking story today. GM is out with its offer to the UAW, counteroffer is a better way to put it. We know that the union was asking for a lot here, a 32-hour work week, a 40% pay raise. GM says, how about 16%? We saw the union leader, Sean Fain, throw Ford's offer, its contract offer, in a garbage can in front of membership recently. This is getting hot. We're hearing about the hot labor summer, right?
Yeah.
You're out with new numbers that show America is behind this movement.
Americans are more favorable of labor unions than they've been in recent years. So we ask about labor unions in a lot of different ways. We ask whether or not you approve of them, and that number has gone up. But we also ask specifically, who do you side with in the auto workers showdown and the two in Hollywood with writers and actors? And the public at 7 in 10 to 6 to 10 side with workers. So public opinion is certainly on the side of workers. I don't think that's shocking.
Yep.
But what's really interesting is that Americans expect labor unions unions to increase their influence in the country, and a growing number of Americans actually want to see that happen. So all of this is unfolding at a time that really puts a lot of wind in the sail of unions and workers and that side of the negotiation table.
67% of Americans, I realize it's down from 71 a year ago, but most presidential candidates would pay a lot of money for that number.
Oh, yeah. I mean, we haven't seen a presidential candidate have that kind of number for 2-3 presidential administrations at this point. So, yes, absolutely. I mean, Americans, and the trend shows it. Overall, they're very pro-worker in their paradigm. But situations differ. And actually, I was really fast as an LA kid. I was very fascinated to see what the numbers would look like for the writers and actors.
Yes, sure.
But they're actually very similar to the auto workers. So it's not an industry-specific thing. When you ask Americans about who you with, the worker or the employer, they tend to side with the workers.
It's really something. You wonder what that means for enrollment. Union membership is at a low.
Yes.
I mean, that could be a changing story as this becomes a major conversation in mainstream media. Joe Biden talks about it every day. He's the most union-friendly president of all time, he says. If that number holds at 67%, doesn't that help him win re-election?
It does. I mean, this is a strong speaking point for President Biden and for Democrats in general. The other thing that we haven't discussed here is one of the biggest factors in all of our lives, Amazon, is also going through this process of folks trying to start a union as workers. So it will be really interesting to see how that develops.
Especially when people's prices might move on that.
Exactly. So other than auto workers, we all have a car, but maybe not a Ford. We all watch movies, but maybe we don't watch Hollywood movies. But almost everybody's ordering stuff from Amazon these days. And if those numbers go up, if those prices go up, it could really change that attitude.
And buying coffee at Starbucks, already pretty expensive. There's a movement to organize at Starbucks around the country. It's a delicate conversation, but it's one that it feels like it's moving right now, and I'm sure that you're going to continue running numbers on this.
Absolutely, and it really is moving, and we're going to continue to track it and ask more detailed questions. One of the really interesting angles is we also asked about what unions do to the economy and perceptions of it being a good thing, not only for workers, but the economy in general, and even workers who are not unionized are on the rise.
Amazing. Great conversation. It's wonderful to see you. Mohammed Yunus, Gallup editor-in-chief. You're always welcome here, and we always want to know what you're working on, so stay in touch with us.
Thanks, Joe.
Of course, at Bloomberg Radio and Bloomberg TV. It's the fastest show in politics, and we assemble our panel next. Rick Davis joins, of course, Bloomberg Politics contributor, Republican strategist, alongside Lincoln Mitchell today, Democratic analyst. All the stories that we've been talking about, from the campaign trail to this breaking story on the UAW. By the way, we can tell you that GM's offer that I just mentioned, a 16% pay raise, rejected by the UAW. I'm Joe Matthew. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, the S&P, NASDAQ. They are both declining right now. Stocks are retreating amid concern over how a Chinese ban on Apple's iPhone could impact other segments of the American technology industry. Apple shares, they are down now by just about 3.5%. We've got the Dow being led higher today by Intel, shares of United Health Group, and also Amgen pushing the Dow 30 index higher. S&P lower by 11 points right now, a drop of 0.3%. The Dow, by the way, up 0.3%. NASDAQ down 1%. The NASDAQ 100 index, full of those big tech stocks, down 0.8%. 10-year yield 4.26% for the 2-year, 4.96%. Spot gold up $2 the ounce now to $18.19, up by 0.1%. West Texas Intermediate crude down 0.7%, 86.91 per barrel of WTI. Brent back below $90 a barrel now at 89.94. GM has made a counteroffer to the UAW, proposing a total 16% pay hike for the top wage earners in its plants and a 55% hike for newer employees who make less. UAW President Shawn Fain reacted quickly, saying that proposal is insulting. GM down 1.3%, Ford down 1%, and Stellantis, the parent of brands that include Dodge, Chrysler, and Fiat, down now by 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
If you thought the presidential campaign trail was like a war zone, well, now it's actually gotten that title in a new ad from the Biden campaign, War Zone, showing him on his visit to Ukraine. Remember this? He showed up unannounced in Kyiv a couple of months ago. And as we consider the forthcoming debate over Ukraine funding and the numbers we just talked about with Mohammed Yunus at Gallup showing support for Ukraine here, actually helping Joe Biden's approval numbers, the campaign is out with this new ad. Let's put an ear on it as we assemble our political panel and get their take.
It was the first time in modern history
very significant moment on the world stage
that an American president went into a war zone not controlled by the United States.
A nearly 40-hour journey in and out of Ukraine.
President Biden left Washington, D.C. at 4 a.m. on Sunday. He landed in eastern Poland and then took a 9.5-hour train to Kyiv.
He entered Ukraine under the cover of night. And in the morning, Joe Biden walked shoulder to shoulder with our allies in the war-torn streets.
Sounds like it could be a trailer for a Mission Impossible movie. As I mentioned, he looks like an action hero when the sun came up the next day. Rick Davis joins us now, Bloomberg Politics contributor, Republican strategist, along with Lincoln Mitchell, political analyst, Democratic analyst, and lecturer at the School of International and Public Affairs at Columbia University. Gentlemen, it's great to have you both. Lincoln, thanks for coming back in the mix. Lincoln, I'd love your take on this first. From the view of a Democrat that might not be completely enthralled with the idea of waging wars around the world here or supporting war efforts, does this help Joe Biden? And maybe it's not about the war. Maybe it's about him looking young and virile as he showed up in the quote-unquote war zone.
That's what struck me. And again, I'm here, so I heard the audio. And you heard the stress, even just in the audio, how long that trip was, how arduous it was, how he rode down the street. So this seems to be very much about his showing that he's not too old for the job. Second point, going to your point about the war itself, it's very clear to me that the war, Ukraine's war defending themselves against Russia, is on a kind of visceral level what mobilizes the Biden presidency right now. This is the presidency he wants. This is where his passion is. He cares about the other things, but this seems to me, he sees himself as, I'm the guy that is stopping Putin from taking over Europe. You agree or disagree whether or not that's true. I think your previous guest, Mr. Yunus, had it exactly right. If this war drags on, if we are mired in a counteroffensive where Ukraine is not making any progress, the question of, does it make sense for the United States to continue to give money and Ukrainian people to continue to take civilian and military losses to get, while we're stuck in a stalemate where we're going to have to start talking and start negotiating, that's going to become a campaign issue. I know from people who are much closer to this than I am that Putin won't negotiate with Zelensky. He will only negotiate with the United States, which for now means President Biden. So that will become an issue if this drags on. But the other point is that, Trump doesn't support Ukraine at all. And once he's formalized as the nominee, that will also potentially be a campaign issue where Trump's, again, kind of shady ties to Putin are going to be hard to ignore.
What do you think of this, Rick, as someone who's run campaigns for a number of Republicans, including a very famous and iconic war veteran here? It's the Democrat that's going to carry the war mantle in this campaign?
Yeah, I mean, Joe Biden doesn't have anything to prove about being commander-in-chief. He's been commander-in-chief for almost 3 years. So I'm a little surprised, actually, that he would take a time out from the debate on the economy to pitch the Ukraine war. I mean, he just released a week ago a pretty good ad on, his accomplishments around the economy. Every poll I've seen says the economy is the number one issue in voters' minds. And by and large, the Democratic Party, as Lincoln says, supports the war in Ukraine. And so why talk about that now when you've really got the hurdle of the economy? Just seems like an odd U-turn for this president. I'm glad he did it. Big proponent of U.S. support for the Ukrainians in their war against Russian aggression. And I'm worried about making sure we get the necessary funding from Congress. So the timing is good to try and convince Congress. But I wouldn't spend campaign resources on lobbying Congress. That's what the White House Legislative Office is for. I think I would focus on the economy if I were still, advising the Biden campaign.
Or as Lincoln mentioned, Rick, is this more about showing that he actually has the wherewithal to take that train trip and go around the world, that he is not as old and incapacitated as Republicans suggest?
It's a great way to lead in. Is he really as old and incapacitated as we say he is? No, but he is a little old and a little incapacitated. I do think that that's what this ad was about. I think Lincoln and you got it spot on. I think this ad was all about his energy and getting up at 4 o'clock in the morning. And, I actually think that the real name of this ad should be Quiet Strength, which is the point they're trying to make. Not, that it was the war zone. And I think that, it's a good ad. And I do think it addresses some of that issue of his age.
Interesting polling data while we're talking about the presidential campaign here, Lincoln, and the idea that it's going to be a Biden-Trump matchup. We've got new data out today that shows former Governor Nikki Haley is actually polling above Joe Biden, beating Joe Biden in a hypothetical right now. This is a CNN SSRS poll. Say what you will about it. Haley's got 49%, Joe Biden's got 43%. So maybe this is a greater concern for this White House than, say, a Ron DeSantis. What do you think?
Well, pretty much every Democrat I know who's really focusing on this recognizes that Haley, Tim Scott, and potentially even Asa Hutchinson are the strongest candidates against Joe Biden in November of 2024. However, Trump's lead is very strong, and we can't state that strongly enough. We have this way in talking about campaigns of saying it's so early, it's so early, it's so early. If I can make a baseball metaphor, it's like we keep thinking it's the first inning, we wake up and it's the 8th inning. It's not the 8th inning yet, but in this day and age, we're now in basically, September, 14 months before the general election votes are cast. 20 years ago, 30 years ago, people didn't even announce their primary candidacies till around now. But this race, this primary race on the Republican side has been going on for a long time, and there's very little reason to think that Trump is going to lose it. He, like Biden, is older and might have a health issue, but I can't speak to that. The indictments and the trials do two things. They solidify his base, and they keep him in the news, which will only help him. Having said all that, it's absolutely true. Nikki Haley is a stronger general election candidate than Joe Biden, but most people understood that on the Democratic side, months ago. We are in a strange situation here, and I think the poll that you discussed earlier in the segment captures that. The only Republican that Biden has a real chance of beating among the major candidates here is Donald Trump. And the only Democrat that Donald Trump has a real shot of beating would be Biden or his vice president. If this were Trump versus Whitmer, Whitmer gets 330 votes. If it's Trump versus Warnock, it's the same kind of thing. And if it's Scott versus Biden, the Republicans have a real shot. But this is America, and nobody wants another Trump-Biden race, and it looks like that's exactly why we're going to have one.
Which brings me to Kamala Harris. Asked in 2 separate interviews, she's at the ASEAN summit in Jakarta, first by the Associated Press, then by CBS. Are you ready to be president? And in both interviews, the age issue was brought up as the premise of the question. I want to walk through these very quickly. First asked by the Associated Press about this. Listen to her response.
Do you feel prepared for that possibility? And serving as vice president prepared you for that job?
Yes.
And how would you describe that process?
Which
Like
process?
as far as being ready for that.
Well, first of all, I'm answering your hypothetical. But Joe Biden's going to be fine. So that is not going to come to fruition.
Joe's going to be fine, she says. That's the AP. That was a definitive yes before the follow-up, then asked by Margaret Brennan on CBS. This will air on Sunday.
The Wall Street Journal had a poll showing 2/3 of Democrats say Joe Biden is too old to run again. Are you prepared to be commander-in-chief?
Yes, I am, if necessary. But Joe Biden is going to be fine.
Joe Biden's going to be fine, Rick. Is that the answer that the vice president should be delivering? And did you see any variation between these two? The definitive yes followed by the qualifier?
Well, you should never be answering this question. I mean, John McCain had a great line about, what vice presidents should say. Their job is to inquire daily on the health of the president, period. No more. I mean, it's just nuts that's a hypothetical question, but I'm going to answer it definitively. Yes, I'm prepared. I mean, who's briefing her? I mean, that's just horrible. No, I mean, she should not be getting into this speculation. She should be sensitive to the fact that 2/3 of her party want to see Biden get out of this race, and she should not get into any discussion of a successorship to Joe Biden, especially because the fact is he's 80 years old, and it just reinforces the fact that there could be something that happens to Joe Biden if he wins a second term.
How do you answer that question, Lincoln? Is Kamala Harris hearing from Democrats say, hey, stand up, say yes to that? It might happen.
I don't think she's hearing that from Democrats, but I think she said basically the right thing. I generally agree with Rick on that, on his assessment, on John McCain's assessment of the vice presidency. And I think when John McCain had many strengths as a U.S. senator and was really, a fine senator and a fine American leader, but choosing running mates may not have been his greatest strength. But because the Republican Party, Nikki Haley primarily, but others in the party as well, are making this election about Harris, she needs to go on record and saying, yes, I'm prepared. And, I don't know Kamala Harris, but we do come from the same town. I know a lot of people who know her. And I can assure you, that infuriates her. There's a part of her that's saying, why do I get asked this question? Dan Quayle was, prima facie unqualified and unprepared to be president. Always, his running mate was older. He wasn't asked that question. But I think she has to say yes. And then she has to qualify it by saying, look, but Biden's going to be the nominee, and he's going to be fine. So I think she handled a question that she might have seen as inappropriate about as well as she could.
One guy we're not talking about is Ron DeSantis, Rick Davis, and he had quite a moment today holding a news conference in Jacksonville, Florida, where, of course, that mass shooting took place a couple of weeks ago. We remember him being booed with the First Lady when he showed up at a vigil because he does not have a great relationship, I think we can say, in many cases, with the black community in Florida due to a number of issues going back through the history books here, along with, my goodness, I won't do the whole litany. He was holding a news conference today when this gentleman stood up to ask a question. It's a somewhat extended exchange. I'd like for you to hear it and tell me how this clearly important moment played, either for better or worse. Let's listen.
Trayvon Martin was not the first.
So first of all, I did not allow anything with that. Well, listen, excuse me. I'm not going to let you accuse me of committing criminal activity. I am not going to take that. I am not going to take that. So you want to have a civil conversation, that's one thing. Try to say that I'm that guy was Baker acted. He should have been ruled ineligible, but they didn't involuntarily commit him, and so they were. No. There is the truth. There is something about the truth. It's not everyone doesn't have their own truth. No. You don't get to come here and blame me for some madman. That is not appropriate, and I'm not going to accept it.
You have allowed people to hunt people like me.
Oh, that is nonsense. That is such nonsense.
If you didn't hear him, he said, "You have allowed people to hunt people like me," the audience member in that back and forth with Ron DeSantis. This is very sensitive stuff, Rick, but it's a moment for a candidate. Does this help or hurt Ron DeSantis?
You know, look, I think that this reinforces the Ron DeSantis we're getting to know, which is he's a combative guy. He's not going to sort of be kinder and gentler on the campaign trail. He's not going to tolerate people interrupting him in a crowd, whether it's deserved or not. And he's going to stand his ground. So this just reinforces to me that this is the Ron DeSantis that they want us to see and hear. It's just who he is, I think. It's just a matter of practicality. It's the truth, as he says it. And I think voters are going to have to sort of, if they want Ron DeSantis to be their nominee, they're going to have to get used to that. And it's a little different, right? It's not your typical approach to dealing with people in crowds that ask hard questions or even questions that aren't accurate. Most people who ask questions aren't accurate, but they get answered anyway because it's the candidates, really their obligation to have this conversation with people in a crowd. And, you know, he just chooses a different path. We'll see whether or not it's been effective. It hasn't been to date, but he's doubling down on that approach.
Well, it sure seems to be the case. We'll see how this resonates. It's a moment that I wanted to identify while we had our panel with us. Rick and Lincoln are going to hang out and talk with us a bit more later on this hour as we bring in Congresswoman Susan DelBene. I'm glad to say the Democrat from Washington is back with us on Sound On, Chair Emeritus of the New Democrat Coalition, Chair of the DCCC. Congresswoman, it's great to see you. And what I guess is your last week of freedom here. I know you're back in Washington next week, and so I'd love to start there. It's great to have you, by the way, with us on YouTube. It's a big week for us on Sound On, and it's good to actually see you while we're talking here. Are you prepared to vote for a continuing resolution if it avoids a government shutdown?
Well, I think our first priority always is to make sure we have good funding for the entire fiscal year. Unfortunately, Republicans have avoided doing the work that is necessary to come up with legislation that can fund the government that has strong support in the House and the Senate and will be signed by the president. So a continuing resolution can be a backstop, but the concern there is what they're going to attach to a continuing resolution, what requirements they're going to put in place. So we really need to see what legislation they might propose to put on the floor of the House.
Well, to put a finer point on it, the news today is that Speaker McCarthy wants to detach the supplemental request for Ukraine funding and simply go ahead with funding for FEMA, for disaster relief, and the border. Is that something you could stomach, or do you need to have the full request in a CR?
Well, the number one thing is the fiscal year ends at the end of this month. And we're in a place where folks don't know what's going to happen on October 1st. So we need to provide that certainty. We can provide strong funding, but whatever they're going to try to attach and what that is and the substance of it is going to be very, very important to see. And I don't think they know yet. I don't think Speaker McCarthy knows what he's going to put on the floor or even what his caucus would support. So he needs to figure that out. But if he was willing to work with all of us and work with the Senate to have a clean continuing resolution to keep the government funded, that would be a great way to move forward.
We're having an important conversation about AI, and it's one that you have waded into in an op-ed in Newsweek that I'd like to ask you about. We've heard Senator Chuck Schumer say that he's working on a bipartisan approach here to get some regulatory legislation in the works. It's kind of hard to imagine that happening in the climate that we're in. But in your op-ed, you're talking about privacy here, and you say the first step is a national privacy law. Is there an appetite for it on Capitol Hill?
Well, there has been, and I really think that as we look at technology policy broadly, we have to start with the fundamentals, and the most fundamental piece is privacy. Privacy means you being able to protect your most sensitive personal information, not allowing people to take information about you in many cases that you aren't even aware of. and use that information in ways that you don't expect or sell that information. It's very important that we have federal consumer data privacy legislation. And we have some states who put some pieces of legislation in place, policies in place, but we need one consistent federal law so that your data is protected everywhere. And it's also incredibly important because that's policy that we need to bring to the international table as we talk about what international policy looks like. When we don't have domestic policy, we really struggle to set direction where we think international policy should go. So data is a place to start because what feeds AI? Lots and lots of data. And we should make sure that we're protecting data as the first place to start.
Well, we know it's creeping into the political space, and I'm sure you saw the headlines today about Google. This feels like a moment to me as well. We've seen AI and, deep fakes creep into some political ads, not to mention the way campaigns might be able to use that as an organizing tool. But look at this now. Political ads using AI on Google and YouTube must soon be accompanied by essentially a watermark, a prominent disclosure if imagery or sounds have been synthetically altered. Are we getting our arms around this, Congresswoman, or is it moving too fast for us to do so?
Well, first I'd say from a policy standpoint, we're behind because as I talked about privacy legislation, we should already have privacy legislation, federal privacy legislation in place. That's why I have such a great sense of urgency about that. But you're going to continue as we continue to battle misinformation, disinformation that folks are seeing, and the impact AI can have. You're going to continue to see organizations try to figure out what they think an environment should look like, how they should make sure that misinformation, disinformation, or at least what type of labeling should be out there to highlight anything that might have been manipulated so folks are aware. But I actually think there's an important role for the government to play in putting policies in place to really describe what the rules of the road are going forward. And we haven't done a good job of that, folks. It's a complicated issue, but folks have been hesitant to put policy in place. And that's why I go back to privacy, because that's the fundamental building block. We've had legislation we've debated and looked at, and we need to move here so that we can continue then to build on all these other issues that are going to continue to either continue to move forward and become problematic, or issues we don't even know about yet that are going to come up and that we're going to need to tackle. So we need to make this a priority. We need to move quickly.
Well, we sure do. I don't know how many of your colleagues know as much about this as you do, but they need to start catching up quick because this is a very important story for us here at Bloomberg, and it's one that we'd like to stay in touch with you on, Congresswoman. Your colleague from Massachusetts, Seth Moulton, was calling for a Geneva Convention for AI. There's a whole military side to this as well. We could talk about this all afternoon if we wanted to, but getting to this from a privacy standpoint, I'll be very curious to see how much progress you can make here. Our viewers and listeners should know that, as I mentioned, you're chair of the DCCC. This is the agency that is actually tasked with getting Democrats elected and reelected in the election cycle. You've got a lot on your plate going into this new year. Are you going to take the majority back from Kevin McCarthy?
The American people are with us. That's why we'll take back the majority, because folks want to see governance work. They want responsible leaders who are going to tackle issues and help move us forward. And what we see now is chaos and confusion and dysfunction from the House Republicans. They are being led by their most extreme members of their caucus and continue to move more and more to the extreme. And we're seeing that dysfunction right now as they put us on a fast track to a shutdown. So we need responsible leaders. We need folks who can legislate. We saw what we could get done when we had Congress led by folks who wanted to focus on the issues the American people care about, like infrastructure and bringing jobs back to the U.S., manufacturing jobs back in the U.S., making sure that we're tackling the climate crisis and the cost of prescription drugs, All of these are things that we did last Congress and with strong leadership, and we can do again if we have strong leaders. But unfortunately, that is not at all what we see in the Republican House in particular.
To what extent, if we have a government shutdown, and I know that you've weighed in on that, you obviously don't want to see that happen, but for a lot of people in Washington, it's a foregone conclusion. For some members of the Freedom Caucus, Congresswoman, they're actually asking for that. They said, don't fear the shutdown. There's going to be a whole blame game that follows there based on what happened. Does that advantage Democrats, in your view, if the government shuts down this year?
Unfortunately, we've seen shutdowns before, and they have a broad impact across the country, and are incredibly damaging to our communities. They're incredibly damaging to our economy for no reason at all. We can absolutely make sure that government stays running and continues to do the important work that it does. But if we shut down just because we have these extreme members of the Republican House who don't care, that's going to have an impact on our communities. Folks aren't going to be able to get answers to questions they have from the federal government. Things where folks are waiting for decisions on benefits or immigration issues, et cetera, will continue to be backlogged, will be backlogged longer. Funding that goes out for programs or even to families will all be stopped because there will be people to continue to move that forward. All for no reason. So it's terrible that folks even consider that an option or something that they think would be okay. It shows again how extreme the Republican Party has become and the dysfunction in the Republican House.
Well, I'll tell you what, coming up in the next hour, we're going to be talking with retired Marine Corps General Arnold Panaro about Tommy Tuberville's block on military promotions, which, as we've discussed many times here, is an objection to the abortion policy at the Pentagon. This is something that's got people really fired up on Capitol Hill on both sides of the aisle, frankly, but Democrats in many cases are outraged by it. Frankly, a lot of Republicans are too. I won't ask you to weigh in on the blockade, Congresswoman, but to what extent will abortion and access to reproductive health care be a major issue in this campaign to the extent that we saw in the midterms?
It already is a major issue. We're hearing from folks across the country, and you've even seen at elections that have taken place more recently, the impact of this policy. Folks across the country strongly stand with making sure women can make their own reproductive health decisions. They know and can see that this isn't Republicans talking about a states' rights issue. They are moving towards trying to put in place a national abortion ban. That is their goal.
But that'll be part of your messaging. You're gonna beat the drum on that in this campaign.
But it's what we're seeing right now. And people understand that. And it's had an impact in local elections, whether it's in what we saw in Ohio, recent elections in Wisconsin and Kansas. Folks understand that Republicans are trying to push for a national abortion ban. This is about health care, basic health care for across the country, about people being able to make their own decisions about reproductive freedom. It is an issue today and absolutely has an impact on the election next year.
Well, I know you've got some very busy weeks and months ahead, and Congresswoman, I'm glad you could join us here at the tail end of your, I won't say August recess, but we'll meet you back here in the Capitol, and thank you for joining us on the radio and on YouTube today on Bloomberg. Congresswoman Susan DelBene, Democrat from Washington, chair of the DCCC, with some interesting insights as we look ahead to campaign season. Let's get up to date here. We're going to reassemble the panel and get their take on what we just discussed after we get an update on Wall Street trading from Charlie Pell.
All right. I thank you very much, Joe Matthew. We're looking at a mixed market right now with the Dow higher, up by about 0.2%. S&P, NASDAQ 100 index, Russell 2000, Dow Transports, all in the red right now. 13-point drop on the S&P at 44.52, down 0.3%. Real damage is in tech land. Today we're looking at the NASDAQ 100 index, lower by 0.8%. NASDAQ Composite Index down 0.9%. again, the S&P, to put it all in context, down by about 0.3%. 10-year yield, 4.26%, with a 2-year, 4.96%. Spot gold up 0.1%, 19.18 the ounce. West Texas Intermediate crude right now lower by 0.7%, 86.93 a barrel. News Corp CEO Robert Thompson wants to negotiate with AI companies and avoid litigation as the industry responds to the perceived threat from the new technology. News Corp down 0.8%, a topic very much in focus in Washington. Right here on Sound On moments ago, Washington Democratic Congresswoman Susan Del Bene said when it comes to privacy and AI, what's needed is a national law.
Privacy means you being able to protect your most sensitive personal information, not allowing people to take information about you in many cases that you aren't even aware of, and use that information in ways that you don't expect or sell that information. It's very important that we have federal consumer data privacy legislation.
And you can hear more of the conversation on the Sound On podcast. And Apple's Alphabet's Google will soon require that all election advertisers disclose when their messages have been altered or created by AI tools. Recapping, S&P down 12, drop now of 0.3%. That, Joe Matthew. Bring back the panel is a Bloomberg Business Flash.
I like the sound of that, Charlie Pellet. Thank you. I'm Joe Matthew in Washington, and thanks for joining us on Bloomberg Sound On the radio and now on YouTube as well. Find us there by searching Bloomberg Global News, and you can join us in studio here. Kaylee Lyons will be with us in just a couple of moments as we reassemble the panel. Rick Davis and Lincoln Mitchell here after our conversation with Congresswoman Susan Del Bene. I have to ask you both about the Tuberville blockade. It's in the news here, and he does seem to be digging deeper in this blockade that's stalling now 301 to my count military promotions. His aides say the complaint is compounded by liberal woke sentiment among officers in line for top jobs. He put up a video on this just to get his own message across earlier today, and I want to bring you that. Again, this is the senator from Alabama who is in the throes of this blockade here. Let's start with Rick Davis and Lincoln Mitchell on this. Rick, as he digs in deeper and, says that he's not impacting national security, when are Republicans going to start getting louder on this, particularly in the Senate?
Well, you've got the perfect guest on next, and General Panaro, who's been actively involved in getting confirmations with staff officers like these that he's holding up past for a decade. But look, I think that Republicans are getting a little nervous about this. Everyone I've talked to in the Senate, just as soon this all go away, that they're in a very tough position that they want to be pro, military, and they see the pressure on the military family and getting decisions made only getting worse and worse without any real sort of tangible give on the part of Senator Tuberville. So nobody has a sense as to how this is all going to resolve itself.
What should Democrats be doing here, Lincoln? There's a move to try to get Chuck Schumer to bring these promotions to the floor, at least the chairman of the Joint Chiefs. Some say that would set a terrible precedent. Does he just sit back and watch?
Well, the temptation to sit back and watch, because this is such a bad issue for the Republicans. So Tuberville being the face of the Republican Party is great going into the congressional election, the presidential election 2024. From a substantive angle, Democrats should not be worried about setting bad precedents in terms of legislative procedure, because the Republicans do it all the time. So if it is really important for national security to get these promotions through, then we have to do it if it means going straight to the floor. I don't think that's a big deal, but Chuck is very cautious about these things. And he's also a very political guy. So my suspicion is that he's just happy to watch Tuberville, who is, he's a very conservative senator, but he's also this kind of clownish, far-right kind of guy who doesn't really know what he's talking about, who doesn't present, has all that steeped in policy understanding. So let him go out there and keep doing this. It's not helping the Republicans. I suspect that's what Chuck is thinking as well.
We talked about a couple of other things here with the Congresswoman, from AI to a government shutdown. Does it sound to you, Rick, as someone who's in charge in her case of getting Democrats elected and reelected to the House, that they're not actually concerned about that impacting Democrats' chances at the polls because Republicans will be blamed?
Yeah, look, I think it's pretty much what Lincoln said. I mean, this one's pretty straightforward. Party in power in the House gets blamed for what happens there. Her focus is congressional races. So, it's always easier at the campaign to be the opponent because you have the ability to put facts on your side, and incumbents always have the problem of making those facts fit a election cycle. So yeah, it's advantage Democrats on this if the election itself is basically even.
To what extent will abortion be an issue in this campaign? She was ready to answer that question, Lincoln, as opposed to the economy, inflation, or even the war in Ukraine, as we discussed earlier. The ad today says war zone. It doesn't say reproductive rights.
Well, the subtext of what she said is that she would like abortion to be a major issue in this campaign. Whether that will or won't happen, we'll have to wait. But I might take a slightly different cut at that question and try to answer it in a different way, which is if we look back at the 2022 midterm elections, we saw that for some voters, abortion was very important, and particularly younger voters, where turnout was higher than expected. And that really staunched what many thought would be a red wave, a huge Republican win. So for younger voters who are looking at what's happening in Congress, and I would join abortion with another issue, which is not directly related to it, which is gun reform. And if this election is about guns and abortion, Generation Z may well save the Democrats or deliver this to the Democrats again. If this election is about inflation and government overreach, it's going to be a tough race for the Democrats.
What do you think of that, Rick, if you were messaging against that premise?
Yeah, look, I mean, I think Lincoln's right about what 22 represented. I mean, you had Joe Biden at a horribly negative approval rating, and yet what saved the Democrats from a much worse outcome was abortion. No question, we saw that on the ballot. But also they did a good job of demonizing Republicans as being significantly right of center. And you see a lot of that, still continuing with the Biden administration. So I think that if you do have an issue set that tends toward economics and your advantage Republicans, if you see an issue set that trends toward social issues like abortion, maybe advantage Democrats. But we need to remember one thing. This is almost an evenly divided country. So the smallest little, weaknesses or strengths have a overriding impact on outcome.
You spend time with Gen Z on a fairly regular basis. Maybe it's younger than that. I don't know what we call it anymore, Lincoln. Are they going to show up on Election Day if those issues are in place?
My students and my sons are all still Gen Z, so I do spend a lot of time with them.
Got it.
On a regular basis. My sense is yes. And something else I see is that I know a lot of people in Gen Z who, if they were asked in a public opinion poll, do you approve the job Joe Biden is doing, they would say no from a left perspective. But when it comes to Election Day, they will go in and they will vote the Democratic Party from top to bottom.
All right. Lincoln, great to have you. Don't be a stranger. Lincoln Mitchell and, of course, Bloomberg Politics contributor Rick Davis. And some big thoughts this hour. We got a long way to go. Hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? It's the economy, stupid. Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball. To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Coach Tommy Tuberville digs in. Welcome to Hour 2 of Sound On as the senator from Alabama rejects calls to drop his block On Pentagon promotions in protest of the military's abortion policy. We're going to be joined in just a moment by retired Marine Corps General Arnold Panaro, who has very strong feelings about this, as we bring Kaylee Lyons back into the conversation for the first time in a couple of weeks here on the radio and on YouTube. Later on this hour, Mike Dorning, Bloomberg News Deputy Congressional Editor, shut down politics and the future for Senate Minority Leader Mitch McConnell. And we'll talk a bit later with Dan Flatley, Bloomberg News national security reporter, with the push and pull that we're hearing out of China. It's going to be a lot more difficult, it seems, to have an iPhone if you are in Beijing. We'll have a lot more on that straight ahead after a look at Wall Street. They're chiming in on this Apple story as well. But let's get to the markets with Charlie Pellet. Hey, Charlie.
Thank you very much, Joe Matthew. Indeed, top story, push and pull in terms of Apple today. The stock now down 3.2%. Stocks are retreating amid concern over how a Chinese ban on Apple's iPhone could impact other segments of the American technology industry. It is a big story as you start to expand. We'll have more on that coming up for you right here on Sound On in a moment. Bottom line here, we're looking at a mixed market. Yes, the Dow higher, up 87 points, up by 0.3%. The broader market, though, lower. S&P down 10, drop right now of 0.2%. Nasdaq down 116. That is a drop of 0.8%. Nasdaq 100 index, full of those big tech names like Apple, down 0.7%. Again, Apple, worth repeating, slumping now by 3.2%. 10-year yield 4.26%. The 2-year 4.96%. Gold up $1.71 the ounce to $19.18. That is a gain of about 0.1%. West Texas Intermediate crude down 0.6%, $86.99 a barrel. Lots of economic data. Applications for unemployment benefits fell to the lowest level since February, underscoring businesses' reluctance to let go of workers. Reaction to this morning's jobless claims data and other recent economic data points from Mike Schumacher, the head of rates and macro strategy at Wells Fargo Securities.
You got to look at the broader story here. So labor market, weaker than it had been, but still strong. Growth tipping a bit, but generally speaking, I'd say I wouldn't attach a lot of weight to any particular data point. And when you think about market movers, Facebook, frankly, and ISM even, don't really stack up in general. So we're not terribly concerned about either of those prints.
And you can hear more of the conversation with Mike Schumacher on the Surveillance podcast. You can download it wherever you get your podcasts. New Jersey Democrat Bob Menendez, the head of the U.S. Senate Foreign Relations Committee, is asking America's top 3 oil field services companies to explain why they continue doing business in Russia after its invasion of Ukraine, and demanded that they commit to cease all investments in Russia's fossil fuel infrastructure. Shares of Schlumberger up now by 0.1%. Baker Hughes unchanged. Halliburton up by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you, and welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington. Look who I found. If you're on YouTube, you can even see. Kaylee Lyons is back in the country and back on the fastest show in politics. Welcome back.
It's good to be back.
It's great to see you. We have a lot to talk about. Funny, not many stories have changed in the 2 weeks since you've been on this broadcast, including the Tuberville blockade.
Yep.
301 military promotions, as many as 650 by the end of the year if this continues, still on hold. We talked last evening on Balance of Power with Senator Michael Bennett, a Democrat from Colorado, not a fan of Tommy Tuberville, and did a lot of arguing over the Space Command. Remember, it was Colorado versus Alabama. Right. Colorado wins. It's going to stay there. But one of many members of Congress, Senate, and the House, for that matter, calling him out to drop the blockade. Here he is.
His position is wrong on the law, extreme on the politics, and he should relent, because we're now at a position where we have 300 people that have spent their entire lives dedicated to service of this country that are now in the position to lead the Marine Corps, to lead the Navy, to lead the Army, who now cannot take up their post and whose family cannot make plans to move to that post because of Tommy Tuberville's extreme position on abortion.
Kaylee, he was so animated that our photographer had to pan out because he was stepping out of the frame. This is something that really lights up lawmakers, depending on which side they're on.
It does, and it becomes a question. You're hearing it a lot from the Democrats who say this is a Republican problem. Chuck Schumer says, I'm not going to bring all of these to the floor for a floor vote, which theoretically he could do. He's worried about the precedent it would set. He says this is Republicans' problem to fix, and it becomes a question of if Tuberville is going to get more pressure from inside his own party to blink. But he says he's holding firm on this, and the end result could be we might not have a chair of the Joint Chiefs.
That's right.
If this goes on.
And it appears that that's a likely scenario. He actually issued a statement today saying my holds are not affecting national security, no matter what national pundits are saying. This is just another example of woke propaganda. Glad to say the general is back. General Pinaro, who we've talked to about this before, retired Major General Arnold Pinaro, U.S. Marine Corps. It's great to have you back, sir. As you hear the latest on this, we're at 301 now. This blockade has been going on for 6 months. How much longer do you think it'll last?
Well, Joe and Kaylee, privileged to be back. And unfortunately, right now, it reminds me of the movie about the Pentagon called No Way Out. There doesn't appear to be any white smoke that you would have when they find a pope or any resolution in the near term. So it looks like, unfortunately, this is going to last for a long, long time. It's already now in its 8 months. So it's been there a quite substantial amount of time. And frankly, I would say this is not a political issue. This is a national security issue. And the notion that somehow this is not affecting adversely our overall national security and the leadership at the highest levels of our military, frankly, points out how clueless Senator Tuberville is about national security.
Okay, so General, talk to us more about that, about the national security risk here. Is this more about our adversaries' perceptions of U.S. military strength, or is it affecting daily operations? I mean, really, what tangible is changed because of these holdups?
Kaylee, I would say both. It certainly affects our adversaries' perceptions of our ability to carry out our contingency plans, to deter them when they see that we're not putting the best leaders we have in charge of our military formations. And it affects day-to-day operations in big ways and small ways. Let me give you just a couple of examples. You're now in the Marine Corps. You don't have a commandant. You have an assistant commandant, and he's doing 2 full-time 4-star jobs. Same thing in the Navy. Same thing in the Army. You don't have the combatant commanders, the warfighting commanders, the 4-star commanders of the Cyber Command, which is a huge issue for us in national security now, or the Northern Command that's designed to protect the United States of America. So this notion that Senator Tuberville has that it doesn't make a difference who's in charge, there's a huge difference between a colonel and a 4-star general. I was a 2-star general. I've been a 1-star general. The amount of time that you spend in the General Officer Corps to get to the highest levels is different, 15 to 20 years more experience. And I use these examples so the person can understand it. If you have a serious brain tumor and you're going to have an operation, do you want the resident that's been doing it for a year, that's done 4 operations? Or do you want the senior surgeon that's been doing it for 20 years and done 1,000 operations? That's the difference between a colonel and a 1-star and a 4-star at these highest levels of command. So it has, and the other thing is, it ought to be emotional. When you look at the adverse impact on families and on military personnel that have gone in harm's way on more than one combat tour, I can speak with personal experience here. They're holding up their lives. They're holding up their wives and spouses. They can't go to their next job. Their kids can't enroll in the school where they're supposed to be. At the lower levels, colonel to 1-star, 1-star to 2-star, they've already lost $55,000 in pay and benefits. So the notion somehow that this has no impact, it just shows me again, Senator Tuberville never served in uniform. He's never heard a shot fired in anger. He truly is clueless about what is going on.
Well, it's interesting you say that because Tommy Tuberville said on Fox News they need to get rid of wokeness in the Navy because seamen are, quote, doing poetry on aircraft carriers, unquote. You mentioned the movie No Way Out, one of my favorites, which I will always associate with what they showed as the Georgetown Metro stop, something that does not exist. Does Tommy Tuberville have any idea of what exists in the U.S. military?
Well, let's talk about an aircraft carrier. A 90,000-ton Nimitz-class carrier or a Ford-class carrier, 5,500 sailors, some Marines for security, for particularly if you have a certain type of weapons on there, 10 decks, and one of those 5,500 sailors might like reading poetry. Maybe he's reading Robert Frost. That doesn't make him woke. So the notion somehow, I don't even know what woke is. People keep using this all the time. I don't even know what woke is. And I can tell you, at the warfighting levels, when you're deployed at sea on a carrier or you're in a submarine and you go under the sea for 6 months at a time and you have no communication back home and know what's going on because you don't want the enemy to know where you are, and you want the Chinese to understand that if they start messing with Taiwan, our Navy can sink their Navy, and it's primarily going to be submarines. Again, he just does not fundamentally understand what our military is, what they do on a day-to-day basis, and the fact that they're in harm's way, like the 82nd Airborne. The mothers and fathers that send their sons and daughters to serve in the military, and 2 of my sons have served in the military, we expect them to be the best trained, best equipped, and best led. When you don't allow the leaders that we have picked to be our top leaders to lead our military formations, you're not giving them the best led. In Tommy Tuberville in Auburn versus Alabama, if his first-string quarterback was ready to play, he would not put his fourth-string quarterback in against Alabama. Well, that's what we're doing right now vis-a-vis China, North Korea, and Iran.
All right, General. Well, we've heard a lot of your opinion on what Senator Tuberville is doing here. Let's hear from the senator himself, just a little bit of what he's had to say on this matter recently.
I'm not holding up any nominations from being approved. They can bring them one at a time to the floor. They have chosen not to do that. I've also talked to some of the nominees that's come through my office through their posture hearings. They have already changed jobs. They're already doing the job. It's just they've got interim on their name. There's no threat to readiness. The people that we need to be really worried about are her colonels and majors and sergeants and privates. They're the people who get ready to fight wars. The people up here in the Pentagon, I don't know what they do every day, but they're more of giving advice.
So this is something that the senator posted on X, the platform formerly known as Twitter, earlier today. Just on that part there, General, about how the Senate theoretically could solve this, bring them one by one to the floor. I know what your message is to Senator Tuberville. What's your message to Senator Schumer on this?
Well, I'll give you that message, but let me say again, his notion about who fights and wins our wars is just nonsense, because it's second lieutenants, it's captains, it's colonels. And by the way, colonels are being held up to go to 1-star, so he's affecting them. I've been in combat. I've been in Vietnam. I've been an infantry platoon commander, and it takes everybody. You don't just do it with the enlisted. You do it with officers, enlisted. You do it with senior commanders, etc. In terms of the process in the Senate, first of all, I would say Senator Tuberville could have offered an amendment in the markup to block this policy he's opposed to. He hasn't read the book, How Our Laws Are Made. That's how you change a policy you disagree with. He was a coward. He didn't bring it up in committee. He didn't bring it up on the floor of the Senate when the Vince bill was being debated. The appropriation bill's coming up. Why doesn't he offer an amendment on the appropriation bill to block this policy? If he thinks we have too many admirals and generals, put an amendment in to cut the number. And so I would say the burden is on him. I don't believe the burden is on Senator Schumer. The reason you can't use the cloture process for 300 plus is, number one, just the time sequence, and it takes 2 to 3 days to basically deal with one nomination through that process. You couldn't get to them. Number two, we don't want to politicize the military. The military is nonpartisan. These admirals and generals that are up for promotion had nothing to do with this policy. We have totally politicized the federal judges with cloture. So I don't see the burden is on Senator Schumer to basically do what Senator Tuberville has done, which is politicize our military.
Well, you called him a coward, General. I just wonder your thoughts about his constituents, because Tommy Tuberville says he's got a great deal of support in Alabama, and they're telling him to hang in there, Coach Tommy. He is representing a certain attitude in American politics right now, isn't he?
Well, I would say if he is, and I don't know that for a fact. I have a lot of friends in Alabama. I have a lot of people that I work with in industry. I have a lot of retired friends in Alabama. They don't agree with what he's doing. Maybe there are some people that agree with him. Yeah, there are a lot of people out there that claim our military is too woke. I don't even know what woke is. Show me the facts. Show me the evidence, and I'll take a look. But just because he says he has some support, I know for a fact that senators on the Armed Services Committee that had served in uniform and gone in harm's way have told him, to his face, this is the wrong thing to do. Don't do this. And so, sure, I'm sure he's got some people that agree with him, but he's got a lot of people that don't agree with him. But that's not the issue, whether he has people that agree with him or not. This is the wrong thing to do, politicizing our military, keeping our major combat formations from being led by the top people that we want to lead those formations, the 82nd Airborne, the Marine Expeditionary Force. They could go into harm's way in 5 minutes or 10 minutes or 25 minutes. You don't have time to basically deal with it when you're in the military, and you've got to be ready to go 24/7.
General, finally, and we only have about a minute left, but you were just talking about the process of lawmaking on Capitol Hill, and we know that there is a very difficult process we're staring down the barrel of to get government funding passed by the deadline of September 30th. How would a government shutdown affect military readiness, and how could Tuberville's blockade potentially compound those effects?
Well, a shutdown of government is the worst thing that could happen. Already, Congress hasn't done their work. They're not going to be able to pass the appropriation bills by 1 October. So we're going to be in another, for 25 straight years, continuing resolution where you limp the government along at the previous year level, and you can't do new things. You can't have the new programs against China. You can't beef up Ukraine and Taiwan. But a shutdown basically puts everybody out of business. You'll have the essential people that come in, they don't get paid. You can't train, you can't fly, you can't operate. It would be devastating to our national security. And as bad as the hole on these flag and general officers are, it shuts them down again, too. It shuts everybody down. It's just a really, really bad outcome.
And that's from a Marine. General, it's great to have you. We really do appreciate the time. Retired Major General Arnold Pinaro with us here on Bloomberg Sound On. One of many fired up about this in Washington, Kaylee.
Yeah, nothing seems to evoke emotion.
Isn't that something?
As much as this particular issue right now.
It doesn't matter who you bring it up with on one end or the other.
Yeah.
But that's from a Marine Corps general. Let that settle. We'll have more on this conversation ahead with Mike Dorning from Bloomberg on Sound On.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long at Bloomberg. We're looking at a mixed screen right now with the Dow Jones Industrial Average up 58 points, up by about 0.2%. Everything else so in the red. We've got the S&P down 14 right now. That represents a drop of 0.3%. NASDAQ, the composite index, down 132 points now, lower by just about 1%. Stocks came off session lows as traders sought safety amid concern over how a Chinese ban on Apple's iPhone could impact other segments of the American technology industry. Apple shares, they're trading lower now, down by about 3.4%. Other big tech names lower as well, including NVIDIA, down by 2.4%. Qualcomm, particularly hard hit. It is down by 7.2%. Dell Technologies down 1.9%. 10-year yield, 4.26%, with the 2-year at 4.95%. Gold up $3 the ounce to $19.19, up by about 0.2%. And West Texas Intermediate crude down 0.6%, $87.03 a barrel. Michigan Governor Gretchen Whitmer is talking with the United Auto Workers and her state's biggest automakers in an effort to stave off a strike, which is where she worries the negotiations over a new labor contract are headed. Automakers lower right now. GM down 1.6%, Ford down 1.2%, and Stellantis, parent of Dodge and Chrysler, along with a whole lot of other brands, including Fiat, down by 0.1%. Recapping stocks mix, the Dow higher by 0.2%, S&P down 0.3%, NASDAQ, the big story of the tech sell-off today, underway with NASDAQ now down by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Welcome back to the fastest show in politics. Thanks for joining us. Live from Washington, Kaylee Lines is back with us, and we do have breaking news, if I can call it that. It's a slow drip here these days in the Capitol when we consider the idea of a government shutdown and funding the government. But the word from Speaker McCarthy's office, reportedly, he will be dropping the supplemental request for Ukrainian war funding from a continuing resolution that would help us avoid a shutdown, buy more time for lawmakers. This is the idea of kicking the can. It would include funding for the border and for FEMA, disaster relief. But Kaylee, this idea of funding more for Ukraine, and Anthony Blinken put up another $1 billion this week, is a showstopper for a lot of lawmakers. As we were just discussing earlier in the broadcast, it's unclear when this, I guess, sees the light of day.
The thing is, it's for a lot of lawmakers in the House of Representatives.
That's right.
On the Senate side, they'd like to pass the supplemental in full. That is what Mitch McConnell, the leader of the Republicans in the Senate, is actually advocating for. The tune is very different in the other chamber in regard to Ukraine funding. But at the end of the day, if the House can't get a CR with Ukraine funding attached passed, the alternative theoretically is a government shutdown.
That's correct. And this maneuver actually might make a shutdown more likely. Listen to the different worlds, though, of Speaker McCarthy. And to your point, Mitch McConnell, here's the Senate Minority Leader talking about this just yesterday.
I know there's a difference of opinion in my party on this, and I think the president has, been too slow to keep the commitments that he's made publicly, but at least he's supporting the effort.
Acknowledging the differences in our party on this.
Yeah, taking a little dig at the Democratic president in the process, maybe to counterbalance, to offset the critical remark of your own party. But it just speaks to the discord and the separation between, say, Republicans in the Senate and specifically the far-right wing of the House, the conservative wing of the Republican Party. And those are the ones that Speaker McCarthy is really beholden to here.
100%. I'm going to bring in Mike Dorning on this, who's watching this very closely. Of course, Bloomberg national politics reporter. Great to see you, as always.
Great to be here.
You understand how this stuff works better than most people. Did a shutdown just become more likely because of this spat over Ukraine in the CR?
Probably did become a little bit more likely, but we still are many, many weeks from a shutdown. And I don't really know whether this is going to be part of McCarthy's end game or whether this is just a stop along the way. Once you've set it out there, this can create a kind of a momentum to keep it in there. But you could theoretically see this as something that they might try, and then later on come to some other rapprochement. But it certainly complicates things. But he was looking at a big problem if he just went along with the Senate version of this. And there had been some rumblings before the House members came back that if he just kind of rolled over, they would try to oust him as Speaker.
Well, this sounds eerily familiar, doesn't it, Joe?
That's what I said. You've been gone 2 weeks talking about the same stories.
We've been worried since he became Speaker that his term as Speaker was not going to last.
Matt Gaetz
floated the motion to vacate just this week. It's actually, those words were said out loud again, so it's real.
And he's got to figure out some way of placating that enough that he can stop that. Now, one thing that does advantage him is that there's no one else, there's no alternative. It's not like the hard right can unseat him and get enough people behind someone else as a substitute. But they have shown a willingness to make things tough for him, and if he pushes things in what they view as too far at a certain point, they could try to oust him.
Okay, so it's worth noting that the House isn't even back in session yet. They don't even come back until next Tuesday, which I believe, Mike, if my math is correct, it leaves them with 11 legislative days to try to get this done, if not all 12 spending bills to get a CR passed. Is the more likely scenario that a CR just never passes the House because there's too much discord and McCarthy can't get enough members of his party together, or that it passes the House, the Senate would like to treat it differently in regard to Ukraine funding, and that's where everything falls apart?
So now we've got two potential bad scenarios if you want to keep the government open.
Right.
And instead of just one, which is you could each have them pass their separate CR and be at loggerheads, or even with this tweak, McCarthy not being able to pass it through the House. So you've got two scenarios where everything could shut down for a while. That said, as you well know, you spend a lot of time up on the Hill, so you know that it's really only the last 2 days that count on these things. That's when everything
the clock is ticking really loudly.
Whoever scores last. I want to ask you about Mitch McConnell, his, I won't say health scare, but health concerns that some people had, apparently put to bed by the attending physician in the Capitol. Maybe not. Listen to what he said yesterday as he tries to move on from this.
You've had a chance to read it. I don't have anything to add to it, and I think it should answer any reasonable question.
Doesn't have anything to add to the doctor's note that was essentially released the other day saying this is not seizures, not Parkinson's, that this is, in fact, a recovery from a concussion. Is that where we're going?
The doctor put it a little bit more carefully. It was that the exam, including the MRI and EEG, showed no evidence of a seizure. And I have to say, as the father of a kid who has seizures, and having talked to seizure docs at Johns Hopkins, they made the same point with my son that Rand Paul made with McConnell, which is a lot of times the EEGs and MRIs can be perfectly normal, and, people still have seizures, in fact, the majority of times. But it was a very carefully articulated letter that told you, well, there's nothing wrong with this EEG. Well, there's no sign of a stroke or seizure in the EEG or MRI.
Suggesting that something could emerge at some point is where you're going?
Well, it's just, we don't know. On the one hand, that doesn't necessarily mean there's necessarily a problem still being the leader of Congress. I mean, it's not like he's driving a truck or directing air traffic. If there's some sort of another 30-second lapse, no one's going to get hurt. The Republican Party will be perfectly fine. He'd still be just as shrewd a leader as he was before.
Well, so my question here is, if this is about mental competency at the end of the day and the ability to do the job, isn't this the same argument that Republicans are making about President Biden as he seeks another term? And I just wonder if that messaging becomes more in conflict, more difficult for them as this goes on.
Well, I think that messaging may become more difficult for senators to be pushing, but in a way, I personally think it becomes more of a threat for Biden because you have someone now who has had these lapses for whatever reason. He's 80-something, just like the
81,
president is 80-something. And it reminds you that, hey, when someone's 80-something, they're just one fall away from having, potentially serious problems. And here's a guy who had one fall in March and now he's had these lapses. So I think it might make it harder for senators who are backing McConnell to make that case, but it in some ways underscores it in the public's mind, and it makes it easier for Trump to make that case. Trump doesn't much like McConnell anyway.
Let's hear from one of those senators backing Mitch McConnell, John Kennedy, the Republican senator from Louisiana, who's always known for a turn of phrase. Here's how he put it talking with Bloomberg yesterday.
The only person in the Milky Way who can make Senator McConnell, or any senator for that matter, resign is Senator McConnell. And I know Senator McConnell well. I think he is fit to continue as majority leader. I see him as sort of the Bill Belichick of politics.
The Bill Belichick of politics. No one in the Milky Way can force Mitch McConnell to retire other than Mitch McConnell. He has pledged to serve out the rest of his term. I presume that he'll be able to do that, but there's going to be a leadership battle at the end of this term, right?
It seems likely. It seems likely that there will be a leadership battle after the 2024 election. But it was important for McConnell to make that firm statement, hey, I am going to serve out my term as leader, and it doesn't look like there's any insurrection against him. But there is the talk about the so-called three Johns now are sparring for who will be his successor, probably after the election.
Mike Dorning, great to have you, as always.
Great to
Bloomberg
be here.
Politics
Thank
reporter
you.
with us on the radio and YouTube, and you should join us as well. Search Bloomberg Global News on YouTube and find our video stream. Join us here in studio as we get an update on the news right now. World and national headlines. Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. President Biden leaves Washington this afternoon for the G20 summit in India. He is seizing the opportunity to boost America's influence with allies, since the leaders of both China and Russia are skipping the event. Bloomberg Government's Jack Fitzpatrick has more on the summit's significance.
It is an opportunity for Biden to very much put a spotlight on the U.S. and away from especially China in a sense of competition for economic ties.
Bloomberg Government's Jack Fitzpatrick. The summit also gives Biden a chance to mend some relationships with critical partners. Aides say he'll likely interact with Saudi Crown Prince Mohammed bin Salman, even if they do not hold formal talks. The president is leaving Washington just as new poll numbers show that his support is shrinking. A new CNN survey finds that in a 2024 hypothetical matchup with former South Carolina Governor Nikki Haley, Biden has 43% support compared to Haley's 49%. Of course, Haley is running a distant fourth in the Republican field. In a matchup with the Republican frontrunner Donald Trump, the poll had Trump at 47%, Biden at 46%. Have you set your fantasy leagues yet? Because the 2023 NFL season kicks off tonight. The reigning Super Bowl champion Kansas City Chiefs will host the Detroit Lions. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow higher, barely up less than 0.1% right now, up by about 16 points. S&P, NASDAQ 100 index, they are all trading lower. Tech giants under pressure, stocks retreating amid concern over how a Chinese ban on Apple's iPhone could impact other segments of the American tech industry. Right now, we do have Apple shares trading lower. Apple stock down now by 3.41%. Also, the company's suppliers such as Qualcomm and Micron Technology are slipping, while fellow mega caps Microsoft and Nvidia are also pushing lower. Nvidia shares, they're down by 2.5%. Qualcomm, by the way, down by 7.3%. S&P down 20, drop right now of 0.4%. We've got the Dow up 20, up less than 0.1%. NASDAQ down 144, a drop right now of just about 1.4%. 10-year yield right now is at 4.25%. We have got the 2-year yielding 4.94%. Spot gold up $3.50 the ounce to $19.19, up 0.2%. West Texas Intermediate crude down 0.8%, 86.87 a barrel. There is a report a major U.S. employer is cutting labor costs as the economy slows and worker shortages ease. And with that story, here's Bloomberg's Vinny Del Giudice.
The Wall Street Journal says Walmart changed its wage structure for hourly workers in July. It's now paying some new employees less than it would have 3 months ago. Labor Department data showed demand for workers across U.S. industries has been ebbing since peaking in March 2022. In July, job openings dropped the lowest since March 2021. Vinny Del Giudice, Bloomberg Radio.
And on a down day for many stocks, Walmart shares are up now by about 0.9%. Recapping, stocks are mixed. S&P lower by 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Keely Lines on Bloomberg Radio.
It's been said before on this program that we are in a cold economic war with China. And headlines like this do reinforce the idea. And Kaylee Lines, you've seen what's going on with Apple. Just plug this into the terminal. The shares are down $12, 7% over the last 3 days as China now cracks down on Apple. They don't want people to use the iPhone anymore, apparently.
Yeah, this is according to Bloomberg's reporting, the idea that no longer is it just in sensitive departments that people won't be able to use an iPhone, that this is offices. Going to expand into just government-backed agencies or state-owned companies. So this could be much wider. Our reporting doesn't indicate, how many companies, how many agencies eventually could adopt these restrictions. But if you're Apple or an Apple investor, this is concerning on two fronts. A, because China is critical to Apple from a supply chain perspective. Most of the iPhones we're talking about here are made in China.
Right.
And then also as an end market. Apple's revenue is heavily reliant on China as a market. About a fifth of it comes from there. And so headlines like this just create a lot of fear about the uncertainty for this company going forward.
And this is part of the tit for tat, right? We try to withhold technology from China, and they're saying, oh, yeah, we'll see you and raise you an iPhone, which is a pretty big deal for the U.S. economy, the symbol of high tech in America. And they've also got an alternative, and this is an interesting part of this. We want to get to this with Dan Flatley, but Huawei now has an alternate phone. If you ditch the iPhone, you can get one from Huawei that includes, as we were just hearing on Bloomberg Radio, technology that we were trying to keep out of China.
Right. But China's found a way to make the technology itself at SMIC.
Yeah.
And then provide it to Huawei. The question is, does that violate certain sanctions that are in place?
SMIC, Semiconductor Manufacturing International Corp, may have violated sanctions according to lawmakers. All these connect into one big ugly story right now, geopolitically, and back to the economic Cold War. That's why we want to talk to Dan Flatley, who joins us on the program here, Bloomberg News national security reporter. Hey, Dan, thanks for joining. This is a national security story. It wouldn't have ended up in your lap here. Are we talking about new sanctions that are going to come from this? What's next?
Yeah, it's a great, it's sort of, I was thinking as I was working on a story about this yesterday, like what the appropriate metaphor was for this. And I was thinking during the Cold War, you had intercontinental ballistic missiles being paraded on Red Square in Moscow. Now you have a phone being quietly released in China. We've really kind of entered a very strange era in geopolitical competition when there's so much at stake in phones. But really, I'm joking somewhat, but the truth of the matter is that the technology that is in this new Huawei phone, the Mate 60 Pro, and that is in the iPhone, really represents kind of the cutting edge of technology. And these chips don't just go into phones. They go into missile systems. They go into autonomous vehicles. They go into all sorts of military applications. And so that's one of the reasons why everybody's so excited about this, right? On your point about more sanctions, I think what we're looking at here is not technically sanctions, but export controls. And there is some indication that the Biden administration could ramp up some of the measures that it's already been considering implementing, which is denying some licenses that firms like SMIC and Huawei already get to use some kinds of U.S. technology. They could clamp down on that. They could expand the existing export controls. They could tighten them in some ways. But we don't know yet because we don't really know what's in the phone. And so that's kind of the first step. And so that's kind of where we are right now.
Right, and that's what Congressman McCall, who chairs the House Foreign Affairs Committee, is essentially saying, that this is worthy of an investigation. He thinks SMIC could have actually violated sanctions in providing these chips to Huawei. Dan, can you just remind us what exactly the existing sanctions are, what the restrictions are, and what a violation of them might look like?
So the Huawei story goes back almost a decade at this point.
A long time, yeah.
Long time. There's been a lot of different elements to it. But what we're talking about here is essentially two orders that were actually imposed by the Trump administration, one in 2019 and one in 2020. I believe the 2019 one was on Huawei. The 2021 was on SMIC or SMIC. And basically what they are is they added them to a blacklist and said, if you're a U.S. company who's exporting technology or exporting whatever it might be to China for these two companies, you need to get a license from the Commerce Department. You need to get approval. And we'll grant you approval on a case-by-case basis, but there's going to be a presumption of denial for certain advanced technology. So basically, don't even bother. And I think what's the big question in everybody's mind is, did that leak? Were these companies, these Chinese companies, able to get sensitive U.S. technology somehow, work around the sanctions, work around the export controls to get this technology, or did they somehow do this on their own? And that's why the Commerce Department is going to be looking at this. The other federal agencies, the FBI could get involved. We don't really know at this point, but we know that it will likely start at the Commerce Department. The Office of Export Enforcement, I believe, is the name. We're just kind of digging into some of this earlier today with some sources, and it's a very complicated thing, but essentially they're just going to tear down the phone and figure out what's inside of it.
We've only got a minute left here, Dan, but you're sharing the byline on an important Bloomberg Business Week story. Huawei's surprise phone gives ammo to Biden doubters on China. Of course, the Commerce Secretary just got back from China. What is this going to mean about future engagement? We were talking about a meeting of the presidents at one point. Where are we now?
Yeah, I think that we're probably still looking at that potentially, but it may be a little bit farther off. As you'll probably recall, going back a ways, there was the spy balloon. There's been a lot of upheaval, but essentially the Biden administration is trying to reach out to China, and we'll have to see how this affects all of that.
Many thanks for the help and the great reporting. Dan Flatley, Bloomberg News national security reporter. It's a stock mover. It's a big geopolitical story, but it's a market mover as well, Kaylee. It's not often we see stories collide like that.
Yeah, and it's a mover for these specific public companies, the likes of Apple or SMIC, but also it feeds into others as well. This is a concern that this tit for tat is going to keep titting and tatting, and that other companies are potentially going to get caught in the fallout.
Absolutely. And certainly the components makers are feeling the weight of this as well, as Apple looks to places like India to maybe start making these phones. Right, not China.
Yeah.
Great conversation with Dan. Great to have Kaylee back. Great to have you with us on the fastest show in politics. I'm Joe Matthew in Washington. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple shares are lower as China plans to expand a ban on the use of iPhones to government-backed agencies and state companies. Right now, Apple shares are down by 3.2%. And with more on the Apple story, here's Bloomberg's Ed Ludlow.
Go back to the earnings call on August 3rd. What they had told us is that in China, it was a June quarter record for sales. In the June quarter in China, Apple had swung to revenue growth of 8% from a decline of 3% the prior quarter. But the language was so specific. From Luca Maestri, the CFO, it was that they'd see continued growth in the Greater China region. And Tim Cook said the biggest driver of growth in that market in Greater China was switchers, people that were switching to iPhone for the first time.
And we've got more on the Apple story coming up shortly on Bloomberg Business Week with Bloomberg News Chief Technology Correspondent Mark Gurman. Again, Apple shares trading lower by 3.2%. Other big tech names also lower. NVIDIA down 1.85%. Qualcomm now slumping by just about 7.4%. Walgreens Boots Alliance has agreed to pay $44 million to settle class action claims by consumers who received flawed blood tests in Arizona and California through the pharmacy chain's partnership with Theranos. And some of the other stories that we're following for you today, we do have Boeing warning investors that deliveries of its cash cow 737 jetliner will come in at the low end of its target range. Those are our top.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
McDonald's diplomacy coming up, and some final thoughts with Kaylee Lyons. First to check on world and national news. Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Thanks, Joe. If the presidential election were held today, it looks like a tight race between Joe Biden and Donald Trump. A new CNN SSRS poll indicates Trump would be the choice of 47%, Biden at 46%. But Bloomberg's Ryan Teague Beckwith says the poll shows a wider gap if former South Carolina Governor Nikki Haley's the Republican nominee.
The only number that was at all real was Haley's lead over Biden, which was 6 points.
Ryan Teague Beckwith says that's significant because the poll has a margin of error of plus or minus 3.5 percentage points. The Food and Drug Administration plans to greenlight updated versions of the COVID boosters, and it could be as early as tomorrow.
Sources familiar with the FDA's plans tell NBC News that the latest shots are designed to target the XBB.1.5 Omicron subvariant, even though that strain is no longer dominant. But drug makers and health experts say the boosters should still offer some protection against these newer subvariants. After the green light from the FDA, the Centers for Disease Control and Prevention and its advisory committee will issue its recommendations about who should get the shots and how they should be used. Amy Morris, Bloomberg Radio.
We're expecting an update any minute. A murderer who made a brazen escape from a suburban Philadelphia jail yard last week does remain on the lam. Ryan Drummond says he saw Danilo Cavalcante in his home going for their food.
I saw him come out of the kitchen into the living room, back to that French door and out the deck. By that time, I grabbed the phone for my wife, was telling the 911 responder he's in her house or he just left.
Authorities in Westchester County say they continue to expand their search area that's filled with forests and thick brush. Well, that 70s show actor Danny Masterson, who has been convicted in the rapes of 2 women, has received a sentence today of 30 years to life. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
All right, Nancy, thank you. It's kind of amazing, Kaylee, to see regular life happening in Kyiv and other Ukrainian cities, even as missiles rain down and this awful war continues. But people are getting on with their lives in many cases. With air raid sirens blaring, they're dropping their kids off to work. And a pretty remarkable development here that we saw unfold at Antony Blinken's visit to Kyiv just 2 days ago. They got McDonald's back in Kyiv.
Yeah.
This apparently was a request from Ukrainian Foreign Minister Dmytro Kuleba, who's a really big fan of the fast food.
Mm-hmm. And they enjoyed a meal together.
They went to that McDonald's to
they
show.
They French fries.
Yeah, it's strangely, they were eating French fries and cherry pie. I don't know how those go together so much, but Dmytro Kuleba, imagine they're sitting there together at the table at a fashionable McDonald's in Kyiv.
Tray in the middle.
They've got their tray, they're picking fries, they've got a big camera crew, reporters following them, and Kuleba talks about his favorite hangover helper.
When I was a student, my best hangover food was actually to go to McDonald's.
Well done. I'm sure that was a rare, very rare.
Very, very rare, of course. But I would go to McDonald's and buy double cheeseburger, big Coke, and that would be my hangover breakfast.
Well, that never happened to me, so.
That never happened to me, says the Secretary of State. And they don't have a lock on the affinity for McDonald's, it turns out. Well, you know that.
Yeah.
You
got other big fans
saw the
out
Trump
there.
administration. Remember when Clemson came to the White House?
Mm-hmm.
We have Big Macs, we have Quarter Pounders with cheese, we have everything that I like, that you like. And I know no matter what we did, there's nothing you could have that's better than that, right?
All right. So this is a bipartisan love affair with fast food that we've identified.
Yeah. I mean, who doesn't like French fries?
Absolutely. I'm just not sure about mixing it with cherry pie.
Yeah. You know they put chocolate on them in Japan?
I did not know that.
Yeah. Every country has its own little McDonald's quirk.
Yeah. Would you do the chocolate or the mayo in Europe?
Mayo.
Okay. Hold that thought. Kaylee, thank you. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, good Thursday afternoon from the Bloomberg Interactive Broker Studio. Jess Menton and Paul Sweeney sitting in for Tim Stenivek and Carol Masser. I'm not sure who's sitting in for. I'm not sure who's sitting in for who. But Jess and I are here, so we're in good shape to go for the next 3 hours. There's a lot coming up, Jess. We've kind of got the markets are kind of mixed here on this Thursday afternoon, but a lot coming up in the next few hours. The highlight for me is.
I have a guess.
Yep,
which one
exactly.
It is.
Jeffrey Katzenberg. He's a co-founder of DreamWorks Animation. He's just a major player in Hollywood. Has been for decades. He's going to join us. He just recently joined the board of a cybersecurity firm. Aura is the name of that. So we'll talk about that. I'm going to ask him about the writer's strike. And then maybe this whole streaming thing has just upended the whole Hollywood model.
Disney.
Yeah, exactly. He was at Disney, ran their studios successfully for many years. So that's just one of the great guests we got coming up.
And then, of course, I'm going to do a quick check on Apple stock, ticker symbol AAPL, down about 3%. But to talk about sort of the latest with what's going on here as far as when it comes to China seeking to broaden that iPhone ban to state firms and agencies, Mark Gurman, our own here at Bloomberg News, he's the chief technology correspondent, going to come up with us shortly to walk us through that. Also, in the next half hour, our own Michael McKee is going to be interviewing the New York Fed President John Williams from the Bloomberg Market Forum. So that's something that I'm sure our listeners are going to stay tuned for, Paul.
Yeah, and in our Business Week sentiment, Business Week editor Joel Weber and Bloomberg News sustainability editor Eric Roston, they have a story out in the Bloomberg terminal. Basically, the 14 heat terms you need to know. They have definitions for them because,
Wet bulb temperature is one of them. Of course, El Nino another, but 14 different heat terms that are defined in there that we're going to learn about that apparently we need to know because of this heat wave.
Yeah, exactly. And so, there's so extreme temperatures, extreme weather, I guess is probably the way to phrase it.
Right.
And that's kind of, you need to have the right lexicon to talk about it. So that's what the Business Week story will be.
I feel like summer definitely not over, Paul.
No, summer definitely not over. The heat wave here in New York City is just the real thing. But we haven't really had any heat really all summer. And this is the first big heat wave that we've had this summer, so we can't, be too concerned.
And you know what? I can't complain being from Texas because my friends, they are in more than 100-degree weather right now.
Yeah, and it seems like all summer.
Yes.
It's nonstop for our good friends down in Texas, so we'll keep an eye on that. Bloomberg's, guess what? The countdown to the close. That's going to start right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. I'm Scarlett Fu here with Katie Greifeld. Romaine Bostic is off for the day, but we are joined by our colleagues from radio, Jess Menton and Paul Sweeney. And of course, we welcome in full our audiences across our various platforms, television, radio, YouTube, and streaming on Originals. Jess?
Yeah, taking a look obviously at these markets, clearly Apple still down a little bit more than 3%, but you have seen some of these major indices come off their lows. But when you do have a stock like that, that makes up about 7% of the percentage in the S&P 500 and close to 11% in the NASDAQ 100, obviously you're going to see some moves like that there, Paul.
Yeah, exactly. I just, from the Apple news today, I'm just trying to get a handle on how big this is, how important this could be for Apple, for its suppliers as well, because I've seen the suppliers also feeling it. Dan Ives from Wedbush Security saying, and remember, he's a big bull on Apple. He says it's not that big a deal. This is oversold on the news. So we'll see how it plays out.
Right, and China has long been at the heart of Apple's supply chain with about 80% of the company's manufacturing partners holding a footprint in the company. But I want to kind of switch things up, Paul, because I was pointing out this story to you earlier from Tracy Alloway here at Bloomberg News. She has a story about how Barclays saying blame the boomers here for surging house prices. So I know everybody has been keeping a close eye there, but obviously looking at the average mortgage rate surging above 7% there, Paul.
Yeah, a mortgage rate above 7%. I recently purchased a property.
Sweeney Compound.
The Sweeney Compound down at the Jersey Shore. And I had a mortgage that had a 6 handle on it, and I thought I was getting fleeced. But right now, it's not looking too bad. But again, the big issue is just the cost and affordability of housing, period, is a challenge for a lot of folks out there.
I just love the headline of that report, Blame the Boomers, because you know it's going to get a ton of clicks. But the idea being that retirees are still in household formation, and there's still plenty of demand for houses, so that keeps prices elevated.
You know, there has to be so much pent-up demand for housing. Once rates come down, mortgage rates, I mean, I don't know, I'm living that story a little bit.
Open the floodgates, right?
Exactly, yeah. It's going to be fascinating to watch how this housing market evolves. But let's also talk about one of the other big shifts going on in the economy, of course, the return to office, or the attempted return to office, because one of the other really fascinating stories on the terminal and on .com today was about Grindr losing almost half of its staff on that 2-day return to office requirement. About 80 of the 170 employees at Grindr were forced to resign after the company in August mandated workers return to office in person just 2 days a week, Paul. I feel like you clicked on this story pretty quickly.
I mean, we all know Paul's very bullish on in office.
Yeah, but I've learned to be flexible. I've got three kids in the workforce, and they're schooling me on kind of how the younger folks are viewing this. But I don't know. I just feels like you got to get some folks back a little bit more, but we'll see.
Right. Well, this also comes after the majority of employees announced a plan to unionize. So, there's a little bit of maybe the timing's not so
makes you wonder.
Coincidental.
Yeah, I mean, something more kind of broadly, just what's going on with today's market action beyond just the equity market. I've been talking a lot about the dollar. I've had a couple columns that I've written about it, but looking over at DXY, trading around 105, 103 has actually been a key kind of technical level there as far as what that could mean for not just even dollar strength, which seasonally happens over the past 6 years in September, but what that can mean for the broader market. So you're still seeing strength there and trading at the highest levels since March.
Who wrote that story? Okay.
It's a shameless promotion.
Oh, I love it. I mean, the dollar, it has to be one of the more interesting asset classes right now. I feel like it comes back to the dollar smile theory, that the dollar rallies when basically from a haven bid, and also when things are looking really good in the U.S. and not so great elsewhere.
Yeah, and that's going to be a theme, I feel like, for the next couple of weeks. We'll certainly get into that further as we continue counting you down to the close. But that does it for now. We're going to be back again on television tomorrow. And, of course, a reminder that Bloomberg Business Week is available to you on Bloomberg Originals, and you can stream it at Bloomberg.com.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, Jess Minton and Paul Sweeney here in the Bloomberg Interactive Broker Studio. And so much focus today, Paul, has been on this story about how China is seeking to broaden this iPhone ban to state firms and looking at what China's really trying to do here. And this also does come ahead of next week. We do have that September 12th iPhone 15 Apple Watch event that is quickly approaching. So investors really want to get a sense here as far as what this really means for Apple as well as companies when they are doing business in a country like China. So who better to bring back with us than Mark Gurman, Chief Technology Correspondent at Bloomberg News, joining us on Zoom from our Los Angeles bureau. Mark, walk us through the latest developments here and just kind of broadly what this really is going to mean for Apple as well as other companies.
Yeah, thank you both so much for having me as always. This ban has become broader than just a ban of iPhones at work of government agencies. This is also related to state-owned companies, right? In China, there are plenty of conglomerates that are operated or owned by the Chinese government. So certainly this is pretty broad. Now, I've seen some analyst reports indicating that this is very limited, right? If Apple loses 500,000 or 1 million iPhone unit sales because of a ban at Chinese entities, it's not necessarily a big deal, but that misses the bigger picture. The bigger picture is Chinese nationalism. I don't think there's going to be an outright ban of iPhone sales in China for consumers or anything close to that. But you definitely have to consider the idea of consumers in China pushing back on the idea of buying iPhones because they see that their government is pushing back on iPhones in their own entities.
Mark, what do we know about the quality of the Chinese phones in China? I mean, to me, Chinese consumers are like any other consumers. I mean, they will go where they deem value. And so I'm trying to get a sense of how good are those Chinese phones?
The Chinese phones are getting better. Huawei is rolling out a new phone. It's called the Mate 60 Pro. It is quite impressive. It has a larger battery, a larger display, and far higher resolution cameras than the new iPhone 15 Pro Max that's going to be announced next week. So certainly that's something to keep an eye out. It also has a price that undercuts the latest iPhone. So certainly that is something to keep an eye on. It also, as we've shown in our exclusive teardown in the last week or so for my colleagues in Asia, that it has a fairly advanced 7-nanometer chip using homegrown Chinese technology. And that's interesting to watch because right now, you know, the U.S. has been banning exports of U.S. components to component makers in China. So certainly China is showing that despite those bans and those export and import restrictions, that they're able to release some key components that really power these new devices.
What do you think could potentially be some surprises next week that investors might be hoping to look for at the event?
I'm not anticipating any surprises next week. It'll be pretty straightforward. You'll see 4 new iPhone 15 models, 2 low-end, 2 high-end, both in the same 6.1-inch and 6.7-inch screen sizes. You'll see a new titanium design for the iPhone 15 Pro and Pro Max. That's the first redesign in 3 years. You'll see on those higher-end phones a better battery life, a lighter frame, and the A17 chip built on the new 3-nanometer production process. So a little leg up on what China's got in their new Huawei devices. The Apple Watch upgrades will be very minor, faster processors, new components, new colors, a black version of the Apple Watch Ultra. And then on the AirPods, you'll see a move to USB-C, that new charging standard from Lightning, which is also going to be present on all 4 new iPhone models.
Hey, Mark, Apple also is working on a revamped iPad Pro for next year and actually would be the first major overhaul in about a half a decade. What do we know so far about that?
Yeah, the iPad Pro, that's going to be announced around the middle of next year. They're going to be moving to OLED displays on those for the first time. OLED is the screen technology that Apple uses across many of its iPhones at this point. They started rolling that out with the iPhone 10 back in 2017. Quite a bit better contrast, better color reproduction. It just looks better overall. And so that display technology will be at the heart of that iPad Pro revamp, along with the new Magic Keyboard with trackpad that has a metal design. It'll make the iPad look more like a MacBook.
So talk to us about, I wonder what Tim Cook is saying these days, Mark, about China. I know he was over in China, a month or so ago, and how important China is, not just from their supply chain and also as an end market. What are the folks at Cupertino saying about kind of the intermediate term relationship with and/or risk with China?
I mean, they're not saying much, and there's really nothing they can do. All of their new iPhone 15 Pros are going to be built in China, and they have to sell hundreds of millions of those devices over the next couple of years. 20% of their sales come from China, right? So there's really nothing that could be said. From their standpoint, I'm sure they are worried internally, but from an outside perspective, they'll definitely show excitement about their future in the region.
Something else I'm curious about is when we do see U.S.-China trade tensions rising up again, how does that affect new production sites that are sort of changing the way that Apple's devices are made?
Yeah, I don't think at this point there's any going back. I think Apple is expanding its supply chain outside of China to places like Thailand, Malaysia, Vietnam, and India foremost. So I certainly think that that's already a given. It's already a done deal. So I'm not really sure there's anything more that could be done on the tariff side to accelerate Apple's push outside of China. That's already full blown and going full steam ahead.
So, hey, Mark, when we have phone, particularly with the phones, is there any opportunity going forward or expectation that there will be any kind of leapfrog type new versions coming out, or is it just incremental here, incremental there, and then people are just going to get into some type of renewal cycle every 3, 4, 5 years? Is that kind of how they think about it?
I'm not sure how they think about it, but I can tell you the way I think about it is that it's going to be very incremental over the next, 3 to 4 years or so. It's going to continue to be the new devices this year are incremental. And while I say they're incremental, they're still going to be the most significant overhauls to the devices we've seen in 3-4 years. So certainly, you'll get your opinion you can ask 100 people their opinion and you might get 100 different opinions.
Well, I'm going with yours. I also talked to Anurag Rana. He knows a lot about the phone, and he tells me when I need to upgrade.
When it comes to different countries like India, I know that has been definitely a hot place that companies have been going into. What's kind of the story there when it comes to Apple?
Well, the strategy for Apple in India is to replicate the success that they've had in China over the past 15 years. That is the creation of the country as both a production hub, but also a key sales hub. Apple sees China as a market that it only has, 1 to 3% penetration in. So there's a long way to go. Very few people comparatively have iPhones in India. And so Apple sees it as a completely untapped market, just like they saw China 15 years ago. And the success that Apple has had in China over the last decade plus has been unprecedented. And they want to replicate that in India. And they've started to lay the groundwork for that with 2 retail stores. They're working on 3 more I've written. Definitely think they're going to start doing more for India on the product side as well.
But I've also heard, as it relates to India, maybe just emerging markets in general, that some people argue they just need a lower price phone. They can't go into some of these emerging markets with their current lineup. It's just too expensive. What do you think about that?
I don't necessarily think that Apple is going to do the lower cost phone in China and some of those emerging markets. It's very hard for them to split the SKUs on a geography basis. So I think they're going to just push their lower price devices harder in those regions, like the iPhone SE and some of the older models of the iPhone, like the iPhone 12 and 13, the base ones. I also think that they can lower prices once they get some tax relief based on production locally. Obviously, India lowers import taxes and such if you produce locally, which is one of the driving forces behind Apple's work there. So I certainly think they're going to push pricing plans and installment packages rather than cut prices in India.
Also, Vietnam has emerged as a popular new hub for Apple. What do we need to know about that?
Yeah, India or Vietnam, in addition to India, Malaysia, and Thailand, that's one of the other countries where Apple's pushing. They opened up an online store there last year, which is one of the early indicators of when Apple's trying to plant a flag in a particular new market. They have some retail presence there on the third parties. I'd imagine they would expand with more first-party retail stores there eventually. I also anticipate Malaysia to be similar in that they're going to grow a retail footprint there too. And you're seeing some Mac production in Vietnam, but primarily Apple Watch and AirPods.
Hey, Mark, thanks so much for giving us your time. Appreciate getting the update. Apple certainly in the news today, plus they're going to have their new product launches coming up, so we'll be in touch with you. Mark Gurman, he's the chief technology correspondent for Bloomberg News. He's just the ace on Apple.
He really is. He knows it all.
There. He's joining us on Zoom from the Los Angeles Bureau. Speaking of nice office, the LA Bureau is awesome. There. Oh, yeah. Like when I first went to LA, I was like, boy, for Bloomberg, which every office is overwhelmingly nice, I was like, this is I was kind of like, And as soon as I went back like a year later, they changed offices, spectacular, top of everything. And, that's all I had to do was say, and they make the upgrade.
I have to know, what are the snacks like compared to this office?
Awesome. They just, and they got a great view. They're right in Century City. Great office space there. So great job. And that's where Mr. Gurman is. So are you going to upgrade your phone?
You know what? The battery is not quite good, so I feel like I might have to.
And a lot of folks say, maybe that's what Apple does. They kind of give you battery life, and then when the battery starts conking out, right in time for an upgrade, and there you go. So we'll see how that plays out. S&P 500 off 0.3%. The Dow up just fractionally. NASDAQ off 0.9%. Yields, they are kind of pulling in a little bit. 10-year Treasury 3.26%. So we keep an eye on that. We're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, the S&P, NASDAQ 100 index, and the Russell 2000 index all in the red. Stocks, however, are off session lows. Traders are seeking safety amid concern over how a Chinese ban on Apple's iPhone could impact other segments of the American technology industry. Right now, we've got Apple shares trading lower by 3.2%. NVIDIA is down 1.8%. Qualcomm now slumping by 7.4%. Right now, the S&P is down 14, a decline of 0.2%. NASDAQ, the composite index, down 122 points, down 0.9%. The NASDAQ 100 index down 0.7%. The Dow Jones Industrial Average holding on to a gain of 64 points, up now by about 0.2%. 10-year yield 4.26%, with a 2-year that's yielding 4.95%. Spot gold up 0.2%, $19.19 the ounce, and West Texas Intermediate crude down 0.6%, $87.01 a barrel. Cannot ignore Brent crude holding right at $90 a barrel. Barrel of Brent today down by about 0.6%. News Corp CEO Robert Thomson wants to negotiate with AI companies and avoid litigation as the industry responds to the perceived threat from the new technology. Speaking at an investor conference today, Thomson, whose company also owns the Wall Street Journal, New York Post, and other news outlets, says AI could be even more damaging to the news business than previous digital technology that took advertising and readers from the industry. News Corp shares down by 0.9%. Coming up, 3:45 p.m. Wall Street time, New York Fed President John Williams takes part in a moderated discussion with our Michael McKee at the Bloomberg Market Forum. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Jess Minton and Paul Sweeney here in the Bloomberg Interactive Broker Studio, in for Tim Stenovic and Carol Masser today, who have the day off. And taking a look more broadly, stocks coming off session lows. We have a little under 40 minutes before the closing bell. The S&P 500 trimming some of those losses amid some gains here in defensive groups like utilities and healthcare. And traders also keeping a close eye on some of this latest economic data, Paul, when it comes to some of these solid jobless claims, basically reinforcing the case that maybe the Fed to keep rates elevated at that September 20th decision. But who better to walk us through some of this latest when it comes to the markets than Jake Jolly, head of investment analysis at BNY Mellon Investment Management, here in the Bloomberg Interactive Broker Studio. Thanks so much for joining Paul and myself this afternoon. Walk us through, starting off just with your take on today's market action and what you think is happening underneath the surface here.
Yeah, I mean, the way well, first off, thanks for having me. The way I would sort of characterize what we've been seeing, right, is let's know where did we come from, right? Through the summer, it was a pretty strong market. We had positive economic surprises. Growth has been very resilient. Disinflationary story has remained intact. Things probably got a little bit stretched towards the end of July. We've had, the pullback in August. Sentiment, I think, has normalized a bit. At the same time that we've obviously had much higher yields. Today, rolling into September, we know that seasonality is going to be working against us, right? But I think, from our perspective, why we're maybe a little more cautious kind of through the end of the year is really around the fact that, what's priced in. And our view is that, consensus has moved pretty aggressively towards a soft landing narrative, right? So what does that mean? It means that data incoming needs to basically reinforce that soft landing. And if it misses, you could definitely see a repricing lower. So I think that, obviously not today, there's some idiosyncratic things going on, but to me, the price action that we saw yesterday on the backside of the services prices paid in the ISM really suggests that this is a market that wants to kind of question that disinflation narrative out there.
Absolutely. I mean, I don't know. I've been in I took
recession off the table, I would say 3 or 4 months ago. So I kind of
right,
feel like
yeah.
I was a little on the early side. But maybe I'm wrong. Matt Miller does not buy my call there. Since I took all of, I think, 2 economics classes in my MBA career. So, Jake, so how are you guys positioned at BNY Mellon? I mean, do you take risk on here, whether it's in the equity markets or fixed income, or have you pulled back a little bit?
Yeah, I mean, it's a very difficult tactical call. You were right to make that call to take the recession off the table for this year. Unfortunately, our take on it is that when we look at the leading economic indicators, when we assess kind of where we think inflation is gonna head, we think that there's still a material risk of a recession next year. So that's why kind of we don't think it's really the right time to be aggressively re-risking right now. We really continue to see much better opportunities in terms of a risk-reward trade-off within high-quality fixed income. So that hasn't changed. We have been emphasizing to folks that we are nearing the end of this hiking cycle, and historically, that's really when you want to start extending duration. And then on the equity side of the story, it's really about kind of where can you build resilience into your portfolio, right? It's not about, sitting out the rally, because certainly there's enough uncertainty that you could, definitely have another leg higher. But I think it's going to, really rely on that disinflationary story being reinforced by the incoming data. And we see that as being, the risk this fall.
One thing I'm curious about is when we look at the 10-year Treasury yield, that's trading around 4.26 right now. It peaked out around 4.33 last month. But when you think about where it touched its high last autumn versus where the S&P 500 was trading at that point, that was 3,500. You look now, the S&P 500's up almost 1,000 points since then. What's the difference in the bond market, and why haven't we seen the same pressure in longer duration stocks like we would have seen a year ago?
That's a great question, and there's no simple answer for that. That's why you have this job. Because I think, it deserves scrutiny. That's the real answer, because last year was all about, this aggressive hiking cycle, the derating off of, elevated multiples at the start of 2022, right? I think the S&P was trading at about 23 times at the start of 2022. We had a trough last year at about 16 times. Now we're back at 19, 20 times. Is that a fair valuation? It's not extreme, I would say, but I would also say that it is elevated relative to what we expect going forward, right? And that is that the recession risk is still quite high. And by the way, if you kind of look underneath the hood, the tech multiples are pretty much back to that 2022, right? So it's actually the other sectors that have gotten a bit cheaper relative to the start of 2022, but tech is looking kind of just where it started. So, and that decoupling is kind of what you're referring to, the fact that we've had rates move higher, but long duration is kind of held in there. Part of that, of course, is the AI story, right? I mean, you're factoring in much better earnings growth expectations, so that's, I think, offsetting it a bit. But at the same time, I think it does speak to, there's still a lot of risk out there because we are in the middle of this tightening cycle. We think that there still are risks to the cumulative tightening, and that means that there's risk to those multiples still.
Well, so that's on the multiple side. How about on the earnings side? The second quarter earnings were a little bit better than expected, but if you've got a recession still kind of 50-50 out there, do you think there's still earnings risk out there that the market needs to deal with?
I do, and I think it's actually pretty similar to kind of what I was referring to in terms of the growth, economic growth, and this disinflation story is being pretty optimistic. The same is actually kind of true on the earnings side as well, right? I would describe earnings results so far this year as basically being better than feared, right? We marked down expectations quite a bit from kind of mid last year. And so far this year, earnings have, again, been better than feared, so it hasn't derailed the rally. It hasn't sort of caused this knee-jerk reaction to say, the earnings growth needs to really come down. But now if you look at where consensus is, you're basically seeing that, okay, 2Q was the trough, and now we're going to have sequentially better and better earnings growth going forward. And then into 2024, for the S&P 500, in aggregate, 10% earnings growth. Now that's, not kind of extreme, but it means you have a year where you don't have a recession. You have a solid recovery. And I think that for this rally to continue, the follow-through has to be there. And our view is that companies are going to continue to face margin pressure. The labor costs side of the story, I don't think that's completely in the past now. So we are, looking hard at that and think that that's where you could see a bit of risk.
What's the top question that you hear from your clients?
Probably, when are you going to stop talking about recessions? I mean, the thing is, when you look at the leading indicators, right? I think the Conference Board's leading economic indicators has been...
Because I feel like investors also like to scrutinize that and say it's a lagging indicator, right?
Well, it is all known information, right? When it comes out, we already know everything that's in there. But the bottom line is that there's still information there. And I don't think we should dismiss it just because we're facing fatigue, just because we've been talking about it so long. The reality is that, we had a bear market last year. We've now exited that bear market, and all of that happened without a recession. Historically, bear markets are associated with recessions, meaning that we are recovering out of recession. That is not the case now. We're still facing down a risk of a recession. And to us, that really deserves caution, right? And it should influence how you are trying to position your portfolio.
Also, that ECFC function that we like to look at in the terminals. So that's where you can go. You can look at how economists are projecting kind of in aggregate in the terminal. You can look at yearly estimates as well as quarterly. But when you look at a quarterly basis, I mean, it's continued to be pushed out to where there's not a contraction anymore. It just looks like there's going to be flat growth in the fourth quarter, then it picks up again going into next year. But whenever people are talking about the consumer and the issues there, I mean, what really has to change things? Because it seems like whenever we're talking to different strategists, especially on airlines and things like that, a lot of people are still traveling in Europe, not as much domestically, but what really needs to change here to where we see things actually shift, since that is such a huge component when we talk about GDP growth?
I mean, it's the labor market, right? The big conundrum through this cycle has been how consumer surveys have remained very pessimistic. They've not recovered since COVID. At the same time that the consumer, by and large, has been much more resilient than people expected, right? And people point to the excess savings. They point to the moratorium on student loans. You can talk about, YOLO, all of these things that sort of could be underpinning underpinning the consumer. But the reality is that I think the simplest answer is probably the right one, which is to say that most people still have jobs. People are confident that they've, if they aren't getting a increase in their wages this year, they probably got one recently. So they're probably still, feeling relatively optimistic about that. And ultimately, the recessions, if you want to know how a recession starts, you look at the jump in jobless claims, and you just haven't seen that. You've seen a bit of weakness at the edges, but by and large, still holding together. But unfortunately, that doesn't tell us too much about where we're headed.
Right. All right. Yeah, the job market's just been amazing. The labor market's been just amazingly resilient. Jake, thanks so much for joining us. Jake Jolly, he's head of investment analysis at BNY Mellon Investment Management, joining us live here in our Bloomberg Interactive Broker Studio. Right now, let's get some world and national news down in Washington, D.C. with Nancy Lyons.
Thanks, Paul. Congress is trying to grapple with the runaway development of artificial intelligence, which promises scientific breakthroughs as well as new crimes and security threats.
Rick Stevens of Argonne National Laboratory told the Senate Energy Committee the task of policing AI is daunting.
Every person within the next few years is going to have a very powerful AI assistant in their pocket. There are over 100 large language models in circulation in China. There's more than 1,000 in circulation in the U.S. So we're going to have to build capabilities using the kind of supercomputers we have and even additional AI systems to assess other AI systems.
Andrew Wheeler of Hewlett-Packard said responsible companies are enforcing codes of ethical conduct. In Washington, Irv Chapman, Bloomberg Radio.
The next installment of U.S. aid to Ukraine is running into political trouble as House Speaker Kevin McCarthy considers tying its approval to controversial immigration and asylum policies that are strongly opposed by Democrats. Today, Senate Minority Leader Mitch McConnell reiterated his support for more Ukrainian aid.
A strong and vital Europe is of vital importance to the United States. Standing with our allies against Putin is directly and measurably strengthen the U.S. military.
The House will be back in Washington next week to take up the issue. An American explorer trapped in a Turkish cave is thanking the international effort to bring him to safety. Mark Dickey suddenly became ill, suffering gastrointestinal bleeding during an expedition in the Morka Cave in southern Turkey. Rescue groups say he's doing better. The 40-year-old was even strong enough to make a video.
I'm up, I'm alert, I'm talking, but I'm not healed on the inside yet, so I'm going to need a lot of help to get out of here.
Dickey is stuck about 3,000 feet below the surface. Global news 24 hours a day, powered by more than 2,700 journalists and analysts. Now back to you, Paul.
All right, Nancy Lyons, thank you so much. We appreciate that. Jess Met and Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're doing the live streaming thing here at Bloomberg Business Week. They were the pioneers in that.
They are.
The live stream on YouTube. But just head over to YouTube and search Bloomberg Radio, Bloomberg Global News, and that'll get you where you need to go. You know, there's a couple of stories on the Bloomberg terminal that go to a story that you and I, Jess and Matt Miller, we've all been talking about, which is private credit.
Equity and credit.
Private credit. It's just, we've all known about private equity. That's been a great business for decades. Private credit is something that's new, and it really kind of developed that market after the great financial crisis when some of the big banks pulled back a little bit on some of their lending, particularly their leverage lending, where they take on maybe, they'll go for a little bit more risky credit. And that's where the private markets came in, and these private companies came in, these private credit firms came in, they raised a lot of money, and they'll give you a loan, and they'll refinance your loan. And it's just, we've seen a rush back to the credit markets over the past couple of weeks as people come back to work. And we've seen a lot of new issues in the investment grade market. We've seen a lot of new issues now, even in high yield coming this week. But now there's also, these private credit folks are actually out there bidding against the investment banks for some of these loan products and winning. So it's interesting.
Yeah, taking a look at one of these stories crossing the terminal here, leverage borrowers join September rush to tap the U.S. debt market. So junk borrowers are flooding this U.S. leverage finance markets with deals to help refinance their existing debt. So when it comes to this type of dynamic, and if you have kind of the upper hand here, where does that leave some of those other firms on the other side of it?
I think it makes Wall Street have to be more competitive, because it just makes the credit business more competitive, because if you were a private equity sponsor and you want to go out and buy a company, you would go to an investment bank of Morgan Stanley, Goldman Sachs, and they might lend you some money to close the deal, and then they might do a high yield bond or investment grade bond to kind of term out your capital structure, and that's great, and they still do that. But now you have an alternative. You can walk across the street to some of these private credit funds to get the exact same products, and maybe you can pit one against the other and get better terms, better rates, and things like that. So it just shows, I think, here a little bit, we're hearing more and more about how big the private credit market is, how deep it is, and they can finance some big deals, and that's kind of what the Bloomberg reporting has here. So interesting stuff. I kind of said, if I came back to Wall Street as a young banker, I would seriously consider the private credit business, which didn't exist. It was just private equity, which we all know how lucrative private equity can be, but these private credit funds are doing pretty well too.
Yeah, looking at this separate story here, private credit's $10 billion win is bad news for Wall Street. So when you're looking at these companies with those leverage loans and junk bonds coming due soon are increasingly turning to those private credit lenders to refinance their obligations. And so Thoma Bravo-owned Highland Software is turning to a group led by Golub Capital to refinance about $3.2 billion of maturing debt. So it's interesting seeing kind of the dynamics here when it comes to private credit lenders and for years trying to provide that financing for leverage buyouts.
Yeah, I just don't know if the regulatory oversight is for some of these private credit funds. That may become an issue. That may become an issue because we know how regulated the banks are, but you don't know about some of these privately held private credit businesses. So we'll keep an eye on that. But that is a good part of the business. And we're going to go right now to... No, I guess not.
Yeah. Well, something else I was curious about too, especially for companies like refinancing with private credit lenders, will that often cost more in terms of interest paid?
No, I think these private credit companies, private credit funds, if you will, they are competing directly against the traditional banks, and so they have to compete on price and they have to compete on terms. But all it means is, as a borrower, I now have more competitors for my business, more choice. Therefore, presumably that will lower the price, maybe improve the business for me. So it's up to the commercial banks to see how aggressive they want to be in defending their market share. So it'll be really interesting. And again, we see more regulations coming up on these investment banks and commercial banks. And it just puts a little bit more pressure on them in terms of what business they can do, what types of risk they can take, and then that just bodes well. And we talk to a lot of these private credit funds, and they are getting money in the door hand over fist. So they have plenty of capital to deploy. There's a lot of smart people out there that we talk to here at Bloomberg that are in this business. So it's just an interesting story, and Bloomberg's got two great stories out on it today on the terminal.
Now let's get a check on a business flash here with Charlie Pellet.
Hi, thank you very much. We are awaiting the upcoming interview with New York Fed President John Williams, and our Michael McKee will have that for you in just a moment right here on Bloomberg Radio. Quick check of your U.S. markets. 18 minutes to go ahead of the closing bell with the Dow in the green. Dow higher by 62 points, up by about 0.2%. We are looking for the S&P 500 index down 14, drop right now of 0.3%. NASDAQ lower by 124 points, a drop there of 0.9%. Certainly, Apple and China getting a lot of attention in today's session. Apple shares moving lower along with a number of other big tech stocks. Apple right now down 2.8%. NVIDIA down 1.9%. Qualcomm slumping by 7.5%. 10-year yield 4.26% with a 2-year 4.95%. Spot gold up $2.50 the ounce to $19.19. And West Texas Intermediate crude continues to fall. Right now, WTI down 0.7%, 86.97 a barrel. Barrel of Brent down 0.6%, 90.03. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. As always, we are awaiting Bloomberg News. We're just awaiting for Bloomberg News. Michael McKee, he's going to sit down with New York Fed President John Williams. They're speaking at the Bloomberg Market Forum. As soon as they are ready to go, we will bring those comments to you. They are ready right now. So what do you say? Let's go there right now.
Do it again. You take out your phones and you got the ability to answer the question. The question we're posing here is the Fed done? Should they raise by 25 basis points? Should they still raise by 50 basis points? Should they hold, or should they cut rates? And I'm sure everybody will have an opinion on that. And while we wait for that to tally, I'll start my first question to John and ask you, what makes a good sneaker?
Well, you know, I think it depends on your mood. It depends on your day ahead of you. You know, what what you're doing that day and how you're feeling. And some days I feel like, you know, more colorful, flamboyant sneakers, and some days you feel like, you know, the more traditional dress sneakers. So, you know, it's part of dress for your day. That's part of a policy we have at the New York Fed. You decide what fits with the work you're doing that day, and that's how I view it.
Taylor Heineke, who was a quarterback for the Washington Redskins last year, now with the Falcons, apparently he bought a new pair of Jordans every time they won. Mm-hmm. Do you go out and buy a new pair of sneakers every time you raise rates?
No, I do not. I don't think my wife would approve, given the space we have in our closet. No, I don't do that. And you know, I wear them a lot, so I wait till they wear out and look for what's next.
All right, we've got our poll results in now. 35% think that you should raise rates, but 45% think it's time to hold. This is the everything, everywhere, all at once question about the Fed. So let me pose it to you now. We'll start off right off the top. September 20th, which of those choices would you favor?
Well, you know, first of all, it's not the FOMC meeting yet. We still get more data between now and then. And we, you know, as I always tell my economics team at the bank, we get a lot more of the analysis and research and, you know, kind of the forecast coming together. So there's a lot more information and thinking that before this meeting, of course, before, you know, future meetings. But here's how I see things now. You know, we're obviously always focused on our dual mandate, maximum employment, price stability. Inflation is far too high. But that said, inflation is moving in the right direction. We're seeing the imbalances in the labor market, which were really quite pronounced last year. They've been closing. Job openings have been coming down. The quit rates coming down. The hiring rate in the markets coming down. So we're seeing movement in the right direction of bringing supply and demand back into balance, seeing inflation come back towards our 2% long-run goal, and we've done a lot. I think everyone knows, you know, here in this room, you know, we've raised rates significantly over the last year and a half or so, and we've gotten into a restrictive stance. So my answer to the question is right now, I think we've gotten monetary policy in a very good place in terms of we have a restrictive stance of policy. It is having the desired effects of bringing demand and supply more into balance. We're seeing inflation move in the right direction, but we'll have to watch that going forward. We'll have to keep watching the data, carefully analyzing all of that, and really asking ourselves the question, Is this sufficiently restrictive? Do we need to maybe raise rates again to make sure that we're keeping that steady progress in terms of getting imbalances, shrink imbalances in the labor market and bring inflation back down? So right now, I think, things are moving in the right direction. We've got policy in a good place, but we're going to need to continue to be data dependent, watch the developments and assess what we need to do.
How do you know you're restrictive? What metric do you use?
Let's see how long it take to get to R-star. Okay, so I think there's no right answer to that question. I think the way I think about it is really in terms of real interest rates. That's the Fed funds rate, or more broadly, Treasury yields relative to expected inflation. So depending on how you measure it, you look at it. Real rates are well above zero, moving somewhere between 1% and 2%, and that seems to be above typical estimates of the long-run neutral real interest rate. And I think the other way you see it is a little bit of in what we're seeing in the economy, right? So we are seeing demand in the labor market come down according to a lot of different measures. We are seeing other kind of signs that the economy is moving, imbalances in the economy are coming down. So I think the two things, one is kind of like where's R versus R star? That's one way to think of it. But the other is what are we seeing happening in the economy? Now there's a second test. There's kind of are we restrictive? And the second is, are we sufficiently restrictive to really make sure that we're bringing inflation sustainably down to 2% and getting the job done? So, I think it's pretty clear we're restrictive. It's still an open question as we go forward. Have we got sufficiently restrictive to achieve that?
We'll get to R-star when we get to, Tom called it the eco-babble part of our conversation here. But first, you have raised rates 11 times. You've gone up to 5.5% at top range, but unemployment remains extraordinarily low, and we are seeing signs of the economy accelerating now. So do you really think you're sufficiently restrictive?
Well, I think, first of all, the unemployment rate has been relatively steady over the last year or so. It's fluctuated between 3.4 and 3.8% where it is today. And I think that it's a sign that, well, clearly we're not moving, significantly to more imbalance and unemployment even lower. And nor have we seen clear signs of unemployment moving, significantly up. But I do think it's a unique time, right? Because if you look at the unemployment rate, it seemed to kind of get to a minimum value of around 3.4%, kind of get there. But then these other indicators have been shifting. So I think what we've seen in the labor market is demand exceeds supply. It's not showing up as much in the unemployment rate continuing to go down, but it's showing up in these other things like job vacancies, quit rates, things like that. So to me, the things I'm focused on is really how are we seeing the demand indicators, supply indicators move together. I would expect the unemployment rate to edge up over the next year somewhat. But again, I see positive signs in the sense that the indicators of demand and supply are moving in the right direction. The unemployment rate hasn't moved as much. In terms of demand reaccelerating, I think we have to be careful not to overreact to, kind of shorter term developments and kind of look at the bigger picture. But it's definitely one of the risks I see out there. GDP growth in the first half was around 2%. The latest readings on consumer spending have been strong. So that is one of those question marks when I said, are we sufficiently restrictive? Do we have policy where it needs to be to make sure that we bring inflation down to 2%, to make sure that we get the imbalances, wring out the imbalances, if you will? I mean, if demand stays very strong or stronger than expected, that would be one of the factors that goes into my thinking on that.
There is a group of people who think that there was a temporary bump this summer in the economy. So I have to ask, did you see a Taylor Swift effect in consumer spending?
Well, there's definitely a Taylor Swift effect on consumer spending because people have been spending on the concerts and the hotels and everything. It's been a huge phenomenon. But, demand has been strong, and it's been strong. A bit of that rotation we were talking about a year ago, we're seeing that happen from goods over to services. People are traveling more. They're going to restaurants. They're going to shows. That's healthy. So we are seeing very strong demand in those areas. I guess the question is how much of that is driven by a lot of the fiscal stimulus we saw in the past, the excess savings that people have accumulated from that period. How much of that is people finally able to go out and travel, finally feeling comfortable going in kind of packed rooms and things. So is that going to, or is that something that perhaps will last longer? So it's an open question. I think there are reasons to think that consumer spending won't stay as strong as we've been seeing. Saving rate is obviously coming down. The excess savings that we saw accumulated seems to be spending down. And there's always the lagged effects of monetary policy. We've raised rates a lot. It is more expensive to borrow to buy a car or a house, and those effects, of course, I think will get kind of more stronger over time.
Can't have an economist without two hands, so the two-handed argument about what's happening now is that the economy may be accelerating. Third quarter may be very strong, but then that sets a very high starting point for the fourth quarter, and we could see contraction because you can't keep it up.
Well, again, I think you have to look through the medium term, and I do look at the labor market as well. I mean, we are seeing, I would say, slowing in the labor market, in the hiring rate, and I think that's probably given us perhaps a little bit, maybe a cleaner read of what's going on. But, have to watch the data, understand, why is the demand continued to be strong. Q3 does look to be strong so far. And again, it's just part of being data dependent. Now, I go back to, if you ask me, what am I most focused on? Most focused, for sure, is inflation. I mean, that, we talked a lot about what's GDP, what's the, labor market looking like, but, we got to get inflation down from currently, PC inflation is about a little over 3%, core inflation is above 4%. We really need to make sure that we get inflation sustainably down to 2%.
One of the questions about that is what happens with this supply-demand imbalance, particularly in the labor market. And a fundamental question that's been asked of economists and central bankers is, do wages lead inflation, or does inflation lead wages? And what would be a sustainable level of wage growth to bring inflation down to where you want it to be?
Yeah, I think there is an answer to the question, and kind of, you asked me 3 years from now, what do I think wage growth consistent with 2% inflation is? Well, then I have a kind of a traditional view on that. It's going to be 2% inflation plus whatever productivity growth is. So you're thinking wage growth of, maybe 3.25%, 3.5% or something like that, right? Right now, I think there's just still a lot of dynamics going on in wages and prices coming out of the pandemic. We saw huge increases in prices of goods. We saw huge dislocations in the economy. We saw wage growth, accelerate dramatically, and now it's starting to slow. So, right now, I'm looking at wage growth not as like I need to see this number on the screen, but more that, seeing signs that the labor market is cooling somewhat, wage growth is slowing and moving towards something that's more sustainable. So that's how I think of it. It's kind of more the how do all the pieces of the puzzle fit together in terms of moving towards our ultimate goal. Right now, I think the wage growth has slowed, kind of as a sign that we're moving towards that.
Well, the other side of the question, Chairman Powell about a year ago warned that there would be pain in bringing down inflation to target, but unemployment is, as you mentioned, 3.8%. The employment cost index for the second quarter showed wage growth at 4.6% above inflation. You're not making the masochists happy. I mean, where is the pain?
Well, I think, again, one of the things that's harder to assess is my own view is one of the reasons we've had very strong wage growth, very strong inflation, was that demand over the last year or two has really exceeded supply. And some of that has shown up in high employment, high GDP. A lot of that's shown up in longer wait lines, waits to get things, or things not being able to buy things, companies that can't, meet the customer demand. So as we've seen demand come down towards supply, and as we've seen supply improve, which I think is an important dynamic right now, what we're seeing is, inventories kind of move back towards more normal levels, supply chain bottlenecks recede. So a lot of those dynamics kind of reverse, which is a positive, both in terms of the economy's growth. It's also a positive in terms of costs and inflation. So from this question about, well, how high does unemployment need to get to bring down inflation? I think first and foremost, we have to think about how we got the high inflation. And I think a lot of that was related to supply chain bottlenecks, global shutdowns of economies reopening them, very strong fiscal and monetary stimulus to boost demand. Now, as we reverse all of those things, a lot of those things will also, we're seeing that reverse in terms of the inflation data. I guess the way I would summarize this isn't kind of the traditional inflation cycle where you think about like a sacrifice ratio. To bring inflation down 2% or a percentage point, you need so much unemployment. Now, in the end of the day, because so a lot of this is really about effects of the pandemic on supply and demand that are being unwound. And I think that shows up in kind of our models and our analysis. There is still the open question, and I don't have the answer to that. Will, over the next year or two, will we need to see, or will we see the unemployment rate rise significantly? My forecast would be yes, we're going to see the unemployment rise above, say, 4% to maybe somewhere in the low 4s, which is above my long-run view of what the kind of normal unemployment rate is. But that would be just part of that process of really making sure the wages and inflation come back to levels consistent with 2%.
So we should expect September 20th, you put out a new summary of economic projections that probably your GDP forecast will go up, but your unemployment forecast will go up as well?
Well, I don't know. I can't speak for my colleagues.
Oh, sure.
Yeah, and we'll see. But definitely, if you ask me where the surprises have been in the data since over the last several months, one is GDP growth, demand growth has stayed remarkably strong. All that talk about we're about to have a recession has vanished. And I think on the labor market, I guess my view is that the unemployment, it's, again, my view, I think consistently has been that we are going to see some increase in the unemployment rate, but not to levels that we've seen in past recessions. But it's a kind of an open question. This is such an unusual set of circumstances with the pandemic, Russia's war in Ukraine, all the things that have happened, all the things that are unwinding in terms of those factors. You can't say with any certainty exactly how this is playing out. I gave you a couple things that give me a little bit of more confidence that this forecast of inflation coming down over the next couple of years will happen. First of all, inflation expectations have been, with households and economists, but I'll talk about households, have been incredibly well behaved. We've seen 1 year ahead inflation expectations move up a lot when inflation went up. That's not surprising. Very consistent with pre-pandemic behavior, but short-term inflation expectations have come down quite a bit. They're still a little bit above pre-pandemic levels, but getting closer, around 3.5% versus around 3% or so. And medium and longer-term inflation expectations are basically where they were before the pandemic. And the second, I got to sell New York Fed research here. One of them is a survey of consumer expectations, but the other is we have this measure of trying to figure out what the underlying rate of inflation is. And it's a complicated statistical model looking at the inflation data, but it tries to read through the data and see what's the underlying trend. Based on the July PCE data, the underlying trend there is 2.8%, 2.75%. That's way down from the 5.5% we saw last year. And if you look at what's happening with shelter inflation, and you realize that the shelter inflation is inherently backward-looking because it's looking at all the rents that were signed over the last couple of years. Underlying inflation looks more like about 2.5%. Now, I'm not saying that the job is done or we're at 2.5%, but it is showing us as some favorable kind of, if you will, tailwinds in bringing inflation down. Inflation expectations have come down, and measures of underlying inflation have really come down quite a bit as well, and we're seeing that each month with the data.
Speaking of services, one of the things that Jay Powell talks about a lot is core services ex housing. But there's been a lot of criticism of that as sort of a dog's breakfast of a lot of different things that aren't related. And apparently in the last month, we saw a rise in that indicator because these people got paid. Because we saw a lot of financial services compensation go up. Is that really useful, that index?
Well, this is why I mentioned this what we call the MCT, is because it takes all the components of PC inflation or personal consumption expenditures inflation, takes them all, analyzes them all, and weights them according to kind of their signal that they carry for inflation. So I think that's a good way to think about, because each piece kind of has its own story, if you will, and own behavior. I think the reason it is kind of useful to look at this, core services excluding housing, is that because the other components of inflation have really been moved by factors related to the pandemic. Goods prices rose dramatically, car prices, appliance prices. Now they're coming down. We don't want to take super high signal from the fact that car prices are coming down, because that's kind of what we were expecting to see. Energy prices have come down. Food inflation, thankfully, has come down. So we really want to kind of understand which parts of this is really reversals of pandemic things, supply chain issues, which of them may be a better reflection of the imbalance of supply and demand. So I think, the core services category is probably a good place to look. How are we doing on the supply-demand imbalances? But shelter, honestly, is part of that, too. It's a big part of the inflation index.
Something that combines kind of all these issues together of wages and unemployment and supply chain issues is the automobile industry. I want to ask you how worried you are about a United Auto Workers strike, because it could put 150,000 people out of work, plus then maybe suppliers. Nothing like when we had millions of auto workers, but still a large number of people out of work. But if they got what they wanted, they'd get a 46% raise, which doesn't sound really sustainable for the economy.
Well, I'm not going to comment on the negotiations in that industry. So to me, that's not something for me to comment on. But I do think from the broader perspective, I mean, hopefully, any kind of negotiation or issue like that is handled kind of on its own. So we're focused on the bigger picture. This is a ginormous, if I can use a technical term, economy. Obviously, and we're always looking at the bigger picture. And there are factors that happen that affect how the economy performs at any point in time that we have to take into account in understanding what's happening in the economy. But again, we're looking at the medium term. Monetary policy takes typically a year or two to have its full effect of the economy. So, I'm thinking about where are we going to be next September, where are we going to be, and after that, and how are we setting up policy today and in the future to best achieve those goals? Again, I think we're moving in the right direction, but we still have quite a ways to go.
I have to ask you about another, besides the auto industry, interest rate sensitive sector, and that's housing. Existing home sales basically are frozen at this point. So many people refinanced or took out mortgages that are extremely low at this point, and the mortgage rate's like 8%, so nobody wants to sell. Have you crippled the housing market for maybe a generation until those people die and sell their homes?
No, I don't think that's true. I mean, we've seen this kind of dynamic in the past. I mean, this isn't the first time that interest rates have been very low and then have gone up, or, and these interest rates today, or mortgage rates, or at least in our lifetimes, Mike, are not the highest we've ever seen. But I do think that there is part of that dynamic. But I would kind of take a step back. I mean, there's definitely that dynamic taking place, kind of people choosing not to sell their house because there's this, value of the existing fixed interest mortgage. But I would go back to the broader, I think, context of this is I think demand for housing is significantly stronger today than it was before the pandemic. I think that the work from home, the hybrid, the remote work, all of that has created more demand overall in our economy for housing, and that has to be met with supply. And that takes a long time to bring on. We know that housing construction, has not kept up with demand. So I think that part of the dynamic that we are seeing with the housing market, there's still a lot of demand out there. That's why rents are still high. That's why house prices are, and the market is kind of moving in that kind of still coming back now, even with the higher interest rates. So I guess my answer to your question is I think that the demand out there will actually kind of push the housing market along, given the kind of the changes we've seen. Now, clearly, interest rates are a factor in that, but I don't think that they're the only factor that are going to people's decision making.
Let's shift gears a little bit here and bring in the ecobabble, as Tom Keene said, and talk about R-Star, because you obviously have done the most work of any economist I know on R-Star. Before we go into a little more depth, have you got a short explanation of what R-Star is for people?
By short, you mean 30 minutes or 45 minutes?
Probably anything less than an hour will.
Okay. No, I mean, the idea of R-star is actually pretty simple. You just ask yourself the question that if the economy is kind of just going at cruise speed, growing at its potential rate, the economy is at full employment and inflation is at 2%. If everything's just moving along at that, what would the real interest rate be? And our estimates over time have changed because the factors that affect what's the equilibrium of savings and investment in the economy, those things can change for a variety of reasons. We heard one earlier about demographics. I think that is really important. There are others too. So it's basically some kind of basically normal interest rate you would expect in normal times. Now, we're not in normal times right now, right? Inflation is very high. The economy is still going through a transition. So so it's really a benchmark to think about where do you think real interest rates are likely to be headed towards, real inflation-adjusted interest rates. So it's a nice benchmark to think of it that way. But of course, it doesn't tell you today what an interest rate should be or shouldn't be. It just it's kind of a benchmark.
So is it a practical application that you use on a regular basis, or is it a theoretical concept that's nice to talk about?
Well, I think it's both. I think it is useful to when you think about you go back to the Taylor rule, which is John Taylor's basic kind of insight that you can think of monetary policy as doing kind of two things. One is when leaning against the wind, when the economy is strong, interest rates tend to go up. When inflation is high, interest rates tend to go up, and vice versa. But then you go back to the Taylor rule, you got to say, but up relative to what? I mean, it's and down relative to what? And so it is a nice theoretical thing. Say, well, there's a neutral and normal position that you're in, kind of cruise control, and then there's the one that you're adjusting relative to that. Now, in terms of a practical point of view, I do, obviously, I do think it's useful. I think it's useful because it's a summary statistic. It's like the unemployment rate in a way. It's like other GDP or something. It summarizes a lot of information into one statistic, and the work we did on this, and there's a lot of other people who've done work on this is valuable, is just saying, okay, based on the data we're seeing, what we're seeing in inflation and interest rates and GDP growth, what seems to be kind of what that neutral rate or that neutral interest rate is, and you get different answers depending on how you do it. So I think it's a useful kind of thing as a summary statistic. It's not the only thing you look at. Obviously, it's it's part of the broad set of kind of indicators and things we look at. But again, I find it as a way to capture some of these longer run trends in the economy that are moving slowly over time, and we should just keep our mind on. And they're like productivity, they're demographics or factors like that are not about the today and tomorrow, but more about what's the underlying backdrop that monetary policy is operating in.
Well, it kind of leads into my next question. It's been very hard, as you're pointing out, to forecast what's going on with the economy. A lot of quirks in the data these days following the pandemic. But when you look ahead and we have the pandemic distortions behind us, what kind of economy are we going to have? Are we going to have a new normal, a new normal, the old normal? What do you see ahead?
Well, you're right. It's hard to know. I wrote a lot about the new normal after the financial crisis, so I do feel like we're getting to the new normal. I go back to these supply side factors. I mean, some people say, the Fed is focused on demand, but we think a lot about the supply side of the economy in our work. So I do think about labor force, demographics. I think about productivity, and I think about the kind of fundamental drivers of the economy, rather than the short-term cycle. So I think in many ways the new economy, I think, is going to be similar to the pre-pandemic economy. We've seen labor force participation, surprisingly in a good way, come back in many ways, back to where it was before. It's actually quite strong for that 25 to 54-year-old group. We've seen immigration and visa, people coming in to work on seasonal employment through visas, that come back. So we've seen a lot of things kind of get closer to where they were before. Productivity trends don't seem to have changed yet. Always hard to know if there is that, but the data don't seem to suggest that. My view of R-star hasn't fundamentally changed from what it was before. So I think there's a lot of macro at the 30,000-foot level, things that seem to be similar, but underneath that, a lot of changes in relative demand, like I said, for housing, maybe for cars, maybe for other things. A lot happening underneath the hood. I think the big question for me is, how do new technologies, change this equation. We talk a lot about, AI and things like that. So those are open questions. But I think that so far, a lot of these kind of factors, I think, fundamentally drive our economy over the long term. They look to be getting back to similar to the way they were before the pandemic.
Well, we could go back to where we were before the pandemic, or we could go back even farther. I talked to, at Jackson Hole, one of your colleagues, and we were talking about, well, what if John's wrong about R star and R star is actually higher? This person was pointing out that in the 1990s, we had a higher R star, we had higher interest rates, we had higher inflation, but we also had a lot higher growth.
Yeah. Well, absolutely. So, when Thomas Laubach and I first started working on this a little over 20 years ago, we were really actually interested in the high growth area. For those who remember, we had the dot-com boom, we had the internet, the productivity boom of the late 90s, early 2000s, which was real. I mean, that really drove real incomes, it drove GDP growth, it drove productivity. And according to the theory that we'd studied, like all of us had studied, it would suggest that if you're in a high growth economy, you're going to have higher neutral interest rates because demand for investment is high relative to savings. Everyone's trying to invest more for this high growth economy that pushes R star up. We actually found it did. Our highest estimates of R star, over the last 30, 40 years are in that period. And that's really what drove that research, is to understand, hey, we're this, tech boom, isn't this changing kind of the backdrop for monetary policy? And I think it did. And that was where we focused. After the global financial crisis, we saw the reverse happen for different reasons. So yes, the answer is, if we got another, and I hope we do, another period of very high productivity growth, strong, underlying growth, that would change this equation. Haven't seen it in the data yet, but clearly that would be something that we would be, that would move R star up. On the other factors like demographics and other kind of things, I don't think we've seen those changes yet. But again, this is something that it's an open question. We'll just keep watching the data.
Now, I can't let you go from this audience without asking about the dollar. I know what you're going to say. It's not the Fed's responsibility, but the dollar's impact on the economy is. So how do you take it into account? How do you account for what's happening when the dollar goes up, the dollar goes down?
Yeah, so if you think about any of kind of our analysis we do at the Fed, clearly we understand that we're not, yes, we don't make the policy for the U.S. dollar. We're not targeting the dollar. Absolutely not. We're focused on maximum employment and price stability. But in thinking about setting interest rates or the path of policy, that clearly affects financial conditions, affects yields, affects the fixed income markets, affects equity markets, it affects foreign exchange markets. These are the basic transmission mechanisms of monetary policy. So we think about how our actions affect financial conditions and feedback to the U.S. economy and abroad. We also think about how other changes in the global economy that affect the dollar and other things then feed back to our economy. So it's part of, if you will, our models that we use that are inherently global and understand those interactions. It's part of the dynamics of our system. So we understand that and do our best to take that into account. Again, focused on our maximum employment and price stability goals.
Jackson Hole, you have a lot in common with the other central bankers of the world. We saw the chairman walking along with the head of the ECB and the Bank of Japan, and everybody's focused on inflation. Three of you are looking to bring inflation down. The Japanese are looking to bring it up. But how much coordination and talk is there at a place like that, or even around the world during the year, in terms of, as you say, how your policies affect other people and how their policies affect you?
Yeah. So we go and have meetings of the governors of the central banks from around the world every 2 months and discuss what's happening in our economies, what we're seeing, how those are. We think of those as spillovers and spillbacks, how the effects of our economies and our actions are affecting the others. So I think it's not monetary policy coordination. We pretty much all of us have domestic goals, inflation, employment, financial stability, but we do share a lot of information on understanding what's going on in the global economy, where the risks are, understanding kind of how our policies are affecting other countries, how their policies are affecting us, and so it's not coordination so much, but it is a really good dialogue. And I think one of the big benefits of being transparent and open around our policy actions and being very clear, including the dot plot and all of our other communication, is it helps helps people around the world to have at least an understanding. What's the Fed thinking? How are they going about the policy? Similarly for other central banks. And hopefully that reduces some of the uncertainty or surprises or kind of unintended consequences. I mean, around the world. I mean, one thing that's been absolutely a positive is over the last few years, we've seen dramatic policy actions by the Fed, ECB, emerging market countries, even much stronger actions. And yet the global financial system has operated well. We haven't seen the kind of big shocks or taper tantrum kind of things. So, as we've all taken the strong and appropriate actions to deal with the events, we've also seen, I think, this all working kind of as intended without, creating unintended or accidental kind of negative effects across borders.
Paper got the most attention at Jackson Hole was Barry Eichengreen's warning that debt is unsustainable in the U.S. and other countries. And part two, which seemed to really upset the audience, was that he said nothing is going to get done about it because there's no political will. How much of a threat is debt, do you think, from an economic standpoint? How much does the Fed worry about it?
Well, as long as I've been in my profession, which is close to 30 years now, we've had unsustainable fiscal policy. When you think about these just projections, if nothing changes, what will happen to the debt to GDP ratio or something like that? Now, I do think it's really incumbent on the elected officials to address that kind of issue. And I think over our lifetimes, it has happened in different ways through either tax or spending policies. So from my point of view, it's really the responsibility of Congress and administration to make sure that they're getting us on a sustainable path in fiscal policy. From my perspective as a monetary policymaker, we're not constrained in any way by that. We're able to carry out our policy actions as we need to do to achieve our goals. But again, it is something that you think about when you realize that if something doesn't happen over next so many years, the fiscal situation in a way gets worse, not better. And we've seen that in the past. So we saw that with Social Security, Medicare, back in the 80s. We're seeing that again with some of those issues, and they do need to be addressed. But again, those are decisions by elected officials.
One last question. Revolves around comments from two of our guests on Bloomberg Television. One said when he was asked what he would like to hear from you, he said, the Fed only speaks in platitudes. And another was, the Fed doesn't know what it wants to do, so what can they tell us? So I would like to ask you, with this audience here, for one last thought on what you would tell them now that you're not giving as much explicit guidance as you used to.
Well, I think we are telling people really powerful things. I think one is, we're absolutely committed to achieving the 2% inflation on a sustained basis. So there's not a debate about, are we trying to get to 2% or 3% or 1%? We're getting to get to 2%, and we're going to take the actions to do that and do the very best we can given our dual mandate. So that's a pretty powerful message. When I started the Fed back in the early 90s, we didn't have an inflation target. We weren't able to say to people, what are we trying to do and how we're going to go about it. Today, we're able to say, this is what good looks like. This is what we're working towards. Here's our view of where the economy is going. You get to look forward to another economic projections in September. That's our collective view of growth, inflation, interest rates. That's a snapshot, if you will, of 19 people of how we're thinking about that. So I think we are providing an honest view of what we're trying to get to, how we think it's going to evolve, and what we're going to do. And importantly, as the situation changes and developments are different than we expect, we're going to adapt and change in a way to is appropriate. I think the past year and a half has proven that point. I mean, we've moved quickly, we moved appropriately, and we've adjusted as the facts have changed, and always with the same focus and unanimous focus on we need to achieve our price stability goal. Price stability is absolutely foundational to financial stability, macroeconomic stability, prosperity. So we need to get that. And now the questions that everyone's asking is, well, what exactly does it mean? What exactly is the peak funds rate? How long do you keep rates high? Well, that's going to depend on the data. But what we're doing and why we're doing it, I think that's crystal clear.
John Williams, thank you very much for joining us here today.
All right, here we go. Bloomberg News international economics and policy correspondent Michael McKee interviewing New York Fed President John Williams from the Bloomberg Market Forum. And boy, that was a wide-ranging discussion, but I think my takeaway is kind of the same. They're data dependent, and don't force us into anything. We're going to look at the data, and then we're going to do
That's what he
right.
said. Need more data before deciding on their September 20th move there, and then CPI coming up on the 13th next week.
Yep, absolutely. Fed go. That's got all your Fed stuff. All right, with everything else we need to know, we go to Charlie Pellet.
Here's what's going on. U.S. markets have been closed for 20 minutes. The Dow higher today, ending with a gain of 0.2%, but the S&P, NASDAQ 100 index, the Russell 2000 all finish lower. S&P, right to the numbers here, down 14 points, ending the day at 44.51, a drop today of about 0.2%. The Dow up 57, higher by 0.2%. NASDAQ down 121, a drop there of 0.9%. Stocks did come off session lows as blue chips gained traction amid concern over how a Chinese ban on Apple's iPhone could impact the big tech industry, and that industry, of course, has driven this year's market rally. Apple shares today closed lower by 2.9%. Among some other big tech names, NVIDIA was down 1.7%. Qualcomm today lower by 7.2%. 10-year yield 4.24%, with a 2-year that's yielding 4.94%. Gold up $2.80 the ounce to $19.19, up by about 0.1%. And West Texas Intermediate crude down 0.8%, 86.84 for a barrel of WTI. Brent crude, the global benchmark, back below $90 a barrel, 89.86. Brent down today by 0.8%. Federal Reserve Bank of New York President John Williams, you heard him live on Bloomberg Radio. He says U.S. monetary policy is in a good place, but officials will need to parse through data to decide how to proceed on interest rates. Williams was interviewed by our Michael McKee at the Bloomberg Market Forum.
The inflation is moving in the right direction. We're seeing the imbalances in the labor market, which were really quite pronounced last year. They've been closing. Job openings have been coming down. The quit rates coming down. The hiring rate in the markets coming down. So we're seeing movement in the right direction of bringing supply and demand back into balance, seeing inflation come back towards our 2% long-run goal, and we've done a lot.
And again, though, perhaps the key takeaway, the headline as it stands on the Bloomberg, Williams says policy is a good place, but must be data dependent. Again, recapping, turned out to be a mixed Thursday here with the S&P down 14, lower by 0.3%. NASDAQ down 0.9. Dow Jones Industrial Average up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Always impressive how quickly Charlie is able to get those
There's
done.
no other way you can do it. I haven't figured out how he does it, but there's some cheating involved.
There has to be,
Yes.
but he's the best here. Jess Mitten and Paul Sweeney, of course, here in the Bloomberg Interactive Broker Studio, in for Carol and Tim, who do have the day off. And I want to switch gears and talk about the IPO market, which you care about a lot too, Paul. And when it comes to Instacart preparing to set its IPO price range as early as Monday, I want to bring in Amy Orr. She's actually one of our star reporters here on our U.S. equities team. She's an equity capital markets reporter. Started the last few months, but I have to point out she's broken like 6-7 stories in the past week here when it comes to whether...
So it's been a good trade.
It has been.
Okay.
And so she could talk all things Instacart as well as ARM. But walk us through this latest development with Instacart and what you're expecting to see.
So ARM is on the roadshow right now, and so essentially it's going to price the next week, and then right afterwards they're passing the baton to Instacart and to Klaviyo. So two very different companies. One is e-commerce and the other is SaaS. So essentially these are all growth technology companies that are trying to get money before, but then they couldn't. But now the market is slightly open, so they are trying to actually tap the market.
So do we actually know when it could potentially list?
It would be a week after they launched the roadshow, so it would be 2 weeks after.
So potentially maybe September 19th.
Yes.
Interesting.
All right, so Instacart, this is a food delivery thing?
Yes.
I guess. Do you guys
online
food
grocery delivery?
I used to use Whole Foods, but now
So did I.
Yeah, but now because it's just me, so like I only buy eggs and certain like fruits or whatever, so it's just too much.
All
And
right.
also
I don't have
around.
cooking gas right now. It's a long story. It's a long story.
All right, I want to, as a former banker, I want to talk valuation here.
Sure.
Because, oh boy,
Yeah.
this is what you call a down round. What happened? Where is valuation in the good old days, pandemic, for an Instacart company, and today?
Well, Instacart is very special in a way that it really benefited during the pandemic, right? Because everyone, like even 80-year-olds would be ordering food from delivery service. So essentially it got such a boost during the pandemic that the valuation went up to 39 billion. And now just because like the market hasn't been as robust as it used to be, and then like we're actually just starting to see that a lot of people are not using as much, like me and Jess. So essentially the valuation have come down to 13 billion. That was the valuation from October. It doesn't mean that it's still at 13. It might have come up a little bit because the company actually reported a profit the first time switching from a net loss. So like the financials are looking better, and then also they're trying to diversify their business away from just delivery, but also to advertising on the app, and also like diversifying not just grocery but other things as well.
What I'm curious about is whether ARM as well as Instacart going public could potentially break this IPO slump.
It's really hard to say. At the end of the day, IPOs are very risky investments compared to others. Like secondaries is more about familiarity with the investors. So like there is still a bit of jitteriness, but then like the market is actually pretty stable. VIX has been really low, like 13, 14. Levels we've never actually seen like for 2-3 years now. So the condition is there, but it really depends on the company's stories.
All right, Amy, thank you so much. Great stuff. We're going to have you back because we think, A, you're good, and B, there's going to be more deal activity, I think. Amy Orr, Equity Capital Markets reporter, which is good to have one because I think we're going to have more busy time as opposed to the last 6 to 12 months. For Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. Let's talk companies now. Let's talk software companies. Brian Robbins, he's the Chief Financial Officer for GitLab. He joins us on Zoom from Sunset, South Carolina. Are you kidding me? Sunset. I mean, how good is that? I've been to Sunset, South Carolina. It is nice.
I need to go.
In the low country, it's a scam. I have to figure out what's behind this. Hey, Brian, thanks so much for joining us here. Talk to us about GitLab. Just give us kind of the 30-second elevator pitch, what you guys do, kind of where you fit into the tech space.
Absolutely. Thanks for having me on the show today. The best way to describe GitLab for a non-technical person is comparing it to the iPhone. And so about 10 years ago, I used to travel about every week, and I would pack a duffel bag of electronics. I would take my Walkman so I could go jogging in the park. I would take a camera so I could take pictures of all the cool sites. I'd have my Garmin GPS because the ride-sharing companies weren't around to basically get somewhere if MapQuest wasn't right. I'd have my BlackBerry, I'd have all the charges, and I'd have to take a duffel bag of basically all the electronics to go on a business trip. And then comes the iPhone, and all the applications got integrated into a single platform, and the user experience just went off the charts. And so GitLab is an iPhone for software developers. We allow software developers, operations, and security professionals to create software faster, better, cheaper, and more secure. It doesn't matter what industry you're in or what geography, everybody uses the same platform.
You just had earnings released in recent days, and the stock, if you look at this, Paul, ticker symbol GTLB, up almost 10% this month after the company did report second quarter results that did beat expectations and raised their full year forecast. What are you seeing when it comes to customer buying patterns, and what do you think that really tells us about the economy?
Yeah, great question. Every company has become a software company. Consumers are demanding data, understanding where their package is at. Like Amazon, they'll send you a text now if the driver is 8 stops away and where your package is at. So everybody's creating software. They're putting them in the cloud. They're doing it for revenue generation and also to save money. And so GitLab basically eliminates point solutions and allows people to do everything on one platform with a single application. And so even with the tougher economy, we're seeing a lot of companies come to GitLab to save money. If you use our ultimate product, which is our high-end product, it's $99 per month per user, and it has a 6-month payback. And over 3 years, it's over a 400% return on your investment.
That sounds pretty compelling for a lot of buyers, I would think. Talk to us about Google Cloud, how you guys partner with them.
Yeah, absolutely. We have a partnership with Google Cloud. We're currently using their large language models to train some of our AI products that we're working on. GitLab's core feature is to make the developers, operations, and security professionals faster and better at creating software. And one of the ways that we're doing that is adding AI to our product. And so we currently have 10 products under development. We have one that's generally available today called Suggested Reviewers, and we're working on one called Code Suggestions that will actually help populate code based on what you ask the software to do. And so we're using Google's large language models to actually train the software to do that. We have a different approach than other people where we're doing it with a privacy first. And so we want to protect the IP of customers that use it. And we don't want to allow that IP to be training other companies' software.
Whenever I hear AI, obviously we know, Paul, how much it is all the rage this year from so many different industries. But I'm curious as far as when it comes to developer demand, what that really means right now when it comes to some of those AI tools.
Yeah, AI is important. It's another tool to allow developers to become more efficient. But this is the first time in my career where the media has actually talked about something way before the technology really being generally available. And so in the software development process, we just released a DevOps report that basically talks about in the process of making software, only about 25% of it is actually done on coding. And so some of the AI tools will make coding more efficient and more quicker. But some of the other tools out in the market, this quickness and suggestion of code has actually created more vulnerabilities. And so our product's not currently generally available. It's in private beta. We hope to have it generally available later this year. And we're working on making sure that the code quality that's being recommended is of high quality and has very limited vulnerabilities.
Hey, Brian, just about 30 seconds. How do you guys view cybersecurity? How is that engendered into your software?
Yeah, absolutely. Security is top of mind for every company, right? And the security market continues to grow because you have the builders, the buyers, and the hackers. And the hackers are always getting better at trying to create different mousetraps to breach into the companies. And so one of the advantages of our platform is you actually have security integrated into the software development process. So the old way of actually creating software is the developers would actually code and develop the software. They'd then throw it over the wall to the ops and the security teams. And they would come back and say, hey, you have these security vulnerabilities. Please go rewrite these lines of codes. Our security function is actually built into the software. So as you're writing the code, the security is actually telling you, you have a vulnerability, you need to fix this. And we'll fix it in all your code where that vulnerability is at.
Fascinating stuff. Coders, that's what we should have done back in the day, coding. Brian Roberts, Chief Financial Officer at GitLab. He joins us on Zoom from Sunset, South Carolina. Right now, let's head down to Washington, D.C. World and National News with Nancy Lyons.
Thanks, Paul. Peter Navarro, a one-time advisor to Donald Trump, has been found guilty of contempt of Congress. He refused to provide documents and testimony before the January 6th committee. Navarro is the second Trump aide to face contempt of Congress charges after former White House advisor Steve Bannon. Bannon was convicted of 2 counts and was sentenced to 4 months behind bars, though he has been free pending appeal. A new poll shows a Republican presidential candidate beating President Biden in a hypothetical election, but it's likely not who you think. Bloomberg's Ryan Tig Beckwith says former South Carolina Governor Nikki Haley did well in a new CNN SSRS poll.
Among the Republican field, pretty much all of the contenders were essentially tied with Biden. Some were slightly ahead, some were slightly behind, some were tied, but they were all within the margin of error. Haley was the only one who was outside of the margin of error with a 6-point lead over Biden, and that was largely due to her strength with white voters with college degrees.
Bloomberg's Ryan Tig Beckwith reporting from Washington. President Biden's next request for aid to Ukraine could run headlong into a dispute over the border. We get more from Bloomberg's Nathan Hager.
House Speaker Kevin McCarthy is thinking of tying the president's $24 billion Ukraine aid request to immigration and asylum proposals the Democrats are firmly against. A source familiar with McCarthy's tentative plan tells Bloomberg the Ukraine funds would not be attached to a must-pass spending bill to keep the government from shutting down at the end of the month. That could make a stopgap easier to pass in the House, but tying Ukraine aid to the border wouldn't be a sure bet with House conservatives who oppose any new funds for Kiev. and new restrictions on asylum seekers would be dead on arrival in the Democratic-controlled Senate. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story and a headline right after the Bloomberg Professional Service. The Walt Disney Company has amended its federal lawsuit against the state of Florida and its governor, Ron DeSantis, to focus solely on its First Amendment claim that it was the target of political retaliation for speaking up against the state's Don't Say Gay bill. This according to CNBC, which cites a legal filing. Again, developing story. Those are the headlines right now, right off of the Bloomberg Professional Service. Turned out to be a mixed day on Wall Street today with the Dow higher, the S&P, NASDAQ, they both declined today. We had stocks coming off of session lows as blue chips gained traction amid concern over how a Chinese ban on Apple's iPhone could impact big tech, the industry that has driven this year's market rally. Apple shares today declined with a lot of other big tech names. Apple today down by 2.9%. So today the Dow Jones Industrial Average had a gain of 57 points, up 0.2%. The S&P down 14, down by 0.3%. NASDAQ, the composite index, lower today by 123, a drop there of 0.9%. The NASDAQ 100 index, full of those big tech stocks, down 0.7%. 10-year yield 4.28% with a 2-year 4.95%. Spot gold up $2.84 the ounce to $19.19, up by about 0.1%. West Texas Intermediate crude down 0.9%, 86.76 a barrel. Brent, the benchmark, the global benchmark at 89.80, back below $90 a barrel. Well, as for the outlook for the economy and markets, Jake Jolly is the head of investment analysis at BNY Mellon Investment Management, and he was a guest right here on Bloomberg Business Week.
You know, from our perspective, why we're maybe a little more cautious kind of through the end of the year is really around the fact that, you know, what's priced in. And our view is that, you know, consensus has moved pretty aggressively towards a soft landing narrative, right? So what does that mean? It means that data incoming needs to basically reinforce that soft landing. And if it misses, you know, you could definitely see a repricing lower.
And you can hear more of the conversation with Jake Jolly on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Again, recapping here, turned out to be a mixed Thursday. The Dow higher by 0.2%. S&P 500 index down 0.1. NASDAQ, though, hard hit. It was down by 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate it. Jess Met and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're sitting in for Carol Master and Tim Stenovic. We are streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. All right, let's switch to a big topic that's going to be even more in the news as we head towards the 2024 elections. It's always a big political issue, and that is gun violence. Cassandra Krafasi joins us. She's the Deputy Director of the Center for Gun Violence Solutions, located at the Johns Hopkins Bloomberg School of Public Health. She joins us on Zoom from Charm City, Baltimore, Maryland. The Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Cassandra, I guess the way I think about, you know, the gun violence issue in the United States is a tweet that I just took a screenshot of and I keep, and it reads something like this. In retrospect, Sandy Hook marked the end of the gun control debate in the U.S. Once America decided killing children was bearable, it was over. That's kind of how I feel about it. That's sad. Hopefully there are a lot of people who are still passionate about trying to change things out there. Can you tell us, where are we with the gun violence situation in this country right now? It just seems as bad as it's ever been.
Unfortunately, we have seen increases in gun violence, particularly since the start of the pandemic. There is some promise, though. Our data for 2022 indicates that overall gun death rates have declined slightly since 2021, but we're still substantially higher than we were in 2019. In 2022, we saw over 48,000 people die from gun-related deaths. That includes homicide and suicide, which is the leading cause of gun death in the U.S.
Cassandra, is there any reason to have any confidence in common sense gun legislation being passed?
Certainly, we have to be optimistic. At our center, there's a large group of us doing this really important work, which would be even harder if we weren't optimistic that we could see change. We have an amazing team of researchers and policy advocates who work at the state and federal level. In June of last year, following the Buffalo and Uvalde shootings, we did see the bipartisan Safer Communities Act pass at the federal level, provided funding for some important policies like extreme risk protection orders. But we also see a lot of progress at the state level. Just this year, we saw Michigan and Minnesota both pass extreme risk protection order laws. These temporarily separate someone from their firearms during a time of crisis. So there is opportunity. We have evidence-based solutions that experience broad public support. We just really need to be pushing for these policies at the state and federal level.
And Cassandra, to Paul's point, Sandy Hook, that tragedy happened over a decade ago. What has prevented more major policy from actually happening in Washington?
The challenge at the federal level is, I think there's a bit of complacency that people feel like gun owners are single issue voters on guns, and that people who don't vote to advance these policies are going to continue to get reelected. But at the state level, we have seen that's actually not the case. Recently in Virginia, there was a high-profile shooting. They called a special session and nothing happened. And their legislature turned. They have many more Democrats and are putting some of these policies in place. We're watching closely to see what will happen in Tennessee following this very recent failed special session. I think the biggest challenge has been we see broad support for policies, but people haven't always been activated to make change, contacting their legislators, showing up to testify. And hopefully, as people learn more about many of the evidence-based solutions that are available, people will be contacting their elected officials, and we will see change.
What are some of the changes that you would like to see be implemented, whether it's at the federal or state level, that you think are reasonable to work towards in terms of likelihood to get it done?
So we really advance 5 policy solutions. There are lots of important areas that need to be attended to, but we focus on these 5 areas that have, we think, the strongest evidence base. The first is requiring people to get a license before buying a gun. This is associated with fewer guns diverted for use in crime, lower rates of mass shootings and homicide, lower rates of suicide, and also lower rates of shootings by police. The second policy is about regulating how people carry guns in public spaces. What kinds of objective criteria can we set out to minimize the harms when people are having guns in public spaces? The third policy is we generally refer to as firearm removal. This includes domestic violence and extreme risk protection order laws, those that separate from someone who is at risk of harming themselves or others their firearms and keep them from buying more for the duration of the order. The fourth policy is about funding and effectively evaluating community-based violence prevention programs, identifying those who are at elevated risk of violence involvement and getting them supportive services. The final policy is about safe and secure gun storage. So having effective policies in place that hold people liable when they behave negligently with their firearms. But it's also about promoting responsible gun ownership. What are the kinds of behaviors we think come along with the rights of having a gun in the home? And that includes safely storing your guns to ensure that kids and teens can't gain access to them.
And to your point, we only have about 30 seconds left, but gun deaths among children are declining, but your data do show that guns are still the leading cause of death among children and teens. And is it due to what you were just talking about, responsible gun ownership?
Certainly, unsecured firearms are an important source of injury for children and teens, including kids getting access to guns and taking them into schools. Guns are the leading cause of death for kids and teens, and while they have been on the decline. It's up almost 90% over the last decade. So we really need to be promoting safe and secure gun storage.
All right, Cassandra, thank you very much for your time. Really appreciate getting your thoughts. Cassandra Kafasi, Deputy Director of the Center for Gun Violence Solutions at Johns Hopkins Bloomberg School of Public Health. And of course, the Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP, Bloomberg Philanthropies, and this little radio and TV operation here. So we appreciate getting time from Ms. Kafasi.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story and a headline from the Bloomberg Professional Service. Zoom Video Communications has been meeting with regulators from the U.S., the European Union, and other jurisdictions to outline concerns about allegedly anti-competitive behavior by Microsoft. China plans to expand a ban on the use of iPhones in sensitive departments to government-backed agencies and state companies, a sign of growing challenges for Apple. Today we saw Apple shares move lower by about 2.9%. And with more on that story, here's Bloomberg's Erica Herskowitz.
Charlie, the iPhone maker counts China as its biggest foreign market and global production base. If Beijing goes ahead, the unprecedented blockade might also affect several other U.S. technology companies that rely on sales and production in China. However, bullish analysts like Wedbush Securities' Daniel Ives think the effect of an iPhone ban is way overblown, as it would affect less than 500,000 iPhones of the roughly 45 million he expects to be sold in the country over the next 12 months. Adding to Apple's woes are rising U.S. Treasury yields as bonds sell off on worries the Federal Reserve will have to step up its fight against inflation as the U.S. economy remains resilient. Charlie?
And that's Bloomberg's Erica Herskowitz. Today we had shares of Apple down 2.9%. Dell slumped after Barclays downgraded the company. The stock down 2.1%. GameStop after earnings today did advance. Game shares up by about 0.8%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
Jess Mitten, Paul Sweeney here in the Bloomberg Interactive Broker Studio. In for Carol Masser and Tim Stenivek, of course. Now we are after the closing bell here, after obviously seeing the U.S. markets closing a bit lower there after what we had seen, obviously dragged down by Apple. So see how the week shapes up. But before we get into more, let's get a quick check on the latest world national news from Nancy Lyons in Washington, D.C.
Thanks, Jess. Former Trump White House advisor Peter Navarro has been convicted of contempt of Congress. A jury reached a guilty verdict in Navarro's case today after several hours of deliberation. Prosecutors had argued Navarro illegally refused to comply with subpoenas issued by the House committee investigating the attack on the U.S. Capitol. Navarro says he plans to appeal.
This is a landmark case that's bound for the Supreme Court. Why do I say that? This is the first time in the history of our republic that a senior White House advisor, an alter ego of the president, has ever been charged with the alleged crime. Because you lied. That's the first time that this has ever happened.
In fact, another Trump aide, Steve Bannon, was also convicted of 2 counts of contempt of Congress and was sentenced to 4 months in prison, but remains